Interesting.
For certain.
It is the first trading day of June, second day of June. Our first guest today says the current market looks more like the start of a new bull rather than a late cycle bull, and that could mean some good buying opportunities. Joining now is Tom Lee, Fundstrat Capital CIO and head of research and a CNBC contributor. He's very calm, even in the face of adversity, but this time the markets have come back to you in a big way. 'Cause at this point, I think they've exceeded your targets they were a couple of months away from where we are right now, and they're already there. So you're raising your targets overall?
Yes, I think, when at the April lows, we thought we could make a move back to 5,500.
Right,
and,
we're at 5,900 on the S&P.
That's right. But our full year target was 6,600, so I think that's still a reasonable expectation.
You never changed that.
We haven't changed it.
Never did. Even on
No.
April, week of April 2nd or 7th or 2nd, you didn't change it.
No, it felt very shaky because that would have been, a couple 1,000-point move needed. But now that I look at 2026, I think businesses are in better shape now than they were in February. So I think making 6,600 actually seems more achievable today than it did in February.
You think a bull market started April 7th, or a new bull market started
Yes.
April 7th, in everything, because the NASDAQ already, if you just use 20% to measure what is an actual bull market, people think we need a broader indicator, a broader reason to call something a bull. But at this point, I think the S&P is also in a bull market.
Yeah, I think that the waterfall decline into the April lows was such a reset of sentiment. People talked about Armageddon, and we saw some of the most rapid deleveraging of hedge funds ever, and a collapse in investor sentiment, and a huge change in positioning. So those are, I think, things that look like what happens in a bear market. And the ISM has never broken above 50 in a sustained way. Market tops usually need an ISM to stay above 50 for a period of time. So I think we're at the start of a bull market. And as I look at 2026, I think housing could actually be a big lever to pull next year.
What do you think of the recent inflation data? And is it real? Is it lasting? Is it going to turn around and head back up because of tariffs? Were you surprised at those numbers on the last couple of Friday and then a couple weeks before that?
Well, as you know, the inflation for the last month actually has defied expectations because a lot of people said these shortages would cause a spike, and instead core inflation actually has been trending lower. But to me, inflation was really a story about housing and auto insurance. Those were powering inflation for the last 2 years. I mean, combined, that's 75% of the rise in inflation. Housing is actually now subtracting from inflation month over month. And I think in some ways, on a real-time basis, that tells me I don't think core inflation is actually going to be turning up, even if goods prices go up.
You don't?
I kind of agree with Waller's comments.
You do agree with Waller's comments?
Yeah.
So you're anticipating cuts, several
Well-
cuts this year?
Well, I think that if core inflation behaves, then we are in a really tight real rate environment, right? 4.5% monetary policy and 2.5% or 2% core inflation. I mean, there's a need to actually reduce interest rates.
Do you, Tom, at this point think that interest rates, because it doesn't matter whether we reduce or not, that would the long end go up if they reduce the short end because of 37 trillion or this bill that's the big beautiful bill? Are there worrisome things on the horizon other than inflation, current inflation?
Well, yeah, the U.S. is on an unsustainable sort of path for deficits, but Japan's actually had higher rates and their interest rates have been behaving for a long time. I mean, not recently. So I think the long end is essentially unpredictable. When investors worry about it rising too dramatically, then I think that's when the bond market can have some influence on both the Fed and the Treasury. But I think at these levels, it's not that alarming.
What's Bitcoin? What is it moving with? Just risk assets at this point? It got back to an all-time high, which you were forecasting as well. But
Yeah.
now I think, what are we, 104 this morning, so it's pulled back.
Yeah, I think it's consolidating. It makes sense. You know, Bitcoin is responding to global liquidity, which is moving up, and I think anticipating a dovish Fed next year. So that's a tailwind for Bitcoin. But you know, Bitwise has a great stat. You know, 95% of all Bitcoin's been mined, but 95% of the world doesn't own Bitcoin. So I just think that there's still a huge demand versus supply imbalance, meaning there's a lot more potential buyers of Bitcoin over the next 10 years. And so I think there's a lot of upside into year end.
Into your like 150 target.
Yeah, 150, maybe 200, even 250 this year.
What? 150 to 200 to even 250. And what's you don't have a terminal price on that, do you?
Well, it's I think at a minimum it should have the same network value as gold. And if you look at above ground gold, it's probably 23 trillion. So that would be, you know, 1.2 million for Bitcoin. But I think Bitcoin is more valuable than gold. So, you know, Bitcoin could be 2 million, you know, 3 million long term. I mean, even higher.
Okay, thank you. And we're talking years, obviously, but 95% mined. I don't think the last one is mined till what, 2150 or something. Like,
Yeah.
It's getting harder and harder.
Yeah, I mean, depending on what decimal you want to use, it's probably like, you know, 2040 or something. But
Yeah.
but if you're having something forever, it'll always.
So what's your terminal value?
That's what we just done.
Yeah, I mean,
the
One and a
final.
half. He said 2.5 million.
2.5 million at the end.
Yeah.
Or maybe,
Okay,
I mean, maybe
appreciate that.
higher.
Or maybe
I'm sorry,
even higher.
I didn't appreciate
Yeah.
that point.
Yeah, I mean, it could, you know.
But I guess
One and a half
sorry,
to
maybe the way I meant that is,
2.5.
does that happen at the end after it's all
When it's all mined.
mined,
Yeah, and there'll be network fees generated.
or does that happen before it's mined?
It's like as if Berkshire did a buyback and there was only one share left. What would Berkshire's share price be? You know, it'd probably be the market value of Berkshire.
And as you said, if I go halfway to the wall, and then halfway to the wall, and then halfway to the wall, I'll never get to the wall.
Yeah, that's right. You can cut something in half forever.
Good point. Well, me looking into a mirror now.
But you'll be
With the
slicing
mirror
like
behind
little
it.
microscopic hairs.
Yeah, exactly. You're going to need some scientific notation. All right, Tom Lee, thank you.
Thank you.
Thank you. Coming up, some promising cancer drug data out of an important industry conference in Chicago. Experts say the results could be a game changer. Stay tuned. Squawk Box returns after this.
BC.
Well, it is ASCO week. We've got some promising breast cancer drug results from AstraZeneca. Experts say treating patients with an experimental pill from the company at the first sign of resistance to standard therapies cut the risk of progression or death by half. The results were presented at ASCO, the American Society of Clinical Oncology, at that meeting in Chicago. And we're going to talk more about ASCO. Don't miss an interview with the CEO of AstraZeneca coming up next hour.
Okay, coming up, the author of the book No More Tears is going to join us on the trials and controversies of Johnson & Johnson over the years. You do not want to miss that conversation. Stay tuned. You're watching Squawk, and this is CNBC.
It done.
All right, good morning, everybody. Welcome back to Squawk Box. We're live from the NASDAQ market site in Times Square. If you check out the futures this morning, we're under a little bit of pressure. Dow futures are down by close to 200 points. NASDAQ futures down by about 150. S&P futures are off by about 35, but it does come after a very strong month of May for all the major averages. Treasury markets this morning, looking at yields that are slightly higher, but still below the highs that we had seen recently. The 30 years at 497, 10 years at 443, and the 2-year is at 391.
5 things to know ahead of today's opening bell. Lawmakers return to work this week. The Senate set to take up the reconciliation bill. Republican Senator Ron Johnson says he's going to insist on deeper spending cuts to address the debt burden. Meantime, the Trump administration's push to cut government costs has expanded from consulting firms now to technology companies. Wall Street Journal reporting that officials sent a letter to 10 tech firms last week. Those include Dell and IT firm CDW. They're asking executives to justify their work and to find areas to cut. Meantime, Ukraine says it destroyed dozens of Russian warplanes in a clandestine drone attack on Russia's long-range bomber fleet. The attack coming as delegations from Russia and Ukraine are set to meet today in Istanbul for negotiations for a ceasefire. And Newark Airport is going to be reopening a closed runway today. It happens today. It has contributed to weeks of delays and chaos. The FAA evaluated the repairs to the runway and deemed it safe. The work was completed 13 days ahead of schedule, a rarity. And at the weekend box office, Disney's Lilo and Stitch bringing in $63 million, becoming the second highest grossing movie of the year behind the Minecraft movie. It has now sold $280 million in tickets in the U.S. and Canada.
Coming up, a nine-figure deal in the restaurant industry. A private equity firm is buying Dave's Hot Chicken. We're going to speak with that company's CEO after a break. And a reminder, get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We're coming right back.
All right, welcome back, everybody. Private equity firm Rourke acquiring fast casual chain Dave's Hot Chicken in a $1 billion deal. At least that's what's been reported. The company started in a parking lot about 8 years ago. It's had a remarkable rise, and joining us right now to talk about it is Bill Phelps. He is the CEO of Dave's Hot Chicken, and let's talk a little bit about how this all has come through. This is crazy. This started in a parking lot in 2017.
Yeah.
Give us the backstory.
Oh, it's a crazy story. There were three kids that wanted to support their parents, and so they only had $900 in savings, so they took it and they took portable fryers and heat lamps and igloo coolers, did a pop-up in a parking lot in East Hollywood. They got a write-up from a writer of Eater LA, and he said late night chicken stand might blow your mind. And they showed up to work and they had a line 3 blocks long. And my son went down and saw them in the parking lot. He said, "Go look at this, Dad."
And now, how many stores are there?
There's 310 restaurants open, and we've sold the rights to about 1,100 restaurants.
As a franchise
Yes,
operation?
right.
Right. What's special about this? Because hot chicken is kind of all the rage these days.
Totally the rage. We timed it really well. The product is insane, but then we have a team that built these other businesses, Wetzel's Pretzels and Blaze Pizza, and we have built a great team. And then the franchisees are just phenomenal, and the franchisees have done an incredible job building restaurants really, really fast.
Is that number that was reported correct, the $1 billion deal?
It's pretty close.
It is pretty close. I mean, that to me is the phenomenal rise of this. You got involved in, what year was it?
I got involved in 19.
19. So 2 years after they popped up as just guys standing out there
Yes.
with their folding tables in a parking lot.
Right.
And from 2019 to now, $1 billion.
It's insane. It's insane what we did, but it's about them. The vision of these guys was just great. Armin Oganesian was the founder, a high school dropout, but a marketing genius, and he created all of this in his head, which is just kind of insane.
So just tell us, what do you think the marketing piece of it was that made it work? And also, behind the scenes, there was a scaling piece to this, the
Right.
actual scaling of a franchise this big.
Right. Well, he was the marketing genius that saw this, and he connected. He was a stand-up comedian, and he connected with young people, and he made it really fun and really exciting. And he put all this together in his mind, and he foresaw all of this stuff. And then we took people that had done this before, and we knew how to scale businesses really fast, and we had great franchisees, and so we all worked together, and it became.
Had most of the franchisees done this before?
All of the
Did they all own
franchisees
other
have been in
restaurants?
other restaurants. You had to be a franchisee that owned other restaurant stores before.
Like a Wetzel's Pretzel or
Wetzel's
Blaze
Pretzel or
outside.
Blaze Pizza or a Dunkin' or whatever.
So, I mean, I think that's kind of the genius of it. Can I ask what you paid for at any point in time? Like when you came along with this, to turn it into $1 billion, basically without a whole lot of capital going
Well,
into it.
we
That's
only
the
we only
beauty of
put in like
franchising.
$2 million.
That's the beauty of
Right.
franchising in
Yes,
this, right?
yes, yeah. And movie producer John Davis brought me along. I worked with him in other businesses, and we brought in Drake and we brought in Samuel L. Jackson as investors, and it just made it really fun.
Well, how did you target them? Or were they people who had showed up on the scene for some of these things organically,
Well,
or did you?
through the connections we had with John Davis and other people, that it was we had people interested in our brand because we'd done so well on Wetzel's and Blaze. They said, "Let's do this again."
How many Wetzels are there right now? How many Blaze pizzas are there? Because I see them everywhere.
Yeah, the Wetzel's, there's over 400, and Wetzel's we struggled. Rick Wetzel and I struggled, and then Wetzel's has skyrocketed in the past few years. It's just an iconic brand, and Blaze Pizza has about 300 restaurants.
And these are, I mean, the restaurants for Dave's Hot Chicken is mostly in California at this point.
No, we're across the country. We're across the
I haven't
country.
seen-
We're in Canada, we're in the Middle East, in Dubai, and we're in London. And we have a killer store in London. It's kind of crazy.
Is that what's the best performing store in the world?
I think the store in London is the best performing store. And the great story there was the guy that wanted to be the franchisee told his son about it. And his son goes, "I love Dave's Hot Chicken." He goes, "There's not one within 6,000 miles. How do you love it?" He goes, "It's online. It's Instagram and TikTok, and that's what the young kids are looking at."
And is that the secret to all of these days?
Yeah,
like social media?
Armin, the founder, was a marketing genius, and he's the one that created the interest through Instagram and TikTok, and that's what built the brand.
Okay, so if that's the case, though, creates a question
Yeah.
about whether these things are fads,
Yeah.
right? And what do you have to do to stay out of being a fashion and be into sort of the permanence of the culture?
Well, you have to deliver an amazing product, which we do every day, and our Yelp and Google scores from the guests are like off the charts, and that's the base thing. You have to have a great product, and then you have to deliver great value to the consumer, and that's what we're doing. And the business just keeps getting better. it doesn't look like a fad at all. It looks
But in
like
terms of
fun.
keeping people excited on social media, that's
Oh,
why I asked, because people are always looking for on social, everyone's
right.
looking for the next thing.
Right, and we do that. So we
Right.
do Dave's Not Chicken, which is a cauliflower chicken, which is a cauliflower product, and we do mini sliders and things like
You're
that.
expanding the menu.
Yes, and make it really fun.
So you're constantly changing the menu.
A little bit. We're adding little items on an in and out basis, and it makes it really interesting.
Let me ask you, are you a good gauge of consumer sentiment, or because the brands are viral and hot, is it a reflection of what's actually
I don't
happening?
know that we're a gauge. I don't know if we're a gauge. This is a
Because it's
unicorn.
neat.
This is a unicorn.
Yeah.
This is a crazy.
It may
one.
not show you what's really happening on the broader
Right.
consumer
Yeah.
pictures with things.
It's pretty amazing. But we have an incredible group of employees. We made 19 people millionaires in the last 2 weeks. So that's really fun.
Impressive. Bill, thank you. We love your enthusiasm. We
Thank
love
you.
how you're able to pull these brands and pull off such incredible stories. We
Thank
appreciate
you.
you sharing
Thank you
them
all.
with us.
Nice to see you guys again.
You
Nice
too.
to see you.
Okay, thank you.
Congratulations.
Thank you.
Big time. Coming up, the latest on the President Trump's moves to increase tariffs on steel imports and the response from around the world. Squawk Box returns after this.
Never gets boring.
Stanley Fischer has died from complications of Alzheimer's disease. He served as the head of Israel's central bank from 2005 to 2013 and as vice chair of the U.S. Federal Reserve Board from 2014 to 2017. Before that, he was a top official at the IMF and a professor at MIT who advised or mentored Ben Bernanke. former ECB chief Mario Draghi, and the current governor of the Bank of Japan. Fisher was 81 years old.
Now.
Drug maker Bristol Myers Squibb just announcing a partnership with Germany's BioNTech. Bristol will co-develop and co-commercialize the company's experimental cancer drug targeting multiple solid tumor types. The drug belongs to a class of next-generation immunotherapies, and Bristol's paying $1.5 billion up front. The deal could eventually exceed $11 billion in value for BioNTech.
Next guest wrote a book critiquing pharma giant Johnson & Johnson and the American health system. No More Tears, The Dark Secrets of Johnson & Johnson. Joining us right now on the company's history and its challenges, author Gardner Harris, a former reporter for the New York Times. We should note, before we even get into this, because we just had the CEO on, Gardner, that in a statement, spokesperson says that they stand behind the safety of their products and are focused on what they say they do best, delivering medical innovation for patients around the world. A good disclaimer before we get into things. You wrote a very critical, almost blistering book about Johnson & Johnson. How did this start, and what do you think was the biggest takeaway?
Andrew, it's good to see you. You and I worked together for years and years.
Many years ago.
Yeah. It started actually at an airport, and I talk about that story in the book, meeting a Johnson & Johnson sales rep who told me a terrifying story about the company's products' effects on her nephew. As you know, I covered the drug industry for the Wall Street Journal and the New York Times. And what struck me about Johnson & Johnson was, on the one hand, it was by far and away the most admired company in the industry. You know, Johnson & Johnson is part of the Dow Jones Industrial Average. It is one of only 2 companies in the United States that has a AAA credit rating. It routinely tops the surveys of the most admired companies in the world. But in fact, it has authored the largest frauds in American history. You know, when we think about corporate fraud, we think about Enron, Tyco, WorldCom. Those companies do not even hold a candle to Johnson & Johnson in the myriad products that it sold, that it knew not only didn't help people, but in many cases killed them. And in some cases, targeted things like babies. So I felt it was important to bring all these stories together in one place to show just how dark this history is. And I think for the larger corporate world, one of the lessons is be careful about mission statements. Johnson & Johnson really is the first major company with a mission statement. They call it the Credo. And I think it helped to sort of obscure within the company just how bad the behavior had become.
Cardinal, let me just ask you this, though. You just compared this company to WorldCom, you compared it to Tyco, a number of other businesses. In virtually every case that you just mentioned, there were executives that went to jail.
Yes.
That were found to be not just liable, but guilty, criminally so, for misdeeds. That's not the case here. And so I want to be careful, or at least I want to understand your thinking in terms of describing it that way.
Well, first of all, Johnson & Johnson did plead guilty to criminal charges in some of these cases. Prosecutors did not prosecute individual executives. I actually have the grand jury files in many of those cases. As you know, in our business, it's extremely rare to get grand jury files. I was a White House correspondent for the New York Times. We would get national security documents, but as far as I know, the New York Times and CNBC haven't gotten a single grand jury file in 40 years. You know, I have hundreds of them. And it shows that prosecutors discussed prosecuting executives, but just decided it would be too hard. The remarkable thing about Johnson & Johnson's story is how really they got away with it for so many years across so many products. I estimate that the company is responsible for roughly 2 million deaths. You know, even on opioids, for instance, the story that we've all been told is that it was Purdue Pharma and the Sacklers that were responsible for the opioid crisis. That's simply not true. Around 20% of the bodies that showed up in morgues during the prescription opioid crisis had a Purdue Pharma product in their system. 60% had a J&J product in their system. You just had a deal about Bristol Myers and BioNTech on a cancer drug. Johnson & Johnson sold the most popular cancer drug in the United States in the 1990s and 2000s.
I want to either talk in specific. I'm a little worried that we're talking in a very broad generalities. I want to either talk in specifics if we could, but more importantly, I want to ask you a different question. And it seems to me the great complication of the universe of medicine, which is that there are oftentimes, unfortunately, drugs that do damage to people, but oftentimes, hopefully, do a lot more good in terms of saving people. And so there's this very unique balancing act where you don't want to hurt anybody, but at the same time you want to help the most people you can. And my question, it maybe goes to a very sort of philosophical one, which is, do you believe that ultimately the individuals either who are running J&J today or running J&J in the past are good people, meaning that they understood and had good intention, but also recognized that there was this balance and that they made a trade-off, or something else?
I think it was something else. And I think that is the story, for instance, that everyone accepts about the Sacklers and Purdue Pharma. It's a story that people have a hard time accepting about J&J because it has this patina of credibility. I mean, they knowingly sold Johnson's baby powder, even though they knew that it was contaminated with asbestos for decades. They sold a cancer drug that they knew caused cancer tumors to grow. It was the most popular cancer drug in the United States. I estimate that it cost roughly 500,000 people their lives. You're right, Andrew, that medicine is one of those things where you are constantly balancing risks and benefits. In too many of these cases, Johnson & Johnson knew that there was not a single benefit to the drug, to the patient, but that there was significant risks. There was a heartburn drug called Propulsid. They tested it 20 separate clinical trials in babies because they wanted to sell it for babies. It never showed a benefit. They nonetheless underwrote a quiet marketing campaign in babies, and it caused this heart arrhythmia in babies. They knew about this and yet continued to sell it, and dead babies continued to pile up. So again and again and again, this company knowingly sold products that it knew not only didn't benefit patients, but actually hurt them and in many cases killed them. That's how you get to 2 million deaths.
Gordon, I know that talc itself, it's still, I mean, it has a similar structure to carcinogens, but I don't know if it's actually classified as a carcinogen. Now, talc contaminated with asbestos is absolutely a carcinogen. So that was, how much contamination? I stopped using it long ago and went to corn powder, whatever the heck it is, and I don't use anything anymore. I've given up. It does make things run. You know, it's just smooth and nice, feels good.
Sure.
And talc feels even better. But so there were. Why is it when you're actually? What do you do? Mind? Where do you get the talc, and why was asbestos? And how much contamination was there? That's a stated. That actually did happen with all of the J&J baby powder products. Because I was worried about just the talc itself and its structure.
In a meeting that I thought deserved a lot more attention, you know, the FDA commissioner just last week held an advisory committee hearing where he declared openly and forcefully that talc is a carcinogen.
Okay.
And that talc is a carcinogen largely because you cannot get rid of the asbestos. So talc, as you said, talc and asbestos are chemically identical. So it's just a matter of pressure and time as to whether those constituents create talc or create asbestos. So there is not an asbestos mine in the world that doesn't have a little bit of a talc in it. And there's not a talc mine in the world that doesn't have a little bit of asbestos in it. You cannot get rid of it entirely. And, you know, there are hundreds and hundreds of documents that have finally come to light recently showing that Johnson & Johnson knew about this from the 1950s onward. Now, it was small amounts. And I think certainly during the 50s and 60s, when there was a lot of asbestos in American society, that kind of said, you know, this is not that big of a deal. But the reason really started to show that even microscopic amounts of asbestos could cause cancer.
Yeah, chemically similar, not identical. One makes fibers, the other makes fibrous crystals, the other makes plate-like sheet, but very similar. And they occur naturally because they're silicate minerals, and you can't really mine the talc without having some contamination, apparently, but not identical chemically. Although they have similar.
I'm sorry, they have the identical like minerals in them. I mean,
but the structure is different. Yeah, right.
Yeah, and but again, this is what the new FDA commissioner said just last week, and the deputy commissioner, that they said unequivocally that talc is carcinogenic, and they want it out not only of powders but of it's sometimes in drugs as a excipient, makes things go down, as you know, a little bit easier. And so the FDA is now on a campaign to get rid of it from American society. And the question is, as you just said, why not use cornstarch from the Pfizer and Colgate-Palmolive, all these other companies that once used talc, transitioned in the 70s and 80s, and Johnson & Johnson just sort of stubbornly kept with it. And that behavior is true across a huge range of products.
They still sell talc, not just J&J, don't they? Gardner, I don't want to say names, but in men's locker rooms, I still see different brands, and I think it's talc. It's not.
I don't think it's sold in the United States as a powder
No?
anymore. You put on your body, and the liability for it. As you know, there are now 90,000 lawsuits against Johnson & Johnson over Johnson's baby powder. And that meeting last week with the FDA commissioner, I think, will make it very difficult for the company and lawsuits going forward.
Gardner, I want to thank you for joining us this morning. It's fascinating, and it's a longer and bigger conversation. Thank you.
All right, take care.
Meantime, it is just past 7 a.m. right now on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernan and Becky Quick. Among today's top stories, China accusing Washington of breaking terms of the trade deal that were reached just last month in Geneva, Switzerland. President Trump accusing Beijing of violating that agreement late last week. Futures right now, they are lower. You can take a look at where things stand. Dow off about 187 points. The NASDAQ off about 130. The S&P 500 off about 30 points. Meantime, Fed Governor Christopher Waller says that interest rate cuts remain a possibility later this year. Waller said that tariff-related inflation pressures are likely to be temporary. An attack in Boulder, Colorado, being investigated now as an act of terrorism. Officials say a man shouted "Free Palestine" and used a makeshift flamethrower to attack a group of peaceful protesters marching to bring awareness of Israeli hostages held by Hamas. 6 people were injured, at least one in critical condition.
President Trump doubling tariffs now on steel coming into the United States. Eamon Javers joins us now with more. Hey, Eamon.
Hey, Joe, good morning. Speaking to steelworkers at U.S. Steel's Irvin Works in West Mifflin, Pennsylvania on Friday, President Trump said he's going to raise steel tariffs to 50%, even as he announced his approval for a deal for Nippon Steel to merge with U.S. Steel. Now, it's a transaction that he once opposed, but now calls a blockbuster agreement that will ensure this storied American company stays an American company. But he said Friday it was Nippon Steel that eventually persuaded him that the deal made sense.
They kept asking me over, and I kept rejecting it. No way, no way, no way. And after about 4 times, I said, you know, these people really want to do a great thing. They really want it. And they're putting up, you know, billions of dollars, and they're going to do this plant and other plants, and it's great, and you're going to have control.
Now, the president avoided calling the transaction an acquisition or a merger with U.S. Steel, instead referring to it as a partnership and an investment. But it was his announcement of increased steel tariffs that provoked a global response over the weekend. An EU spokesperson said, "We strongly regret the announced increase of U.S. tariffs on steel imports from 25 to 50%. This decision adds further uncertainty to the global economy and increases costs for consumers and businesses on both sides of the Atlantic." The president said the new steel tariffs will go into effect on June 4th, and the European Union said that its own enhanced countermeasures could go into effect in response by July 14th or earlier, as they put it, if circumstances require. Guys, back over to you.
All right, Eamon, what's a half-life for a lot of tariffs? Do you get any estimate on this one? How long we stay at this level? We
It's
need
a
to
good
know.
question, right? I mean, you know,
Yeah.
I think the question is, does the taco trade apply here, right? Or is this itself a response to the president discovering the existence of the taco trade? And you know, I'm not kidding, right? I mean, the president learned about this last week.
Yeah.
This, you know, taco is, Trump always chickens out. It's a wry expression, I guess you could call it, on Wall Street. But when the president heard that, you just knew that some sort of stiffening of the tariff regime was coming in response to that. The president doesn't like being accused that way of chickening out, and so the question
chickening out,
does,
if you do see movement on the other,
taco, or will taco apply to this?
Right, but you know, obviously, cynics and people that for whatever reason don't like tariffs, don't like Trump, are going, even if there's movement on the other side and things are moving in the right direction, and it's the same people that hated the tariffs, and then they get de-escalated, and then then they whine about that they're being de-escalated. But that's fine. Thank you, Eamon.
I mean, I guess it is, right? I mean, the
Yeah.
question is,
Oh, it is.
if you're escalating and de-escalating and not getting anything for it, there's a huge
Well, we don't know.
disruption to the
We'll
global
know.
economy there, and a
We'll
huge
know soon
disruption to the
enough.
stock
Yeah.
market.
I don't know. I don't know what
The
happened.
question
to
is
the
whether
trade
you get
deficit.
anything for it or not.
What happened to the trade deficit on Friday?
A good question. I don't know.
Well, maybe we are getting something for it. Thank you.
Right.
Okay.
When we come back, a new month for the markets after a very strong performance in May. Will that momentum continue into the summer? We've got more on that next. And coming up in the next half hour, an exclusive interview with the CEO of AstraZeneca after the pharma giant unveiled a new drug that slows the progression of breast cancer. Squawk Box will be right back.
Duma.
Welcome back to Squawk Box. A new month and a new set of data points for the markets to absorb this week, including Friday's employment report. Joining us with more on the market, Stephanie Guild, Chief Investment Officer at Robinhood Financial, who you can call me Godot. I'm waiting. Are we ever going to see a deleterious effect on growth from all the uncertainty and all the tariffs. And is it coming this Friday? Is it finally going to be there?
No, I don't think the jobs report is going to be the thing that shows.
Will it ever come then?
Data. I think it depends on how long it takes to understand where the tariffs are. And I think investors need to, just like when you're driving a car and you need to turn down the radio to see better, I think we all need to turn down the noise a little bit, and
I do that.
and really just focus on the two possible scenarios. One is that we have higher tariffs than we have today, and you need to have dry powder, and for the volatility, you need to have some low volatility stocks in your portfolio. And then I think the other one is that we do have some tariffs, that's for sure. I don't think those are ever going away. Bissent made that clear yesterday in Face the Nation. But I think there's a possibility that they end up being kind of lower and tolerable.
I thought companies and consumers were already responding by being, but from the uncertainty and being paralyzed. Have we seen anything to indicate that? Well, give me a number that shows that.
No, I mean, we haven't seen. Obviously Q1 GDP was a little lower, right? And
that had some weird stuff in it, right?
Well, even with the weird stuff in it, right? Like it was still a little bit negative. And after that point, you had the pause put in place, and things have come back really strongly, and all those ships that weren't coming started coming.
Wealth effect of the market.
I mean, you don't see a recession yet. Like it just doesn't show it in the numbers yet.
Did you look closely at any of the deficit data that came out on Friday, and why was it cut in half from the prior month? When I thought everybody was going to be stocking up on imported goods prior to the tariffs kicking in.
I mean, I think they did.
Then why was it half of the people? Why was it only 80 billion?
Well, I think because they stocked up, and now things are starting to move now. I thought you were talking about the deficit in the government for a second.
No, that's a whole other enchilada. Obviously, no, I just couldn't understand why in a month where you would have thought that suppliers were going to front end load things and get as much as they could.
Like I think they started doing that in March. And I think they're good until
that still would explain why it goes down in half. I don't. So are you? You don't have an S&P target, do you?
I do.
For the end of the year.
I've had one for the same one. I haven't been like other strategists.
The same one.
6,200.
6,200. So even when on the week of April 2nd, you didn't change it from 6,200.
I was 6,500 at the start of the year on the low end of all the analysts, and then I moved it down to 6,200, and I've kind of kept it there because I just think you don't know what was going to happen. And oftentimes, President Trump does come out a little stronger than where things settle. And so you really shouldn't be, I think, moving things around. Like I said, you want to turn down the noise and really focus on what is actually happening.
You're not a fixed income analyst necessarily, but it certainly matters, and it informs the other markets.
Yeah, of course.
Rates going higher, vigilantes coming around.
Yes.
Is it going to be? They are.
I think we need bond vigilantes around. I mean, as a percentage of GDP, our interest payments are now 3%, and that was the last time we had bond vigilantes out.
Yeah, and our deficit to GDP is stratospheric. It can't.
Not as high as Japan, but yes, it's
70%,
very high.
Isn't it?
Debt to GDP
deficit.
Or deficit to GDP?
Yeah.
Well, I mean, it's $1.8 trillion today, right? And if you think about how much we spend, like the thing I think we're not dealing with that we need to deal with, 2/3 of what we spend is on Social Security, Medicare, and Medicaid, and that's the part I don't see actually being dealt with. And that is what
You don't see Medicaid. This is not enough with Medicaid. I don't think it's.
I mean, there's not much happening in terms of there's
really
additional requirements, but I really feel like we need to reimagine what happens with Social Security. That's the biggest piece of it.
Yeah, that one, but Medicaid too. I mean, it's become, it's the way that the system works now. It's not what it was intended to do.
No, I mean, it was set up like it.
For disabled,
you don't get to
pregnant,
control.
yeah.
We don't even get to control how much the government spends on it. It's all just based on CPI, which is not really.
And all the states get to, they get to game it and get reimbursed in certain ways. All right, these are. A lot of you got to be
the biggest financial issue.
So I'm going to be, if I come back in another life, I'm going to be a technical analyst. I'm not going to think about anything but charts and sentiment and flags and Fibonacci and things. I'm not going to think about the government or President Trump or anything. You have to think about all those, don't you? Still.
Yeah, I mean, look, I'm running money now. We have a managed portfolio. Bitcoin. I mean, look, Bitcoin is starting to come into the fold. Every single day there's a new regulation proposed to make it more sustainable and make it something that people can actually invest in across the world. And I do think that there is a future for Bitcoin.
Okay. Certainly is. There's certainly a present and a past. All right, thank you.
Thank you.
All right.
All right, when we come back, premium cable and streaming company Starz now flying solo after being separated from Lionsgate. The Starz CEO, Jeff Hirsch, will tell us about the challenges of being a standalone media firm and adding subscribers. We'll talk a little bit about the IPO, too. As we head to a break right now, though, check out some of the streaming players and how their stocks are faring today. Squawk Box, we'll be right back.
And restrictions apply.
Welcome back, everybody. After being spun off from Lionsgate, Starz is embracing a leaner strategy as a newly independent, publicly traded company with a market cap of less than $400 million. The network plans to cut content costs, own more of its own shows, and pursue bundling deals with traditional players, all while focusing on its digital subscription base. Joining us right now to talk more about it is Jeff Hirsch. He is the president of Starz. He's also the CEO. And Jeffrey, thank you for coming in today.
Thanks for having me. Good morning.
So
Good to see everybody.
Starz actually done pretty well since you guys have been spun off independent. And by the way, this was a long time coming. What was it, 3 years in the making?
Yeah, it was about a 3.5 year journey to the separation, but I think the downside of having a long journey was it was a long journey. The plus side was we got to really plan for the separation. And so as you saw, last week we announced 4 writers' rooms of Starz owned on Beat, which is a really important part of our strategy, which is getting ownership economics back into the business so that we can actually get some cost control back into the business as well as create new revenue streams.
You've got a lot of things you're trying to do at once. I mean, it's pretty ambitious with things. I think part of it is trying to get the debt down too, right?
Yes.
You want to get down to 2 times?
Yeah, I mean, I think, as a small cap company, we looked at a lot of small cap companies that trade on the NASDAQ and companies that are small but have over 3 times debt. Don't trade very well, so the goal is to get down to 2.5 times very quickly.
There are you are in an industry that there's a lot of attention and focus on right now. It's a small company. It's an ambitious plan of what you're talking about. But the reason I think we're interested is because there's so much happening in this space right now in terms of how you go about doing that. Part of the question is how much do you spend on content? You want to get the content spend under control, but that's also like your biggest brand is making sure that you have new programming that people really want to watch.
Yeah, look, the whole thing is based on content, right, and shows. And we have some of the biggest shows on TV right now. Outlander is a massive show. It's one of the biggest shows. We have a prequel coming in August. The Power Universe, there's 4 shows that come out of that, are some of the biggest shows on TV as well. And so it all starts with great content. We'll continue to produce great content. 7 years ago, as we saw the consumer shifting to digital, we made a hard pivot into it. And so today, of our 1.4 billion of revenue, 70% is digital. 80% of our customers actually are some kind of add-on for us. So that means they're choosing stars, which means our content is working. And so while the industry has changed and scale seems to be the name of the game these days, I think our size has actually been helpful because we've been able to pivot faster than anybody else and be more nimble that way.
Well, that's what I was going to ask. Do you see yourself being an acquirer of other brands, other titles, other assets, or do you see yourself eventually getting lumped in with somebody else? Because you're right, scale is the name of the game.
I think that's kind of a misconception that scale is the only thing that's important in the business. I think we have a very focused programming strategy around women and underrepresented audiences. And within those 2 demos, we are one of the biggest players, even though on a scale from a business side, we're not the biggest. And so we do have scale where scale matters. But if you look at what we've built, we're 70% digital, 20 million subscribers. We threw off a record adjusted EBITDA in the quarter of 92 million. We've been profitable the whole time. And we built our own tech and own our own tech. And so we have a scaled platform that will allow us to get bigger. And I think we're going to be in the conversation as the industry continues to change, whether it's we go look at linear networks that are marooned on the linear side that focus on our demos that don't have a digital future and haven't followed the consumer to the digital side. I think we can help scale those businesses on their behalf.
I thought you had an operating loss for the most recent quarter.
We had an operating loss, but an adjusted EBITDA gain of 92 million.
Adjusted basis.
Yeah, on adjusted basis.
Trying to get to the subscriber growth. So you're just focused on the United States and Canada at this
Correct.
point. I think you think that's about 80 million homes as a potential addressable market.
Yeah, we think sorry.
Go ahead.
Yeah, we think the addressable market is about 80 million homes. We're sitting around 20 today. We just had record subscriber growth in the quarter. We grew the actually total U.S. and Canada subscriber base, or U.S. base about a little less than 2%, net of linear, and so that was a great quarter for us as well.
I just wanted to ask you just the programming cost issue, which is, even though you have this sort of unique sort of space that you're living in, you're competing with Netflix and HBO and everybody else who's trying to buy the same stuff, right? And so in terms of creators and actors and directors coming to you first, what is the value prop to them in terms of how you're going to actually get the next great piece of content?
It's a great question, Andrew. If you think about what we do, we are so focused on women and underrepresented audiences. We're mature, we're adult, we don't have advertising. So we allow creators to really do things differently than the broad-based streamers that are focused on advertising right now. And so as a mission-driven company, it allows us to bring creators to us because they want to be part of that mission. We see that with the hiring, we see that with content. If you look at, there's a book called All Fours right now that was just out, a very competitive book. We were able to win that book because Miranda July, who's the creator, looked at what we do and said, if my book wants to come to the screen, the best place to have it is Stars. We didn't outbid anybody else for that.
What are you paying these days on average, you think, per hour?
So we're paying around $7 million per hour. We think we can get that down to $5.5 million per hour.
And what do you think? I mean, I haven't looked at the numbers. What is like Netflix paying per hour?
I think it really just depends on the piece of content. If it's heavily scripted, they're probably paying upwards of 7 to 12. If it's a reality or a documentary, it just really depends on the content type.
How do you think you get that down from 7 to 5.5 million?
There's a couple ways to do that. One is you de-age the content. So right now we have a lot of shows that are in their 5th and 6th and 7th season. Those are much more expensive than season 1 shows. And so we'll, in the next couple of days.
But they also have a track record.
They do have a track record. But what we've been able to do, if you look at the Power Universe, we've been able to franchise core shows into spin-offs and make them work. And so we've been very good at that. That's why Outlander, the prequel's coming this summer. We feel like that's going to just take the audience and continue it. Raising Kanan, Force, Ghost, those are actually all bigger than the original power. And so we have a track record of taking core shows, creating new shows, and spinning them and having them be just as successful. And we'll do that. We'll continue to do that. And so as you de-age content with shows that are around the same demos that we have the ability to take cost off the business as well. Because we're now separated from Lionsgate, we also can have international sales, which puts another revenue stream on the business, which gives you the opportunity to net that cost down.
You got to get bought though. I just wondered, you need, but someone wouldn't buy you now with all the debt, you don't think? Or
we're sitting with $600 million of debt right now. We generate $200 million of profit. Convert that to about $7 million.
We're in the market for things, aren't we?
Oh, you mean?
Yeah, that's what I mean. Yeah, should we? It's got a name now. Yeah. I mean, maybe when we go off, maybe we'll talk.
Yeah, maybe. Let's talk.
Maybe we'll talk when we go to break.
I mean, maybe. I mean, look, I think.
Will you represent me in this negotiation?
Represent yourself.
I'm not as good as you
You
would.
got Ari. Ari will represent you.
Maybe Ari.
Look, I think you.
I think you get a better deal. I just do.
You have a real good opportunity here.
Well, that's what I mean. I mean,
For you guys. I mean, look, taking CNBC Plus out into the marketplace brings a consumer to your viewership that isn't going to watch you through traditional cable. And so I think that was a really good move on your part. And I think
You got a card?
You have a card?
Yeah, you got a card?
He's trying to make a deal with you right now.
Well, I'm not making a deal, but
You know, I actually, you know.
have your person call my person.
Okay, well, we'll talk
I don't
later.
know what Penelope's doing right now. But I don't have a person.
You don't have a person? Oh, yeah, all right. You know?
I have Ari. Yeah,
I mean, he's a
great.
good- he's a good person.
Try getting a hold of him. All right.
Jeffrey, thank you
Thank
very
you so
much.
much.
We appreciate your coming in and
Thank you so
hope to
much.
see you again.
Great to
All
see
right,
you.
coming up.
Thank you.
Bombastic Bushman. Coming up, stocks on the move this morning, including names in the steel and energy sector. Swap Box return in just a moment.
Hitch.com.
Well, to Squawk Box, everybody. I'm Contessa Brewer with the Morning Movers. We're keeping an eye on American steel stocks this morning, which are surging after President Trump announced he's increasing tariffs on steel imports to 50%, up from 25%. That announcement on Friday. Nucor and Steel Dynamics, the pre-market leaders on the S&P, as a result. And you can see Cleveland Cliffs up 25% right now, while Steel Dynamics and Nucor up a little more than 10%. Still, though, down more than 50% over the past year. Meantime, we're watching oil prices climbing after OPEC Plus decided to increase production by 411,000 barrels in July. It was the same amount that it had in June. There were reports Friday that the group could have considered a much larger production increase, which of course likely would have lowered oil prices instead because they kept it at 411,000. What we're seeing is the companies popping here. Occidental up almost 2% in the pre-market, Halliburton up 2%, ConocoPhillips, ExxonMobil, Chevron all up more than 1%. And Sanofi is planning to acquire Blueprint Medicines Corp for as much as $9.5 billion or $129 per share in order to expand its offerings in rare immunology diseases. Blueprint shares are up now almost 27%, and you're watching Sanofi shares off by 0.5% in the pre-market. That's your morning money movers, and Andrew, I'll send it back to you.
Thank you very, very much. Coming up, Illinois Congressman Darren LaHood is going to join us on set to talk China. We'll talk trade, the AI race, and taxes. Let's get to a break. Check out the Dow winners and losers this morning. Squawk Box returning right after this.
Restrictions apply.
Welcome back to Squawk Box. China refuting Washington's claim that it violated a trade agreement negotiated last month and instead is accusing the U.S. of breaching terms of the deal. Joining us right now is Representative Darren LaHood. He sits on the House Select Committee on China and the Intelligence and Ways and Means Committees. He's voted in support of the House's version of the reconciliation bill. So let's start there. What do you think is really going to happen here?
Well, let's remember, no one thought we would pass it in the House by Memorial Day. We did that. And I give a lot of credit to our leadership, Chairman Jason Smith. We've worked for over a year to get this bill done. the one big beautiful bill got done, and now it's in the Senate's hands. Not a perfect bill, but it does remarkable work in the tax space and building off the 2017 Tax Cuts and Jobs Act that created the best economy in my lifetime. Making permanent a number of those provisions was important. And the last point is, remember, if we do nothing, Andrew, we'll have $4.5 trillion of tax increases at the end of this year.
Okay, but what do you make of the idea that we are just adding debt upon debt upon debt? The idea that this is a fiscally responsible bill, and I put that in air quotes, is very hard to argue.
Well, I think they said the same things when we passed the 2017 Tax Cuts and Jobs Act. And again, we moved 6.5 million people out of poverty, created the best economy in my lifetime. The CBO estimates that growth will be at 1.8. Ours is at 2.8. We've never had a period that it hasn't been over 2% growth. So again, CBO, I think, has faulty information on putting the growth rate at 1.8.
But I think, I mean, look, part of this issue is that for at least the last administration, there was an argument made that people were, spending money wildly, right? And that there was this argument that this administration was coming in, this new Congress was coming in, this new Senate was coming in with a sort of very fiscally responsible approach. I think the bond market is suggesting they don't really like this.
Well, I would say a couple things on that. I mean, this is a tax bill, right? So we're focused on taxes. And I think what you're going to see this week, a number of the DOGE cuts are going to come before the Congress, and a rescission bill. That's going to be a part of this. But there's no doubt this will reverse the trajectory if we get the growth that we think we'll get with this at 2.8% from the $36 trillion.
Right. What do you make of the fact? I mean, even Elon Musk would say, he said it on TV, not happy.
Well, I would disagree with Elon in the sense that he doesn't understand how the tax bill works. Again, look at the statistics from 2017, right? Higher wages, lowest unemployment, 6.5 million people moved out of poverty. And think about the provisions we have in here: 199A, bonus depreciation, estate tax, R&D tax credit. This is going to be rocket fuel for the economy.
If you get 3% GDP, Besant was on, and when he says things, I do listen to him, and he says, we're at 7% of deficit to GDP. This eventually, when he leaves, it'll be at 3%. It's hard to imagine, but he's saying that the CBO grossly underestimates the possibility for GDP growth.
I agree with that, and I think they've had a track record of doing that also. If you think about it, Joe, there's a lot of money sitting on the sidelines waiting to be spent in private equity, in banks, and on personal level. They're waiting to see predictability and certainty in the economy. That's what this bill does. It gives predictability and certainty, and that's frankly what people want, particularly with...
You're going to need GDP of 3%.
Yes.
And
I think listen, we're at 2.8 is what we predict in our bill. I think it could go much higher than that.
And that would... And I'm not sure. I just don't think the bond market is.
I got a tax.
The bond market is not freaked out.
It's my bugaboo. So I'll just ask. It's a small number, but carried interest. Can you explain to me, in like I'm 5, why carried interest remains ongoing, not touched by this bill?
Well, again, we can get into the details of that, Andrew, but we had a lot of discussion in the Ways and Means Committee. The Senate will talk about this now. But if you look at what private equity and a number of venture capitalists have done in this space in terms of creating more economic growth, right? Letting the private sector flourish and prosper, I think you start with the premise that we're not going to grow the economy with more government spending. We have to let the private sector flourish and grow. And I think the carried interest part of that, we've seen direct results from that have benefited the economy and created more jobs.
Just so we're on the same page, the folks who are benefiting from that are not the folks who are investing their own money. This is not to benefit the investors. This is to.
But the overall industry is a positive.
So my question is, do you think you need to incentivize the people who work in private equity because they're not incentivized enough?
Well,
the government has, because effectively that's what we're doing. We're saying the people who work in private equity, people maybe who work in certain parts of oil and gas, people who work in certain parts of real estate, need to be incentivized to do that work. Meaning, and you would say you don't need to incentivize teachers, you don't need to incentivize doctors or anybody else, but that issue, real estate, oil, gas, private equity, venture capital, those people need a special incentive to actually take those jobs, and that they wouldn't take those jobs and those smart people wouldn't do that work otherwise. Is that your position?
Well, I wouldn't put it exactly like that, but what I think we've seen is this provision being in place has allowed private equity to go in and help take over businesses that are distressed and otherwise. I've seen it throughout the Midwest and many of my counties and other places where private equity has come in and created more jobs and economic opportunity. And I think the argument can be made by having this provision in there has allowed for more economic growth.
That's what people always say, and you're never going to get the answer you want. They're going to say that it's worked really well and don't touch it. They're not going to say it's fair. They're not going to say that it needs to be incentivized. They're not going to say any of those things. You're never going to get that answer, no matter what you say to these poor people that come on. You're never going to get that answer. They're going to say it's benefited the overall economy. Why mess with it, right?
Yeah, I mean, we went round and round on this, looked at it extensively.
Trump wanted it. Congressman Trump wanted it. He was ready.
It was a collective decision we came to that it benefits the economy and benefits taxpayers more to have it in there.
Congressman, I want to thank you for joining us this morning.
But the president's ready to call it quits on that.
I think he is, right?
Yeah.
And getting the one big beautiful bill done was an accomplishment in the House.
No, he's ready to call it quits on the carried interest.
I agree with that.
But he
Yes.
couldn't get it done, I don't think.
Yeah.
I don't know whether, you know what goes on behind the scenes. I don't.
Tell us what goes on behind the scenes.
Well, we've been open and transparent on the Ways and Means Committee with this bill. Again, I give Chairman Smith a lot of credit on that. We've had a number of open hearings, and over the last year here, we've had public hearings. We've had all across the country. And again, I think people are well aware of what this can do. And remember what we're doing for working families. No tax on tips, no tax on overtime. What we've done for seniors in the Social Security space, no tax on auto loans. So to say this is benefiting the rich is just not in fact true. It's benefiting working families because of those provisions that President Trump ran on.
I'm just wondering what the Senate does and how different that is. Because President Trump saying go for it to the Senate after he finally got the House.
Well,
you figure you can get it passed again in the House.
I do. Now, as Speaker Johnson has said, you can't. It's a delicate balance in the House and how we got there. So I don't think you can tweak it too much in terms of moving forward. But again, the accomplishment we got. No one thought we'd get it done by Memorial Day. We got it done. Now the Senate needs to get it done by 4th of July.
Senator Mullen's going to be on in a little while. We're asking how much they're going to mess with this.
I think he'll tell you they're going to get it done by the 4th of July.
They're going to mess with it a lot.
Then you'll have
I
to
hope
back
not.
on it. Right.
Okay.
Thank you.
Thank you.
It's been good. Coming up, the largest cancer conference in the world is underway in Chicago. AstraZeneca unveiled an experimental breast cancer pill that delayed progression by more than 6 months. We're going to have an exclusive interview with the CEO next. Squawk Box will be right back. The American Society of Clinical Oncology's ASCO annual conference is being held in Chicago. Let's get to our Angelica Peoples with a special guest. Good morning.
Morning, Joe. That's right. We are here at ASCO, and I'm joined by AstraZeneca CEO, Pascal Soriot. Pascal, you've been quite busy this weekend. You have a lot of data that you're presenting here. I want to start with SERENA-6 because there's been so much debate around this. You're trying to basically proactively look for mutations in people who are getting treatment for breast cancer. So instead of waiting for those tumors to grow and then treating them with your drug, you're looking for this mutation earlier. And there's this conversation around, yes, you want to be proactive, but also is it worth the stress on the patient? And also the cost of the test is what, about $5,000 every few months. So talk to me about that debate. Is it worth it?
It's absolutely worth it, Angelica. First of all, thank you for having me. Being at the ASCO is always exciting, but this year even more so. So to answer your question, in the past, the way you would treat cancer is that you would give patients a given treatment, chemotherapy or something else, and then wait to see whether the cancer would progress and return. Now, the smart thing to do is to try and track in the blood of patients whether there are signs of cancer returning. And then with this, on average, in this case, in breast cancer, we can identify 9 months earlier that the cancer is returning. And then you can retreat patients, and you have a much better chance to potentially cure them or delay the progression of the disease. So what we hear from patients is they want to be in control. They want to know that their disease is stable, and so they are not worried at all with this blood test. Now, the cost of the blood test will vary from hospital to hospital or country to country, but I believe this is the future of cancer treatment, not only in breast cancer, but across all tumor types.
And one of the things, too, is the question of whether doctors will be able to implement it. It's obviously a change in how they practice. You're here, you're talking to doctors. What are they saying about that?
Well, of course, some doctors have some worry about the implementation of it, but most of them are very excited. The fact that we were presenting this data yesterday at the plenary session tells you that everybody recognizes it is a big breakthrough. And I should have maybe explained for your audience that what we are doing actually is looking for the sign of cancer in the blood of patients, because actually tumors, they shed DNA in the blood, and you can actually identify this in the blood. Now, this is well accepted by many, many physicians. The cost is an issue that will disappear over time because these technologies, as you scale up, the cost drops. And I really think patients will welcome the ability to actually be in control of their disease. Yeah.
While we're talking about cost, there's obviously a tremendous amount of talk about the cost of drugs in Washington right now. And the Trump administration basically gave you and other companies about 30 days to voluntarily lower your prices to similar levels as there are in other countries. So are you going to do that?
Well, we share the view of the U.S. administration that the cost of innovation in our industry needs to be better spread around rich countries. We need to equalize. European countries in particular, rich countries, they need to pay a little bit more for our medicines. They need to dedicate a greater share of their GDP to health innovation. They spend about half what the US spend in terms of share of GDP, 0.3% of the GDP versus 0.7, 0.8% in the US. It's like defense, it's very, very similar. So they need to spend a bit more. So US prices can be slightly lower and European prices a bit higher, and we equalize.
Will that happen?
Actually, the question is, how can this happen? But it's important that it happens because it's also the interest of patients in Europe and the interest of those countries. Our industry creates a lot of good jobs through innovations, investment in R&D, and for patients, it's important to have access early. Got to remember, it's not only a question of price, it's a question of access. In the US, people get access immediately if they have an insurance, of course. In Europe, they usually wait 2, 3, 4 years before they can get access to medicines that can actually save their lives.
And if the most favored nations policy does go through, what does that mean for you? Your revenue as a company, but also, again, that access potentially here in the US?
Yeah, I mean, it depends how an equalization policy, I mean, what people may call MFN, how this is implemented. I started in the industry a long time ago, And in those days, innovation in our industry was coming out of Europe. 30 years later, it's coming out of the US. So the US is leading. The US has a leadership position in life sciences and biopharmaceuticals. And a reform that would affect the entire industry, all the existing products today, would really affect very substantially the leadership the US has in biosciences. You cannot destroy this. It's so important for the country to keep global leadership and keep, in the long run, sovereignty over the health of people in this country. So lower prices, for sure, but it has to be done in a way that doesn't affect this leadership the US has.
All right. Well, that's all we have time for. And I know you have to run to a big session right now. Becky, I'll send it back to you.
Okay, Angelica, thank you very much. When we come back, an update on office space. It looks like the market is taking away more square feet than it's producing right now, and that could actually be a plus for investors. We'll have more on that story when Squawk Box comes right back.
Restrictions apply.
The office market reaching an inflection point according to some new data, and it may be a positive for investors. Diana Olaf joins us this morning with more on that. Good morning.
Good morning, Andrew. Yeah, this year, office conversions and demolitions will exceed new construction for the first time in at least a quarter century and likely longer. More office space is being removed than added, thereby shrinking the office footprint. This according to exclusive new data from CBRE. Across the largest 58 U.S. markets, by the end of this year, about 23 million square feet of space is slated for demolition or conversion. In comparison, developers are projected to complete construction of 12.7 million square feet in those same markets. Now, office vacancies, of course, soared to a record high during the pandemic, and they still hover right around that at 19%, but the market is starting to recover. Net absorption, which is really just a fancy way of saying the amount of space newly occupied in a quarter versus the amount vacated, has been positive for the past 4 quarters after 6 straight quarters of being negative. Office leasing activity increased 18% in Q1 year over year, and developers have also another 85 million square feet of office space being readied for conversion in the next few years. Now, office REITs, they will be the big winners here. Names like Boston Properties, Vornado, and SL Green. There is, however, one note of caution. It's a shrinking supply of offices that would make for good conversions, given the high and increasing costs of doing that, of course. Andrew?
Okay, Diana, thank you very, very much.
It is almost 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, the European Commission saying that it is prepared to retaliate against President Trump's plans to double tariffs on steel and aluminum imported into the U.S. President Trump announced those heightened tariffs on Friday. Fed Governor Christopher Waller saying that interest rate cuts remain a possibility later this year, even in light of price increases because of President Trump's tariffs. Speaking in South Korea, Waller said that those inflationary pressures are likely to be temporary. And President Trump says that he's withdrawing the nomination of billionaire entrepreneur and Elon Musk business partner Jared Isaacman to be the NASA administrator. The White House didn't explain the move, but a spokesperson said it's essential that the next leader of NASA is in complete alignment with President Trump's America First agenda.
All right, let's check the futures this morning, which about where what we've been seeing is a little bit worse, I think, earlier. Let's get to Mike Santoli, to NYSE. Good morning, Mike.
Good morning, Joe. Yeah, coming off a pretty strong week. S&P was up 1.9% last week. Really, for the last 2 weeks, we've been in this kind of digestion, cooling off period after a very strong rally off those early April lows. This is the 1 year of the S&P 500. And I have these lines drawn in here as this very kind of sticky range, which is defined by the 1-day pop in the S&P 500 on November 6th. This was the close on November 5th, election day. This was the close on November 6th. You see how much time we've spent in the intervening months, obviously before and after the confidence crash related to the April 2nd tariff announcement. And it isn't all about policy trade-offs. We've obviously had 2 earnings periods since then with very strong growth. The economic data, the hard numbers continue to be steady. But the market is definitely kind of holding in this wait-and-see posture, it seems. Been pretty resilient, all things considered, waiting to see how those shoes drop, at least for now. Take a look here at the Mag 7, CNBC Magnificent 7 index relative to the equal-weighted S&P 500, because really there's been a resurgence in those mega-cap growth stocks. The market's relied on that. It's sort of a narrow rally in the last little bit here. And you see over the last year, there have been a few times where they've kind of threatened to come together, and the Mag 7 looks like it was going to be succumbing to a broader market move. It did not really sustain. We'll see if where that goes from here, because you have had some members of the Mag 7 not really playing along. Apple is one of them, and it's sort of on the verge of breakdown. It's trading right near its 2023 highs. I have it here relative to Berkshire Hathaway on a 3-year basis. You see they were kind of marching up roughly in tandem. Obviously, Berkshire sold a fair bit of its Apple shares, and you see Apple really is buckled here. We'll see if it can hold. It's around the $200 price level. But Berkshire's mostly held up, even though the quality trade, the very, very high-quality blue-chip stocks, have also taken a little bit of a backseat. I would also point out Alphabet has not really done a whole lot to the upside to help the Mag 7.
And Mike, we had some of those numbers on Friday, as you know, Santelli was reporting them, were pretty good. No movement really in the market, though. We've made a huge move off the lows, though. I don't know what it takes. If there's another leg up, I wonder what kind of fundamental backdrop we're talking about. You know, it's not always coincident with a move up, obviously, but I wonder what gets us. I wonder what positive things would happen to get us up for the next leg back over 6,000.
I mean, look, I think the market is right now. You have to believe it's pricing in some level of, call it de-escalation from the list tariff rates. And, you know, I think just getting it settled, knowing what the rules are, whether it happens in July or later, could be one of those things. But it has to also coincide with the hard economic numbers hanging in there. Yeah, I know the personal income and spending numbers, especially incomes, big bulge. It was mostly transfer payments. It does still mean the consumer has dry powder, right? Spending less than they're taking in. So there's potential energy in there. I just think the market's in wait and see mode. And plus, we're above 21 times forward earnings again on the S&P. So it's not as if the market is kind of hunched down in risk aversion mode at this point. We're sort of priced for a decent or benign backdrop looking ahead.
And companies are either towing the line,
yeah,
with saying they're not going to raise price, or we had Chairman of Sunoco on Ray Washburn that said they can do 10%. They can do that and find a way. They can find a way to handle 10%. Maybe.
Well, I agree. I think that is if that's a kind of the street's baseline idea, 10% plus a bit more with China. If you blend it together, maybe it's 15. Look, 10%. If you're in a business like Sunoco or a lot of business, like a 10% swing in your input cost happens all the time, one way or the other, and you kind of have to manage around it. If it's more than that, if it's sort of punitive, it's meant to stop trade and economic activity. I think the market hesitates on that if that's where we go.
Okay, Mike. Thank you. How was that Barron's piece? Did you read it? You did for old time. You probably get it free, don't you, for the rest of your life?
No, it's lapsed a long time ago. The Alumni Society is not.
Are you kidding me?
I can
I
try,
know a
but I
secret
haven't.
password.
You do?
I'll share it with you.
Cheap bastard! I can't believe that they don't give you that after what you did for them. You know.
You mean leaving 13 years ago? I don't know.
You're emeritus. You're still emeritus. I think.
Yeah. All right. Coming up, the CEO of crypto giant Binance is going to join us just a few days after the SEC dismissed a high-profile lawsuit against that company. Do not go anywhere. Squawk Box returning after this. Welcome back to Squawk Box. The SEC dropping its lawsuit against Binance and founder CZ late last week. The original complaint accused the world's largest crypto exchange by volume of illegally serving U.S. users, inflating trading volumes, and commingling customer funds. Joining us right now, first on CNBC, is Binance's CEO, Richard Tang. Good morning to you. Before we get into it, what did you think when you first heard the news?
Well, first of all, thanks for having me. First, let me express this. We are very grateful to Chairman Paul Atkins, President Trump, and the Trump administration for choosing to really support and foster innovation rather than stifling it, for choosing a very considered and thoughtful approach in terms of crypto formulation and regulation instead of going down the path of regulation by enforcement. Right? So this is great news. It's a significant win for us as a company, for Binance as a company, but for the industry as a whole as well. And US is firmly back into the driving seat to become the crypto hub of the world.
How do you think the public should think about this decision, given some of the evidence and other things that was presented to the public about some of the charges and allegations prior?
I think what's important is that going forward, we're going to have much greater clarity coming out. There's support from both sides of the houses to formulate clear rules and regulations to support and regulate the crypto industry. And we're deeply supportive of that, right? We at Binance always believe that we have to invest very greatly into the areas of making sure that customers' interests are protected. We always place users and customers at the forefront of every decision that we make. We celebrated more than 275 million customers just last week. So we continue to focus on areas of user protection, working with global jurisdiction and countries around the world to uphold standards, maintaining high standards of security and integrity, and continue to invest heavily into compliance to make it a competitive advantage for us.
Richard, the other thing is that your founder apparently has applied for a pardon. And I would also just mention, by the way, the Trump meme coin and other things can be purchased on Binance. So I just wonder whether you think that how the public should think about what some people would describe as a conflict.
Well, if you think about it, the Trump meme coin can be purchased on multiple platforms. It can be purchased on decentralized platform as well. So it's freely available out there. And I think that's the beauty of the crypto industry. It's 24/7, it's global, and it's an innovation that nobody can stop. So I think it's extremely wise for the administration to support and make crypto and AI at the center of its agenda. And these are the two foremost, most important technology that all countries going forward should focus on.
Well, let me just go back to the coin. There's a whole bunch of folks, by the way, in the crypto industry that you exist in that think that the president having a meme coin undermines the credibility of the crypto movement, if you will. That they say, look, this is a conflict. There are laws in the United States that prevent folks, foreigners and others, from effectively enriching the president or his family. This is a way effectively for anybody in the world to send money to the president.
Well, if you think about it technically, anybody can issue a meme coin, right? So in terms of the crypto space, there are so many different utilities and it's a very wide spectrum of different tokens, some utility, some fall into GameFi sector, you have stable coins, you have payment, SocialFi, and you have this sector called meme coins, right? So anybody can issue a coin, essentially. It's how do you make it successful, right? But it's not my position to say who should be issuing a coin on that front and what's the utility of the coin. A lot of times it's the community that embrace it, and we are very respectful of what the community wants on that front.
I want to talk about compliance for a second, because back in 2023, you disclosed that you'd spent about $213 million on compliance programs that year. That was 35% higher from the previous year. And so I was curious, what's happened since then?
Well, today we are the most regulated global platform. We are regulated in more than 22 different countries. If you look at our compliance spend, it continues to increase substantially. Today, if you look at the compliance account, we have more than 1,400 people, making us the biggest head count in terms of the compliance space within the crypto industry. Right? So we continue to invest. And we have the ability to invest. I mentioned that security, compliance, these are very key areas that we work with global regulators to focus attention on. In the area of security, you have seen a lot of hacks over the course of the last year and this year, some very high profile involving substantial amount of money. So we continue to invest very greatly, and we have the ability to do so to make sure that we are the safest, most secure, and we are the most compliant platform out there.
Who do you see as your biggest competitor? Is that Coinbase? Is it somebody else?
We are focused on our destination. We have more than 275 million global users, and if you look at our journey, we started 2024 with 170 million users. We have surpassed 275 million users last week. So in the course of less than a year and a half, we added more than 100 million new users. So we are focusing on making sure that we continue to be the most attractive platform out there. I mean, if you look at people that know Binance, know that we're the largest blockchain ecosystem in this space. We offer the best order book liquidity spread, and people that knows best execution knows that they have to come through us to get the best beta spread, and that results in substantial savings for anybody wishing to trade in crypto.
Richard, we got to leave it there. We do want to thank you, though, for joining us, and we hope to see you in person next time you make it here. Thank you.
Definitely. See you soon.
You bet.
When we come back, we will speak with Republican Senator Markwayne Mullin, who is acting as the pivotal point person between the Senate, the House, and the White House on President Trump's reconciliation bill. Stay tuned. Squawk Box. We'll be right back. Welcome back to Squawk Box, everybody. The futures this morning a little weaker, although we have come up the lows of the session. When we started the show just over 2 hours ago, markets were down by about 250. Now the Dow is down by 135 points, Nasdaq's off by about 110, and the S&P futures down by 25. Taking a look at Treasury yields, they are higher than they were on Friday, but below where we were a week ago. The 30 years at 497, the 10 years at 443, and the 2 years at 392.
Well, the Senate's getting ready to take on the House passed big, beautiful reconciliation bill, but people are saying there might be a fight ahead within the Republican Party and between the Senate and the House. Joining us now, Republican Senator Mark Wayne Mullen. He's the liaison for the reconciliation bill between the Senate, the House, and the White House. I think of all the different dynamics, Senator, and it's good to have you on. You guys get 6 years. Those guys, those poor souls in the House, man. The minute they get in, election season starts for the next 2 years, and that's why it just seems so. Maybe our forefathers were smart. It's really hard to get anything done, isn't it?
Well, that's how our Federalist Papers were wrote. If you read them, they wanted Congress to work slow, so negotiations is part of it. I mean, we're going to bicker back and forth. Both chambers work differently. I have a love-hate relationship with the House because I absolutely loved my time in the House. But, man, it was so frustrating, too, because you're right, Joe. As soon as you finish winning your election, you start running again. So it's kind of always on your mind, especially when you're negotiating one big, beautiful bill that isn't going to be perfect, but it's going to be good.
Exactly. I don't know how many times I've used that expression, the good for the, don't sacrifice it, trying to be perfect. But what are your colleagues, the ones that will be in the decision-making process on this? And is it going to be fast? Is it going to be July when it happens? And what are the people that you respect there? It's not everyone's like Rand Paul, I don't think, but there's people like Ron Johnson and others. How much are they going to ask for in terms of additional cuts?
Well, all of us are going to shoot for the moon, right? We want the bill to be as good as possible. But truth is, we've been negotiating this since November. At the end of the day, everybody's idea is going to be considered. But it's your idea, so since it's your idea, as every member knows, it's your job to get the votes for it. So Ron John or Rand Paul or Mike Lee or Lindsey Graham or whoever else you want to put out there, their deal is they have to find 51 votes for their idea. If not, then we've got to move on. So everybody's going to have their fingerprints on it. Everybody's going to be working together. They're just two hard stops that we really can't mess with, and that we can't go below $1.6 trillion in cuts. In fact, Leader Thune says he wants to actually do better than $1.6 trillion. So that's actually more deficit spending cuts than what the House did, and we can't really touch SALT, even though in the Senate we really don't have any SALT members in the Senate on the Republican side. But we also know that's very important to the majority makers in the House, and that was a sticking point, hard point to get over. Other than that, we're going to, as I say, we're not going to tear down the frame of the House bill. We're going to maybe repaint the interior walls and redecorate a few rooms, but overall the bill and the structure of the bill is going to stay intact. We're just negotiating with them right now. In fact, I was just texting Speaker Johnson before we went on the air here.
In terms of that, you mean you're basically going to do what they want, which is to not touch it significantly enough that it has to go back for a vote in the House?
No, it'll have to go back for a vote because we're going to leave the frame of it together, but we're going to have to. I mean, if we change the bill at all, it's got to go back for a vote. So we're going to amend the bill. We're just going to take our amendments and put on top of it. There was some talk about some people in the Senate that literally wanted to shelf their bill and try to rewrite a different bill. There's no way to do that by July 4th. Leader Thune has made it very clear we want to have this done by July 4th. We will deliver for what he wants to get done. There's going to be a lot of negotiations. I was on the phone with the president this weekend about making sure we're in lockstep with the White House and with the House and with the Senate. But we're going to have to do some amendments. There are some things in this that aren't going to make the bird rules. I like to say the bird bath because it's going through the scrubbing right now. Once it gets done with the bird bath, then it's going to look different anyways. And then we've got to put our own personal touch on it. Every senator, just like every House member, has ideas.
Where's it going to be? Does the Senate want to actually deal more with the abuses that are with the way Medicaid is set up right now? And is that where the problem is in the House? You've got some members that are worried that they might be in more blue areas where the president didn't do quite as well. Will they not be on board with some actual real reform of Medicaid if you do that? Is that where you'd lose them?
No, I mean, you have Susan Collins, who's in a very unique situation in Maine. I say this all the time. She's the only Republican that can carry Maine. I mean, she doesn't vote with us all the time, but she votes with us a heck lot more than if we had a Democrat senator up there. And so we've got to give her a little bit of leeway. We have Lisa that's got a little bit of leeway that she's got to work with. Dan Sullivan, Medicaid is a huge issue in Alaska. Josh Hawley in Missouri has made this very clear about him with Medicaid.
So you got the same problems. You got the same problems, and then you go back to the House where you got the. But then we got guys like Chip Roy on the other side. It's tough to watch, and Senator Ron John is a surf shop, so I don't think you can use that for Ron Johnson. But
right, but Medicaid though, there's a lot of confusion that the Democrats have lied about. They went out there, Joe, and said that we're cutting Medicaid benefits. We're not cutting Medicaid benefits.
No one believes that.
Senator,
no one serious believes that.
Senator, how much do you focus on what might be described as the bond vigilantes? This idea that the bond market is a little nervous, maybe a lot nervous, about what this bill may do to the long run fiscal situation and economic situation in the country longer term.
Well, speculation is what always drives the market. We know this. And in fact, I think the bond market is going to respond well once this bill is passed because it brings certainty, right? It brings certainty to the tax code. It's going to bring certainty that we're going to be getting our physical house in order. It brings certainty to some regulatory environments. It understands that we're getting away from the from the big government, less business-friendly environment of the Biden administration, and moving to the Trump era administration, where it says, "Hey, United States is open for business again, and we want your business to come back on shore."
But it's not balancing the budget. It's continuing to push out.
If the bond market didn't go to 8% on Biden, it's not going to go up on this, Andrew. No one's freaking out. It's 10 basis points you're talking about as a freak out. That's not a freak out. But
I don't think. I don't really think that that what we're going to do here in today's bill is going to balance the budget, but it will tomorrow's bill. Meaning that because we're cutting deficit spending, we're going to bring surety back to the market. We already see numbers to the economy extremely impressive. We see inflation down. We're going to see our GDP continue to grow. And eventually, as you guys know, these charts, as we continue to cut, because we'll cut more through discretionary spending too. And so we got, we got mandatory spending cuts. We got discretionary spending cuts that's going to go in. We're going to have GDP growth. And I honestly do feel like we're going to be able to balance the budget for the first time since Clinton was in office. And I think we can do it in about a year and a half.
What do you make of the comments that Elon Musk has made about the bill then? He's been a big proponent of the president, but he's critical of this bill.
Yeah, well, Elon is an extremely smart guy. I consider him a friend, someone that I actually spoke to through text over the weekend. He's got a lot of great ideas, but he's just as frustrated as I was when I first came in Congress because every business person wants things to move faster, and they see a problem, they want it to be fixed, like you would when you go to your board meeting. The problem is that we have 535 CEOs that's on the board. And everybody's got their own ideas, and when you do that, you don't get the best decision because everybody's looking out for their state, which they should understand that. And so the negotiations aren't the way that we would like it to come out. I tell everybody the biggest lesson I learned from being in the private sector to come into the public sector is how to take a deep breath, because it's extremely frustrating when you see something that's so black and white in front of you and you can't fix it. And Elon's coming from a business perspective, in which we need, but unfortunately Congress doesn't always work like a business.
I mean, there was enough worry about just extending the 2017 cuts, and then the president layered on all these other things that were really populist in nature, and I think the president actually considered maybe some revenue raisers, to Andrew's point, and instead of just putting all your chips on growth and trying to say that's all we're going to do, I think he probably even considered raising that top rate. Remember, on people make more than $2.5 million or combined $5 million. I mean, so that Republicans know that there are deficit concerns, and they don't want to be the same as Democrats. And it seems like Republicans always end up being tarred with that same brush as far as being deficit busters.
Yeah, and let me tell you, the president has been engaged in this at like a true leader. I mean, he's leading from front every single week, almost daily. We're in communication with the White House, and I'm not talking about just a few people in the White House. I'm talking about from the cabinet all the way to the president. He has been making it very clear that everything was on the table. He's willing to negotiate. He's willing to make a deal. One thing he did not want to do was raise corporate taxes, though. He was dead set.
Right.
We can't do that when the average developed world is at 15%. We're already at 21%.
Yeah. Well, raising the top rate would have raised it on a lot of small businesses,
small bit like LLCs and S-corps. You're right. But he was willing to discuss what we needed to do. But at the same time, we were very confident we were going to make our tax policies permanent and not allow them to go up on a single person.
Okay. All right, Senator. I'm always gentle with you. I get scared because I don't want you coming on the set and pushing me around or something.
I appreciate you being nice.
I've seen the way you're a tough guy. I've seen people wilt in your fit, but good to have you on. I know you're a pussycat. I'm kidding. I'm just referencing that one man.
I know.
Yeah, you remember.
Thank you, sir. Yes, sir.
You'll be remembered for that forever. Thank you. All right, see you later. And you're friends now. That's the classic.
We are. Sean and I are friends.
Yeah.
When we come back, a lot more on Squawk. We're going to take you live to the far north, where Brian Sullivan looking into an Alaska natural gas project that the White House is pushing. But is the cost too high and the push too late? That's the question. Brian, give us a preview of what you got coming up.
Hey guys, we are here in Utqiagvik, also known as Barrow, Alaska. This is literally the Arctic Ocean that is frozen behind us here. And what could be the largest energy infrastructure project in America right now is a natural gas pipeline from the far north Arctic of Alaska all the way down to the sea near Anchorage. It's a $40+ billion gambit. We have 3 sitting members of the White House cabinet for the first time ever right here in Utqiagvik. And coming up after the break, we're going to tell you the story of the gas pipeline that may run alongside the famed Alaska oil pipeline, all here in the Arctic Circle. That is next.
I need insurance.
On the 50th anniversary of the construction of the Alaska oil pipeline, there is a huge new potential project on the table, an Alaska natural gas pipeline. The White House is pushing a new project that would carry natural gas from the top of the state in the Arctic down to the oceans near Anchorage. It's an 800-mile, $40 billion bet on the future of American energy, and it's generated a lot of passion on all sides. Brian Sullivan is up in the Arctic covering this story, and he joins us right now. Hi, Brian.
Becky, good morning. It is morning. It doesn't get dark here. It's 4:30 right now, and this is as dark as it was all night long. That's how far north we are. We're in a town of about 5,000 people, which is the largest town in 500 miles, an area the size of Minnesota, here in Upkiavik, also known as Barrow, Alaska. Later today, we're going to be flying over to Prudhoe Bay. And this natural gas pipeline, I want to be clear, this is not new. This has been something that the state of Alaska has talked about for decades. It gets momentum, then it goes away. It gets momentum, then it goes away. Well, we have 3 sitting members of the White House cabinet, EPA Administrator, Secretary of Energy, Secretary of Interior, all in the hotel about 100 yards behind me here that are trying to push this project. Okay, so what is this project? Well, it is a natural gas pipeline map from near Prudhoe Bay down to Anchorage, as you noted. Everybody knows the Alaska oil pipeline, 490,000 barrels per day. Every citizen of Alaska gets a check once a year. Why are we in Upkiavik here? Because this is the indigenous local community that is going to play a huge role in not only getting the tax revenue from this natural gas pipeline if it happens, but also determining the fate of their area. Now, last night, we were at a town hall meeting, about 100 local leaders, local residents over in the cultural center, where the 3 sitting members of cabinet, the governor of Alaska, and the aforementioned Senator Dan Sullivan of Alaska all listened to local residents' concerns about this potential pipeline, because they have this frustration that the federal government will come in, kind of tell them what to do. We're going to tell you what to do on your land, and they end up kind of getting screwed, for lack of a better term, in the process. So last night we had a chance to connect with EPA Administrator Lee Zeldin, and I asked him about this idea between balancing the growth of these abundant assets here, but also protecting the climate. And he said it's not a binary choice. Here's what he had to say.
It's not a binary choice between protecting the environment and growing the economy. The Trump administration chooses both. The people who live here, who clearly care very much about their own environment, this is where they live, they are choosing both. This isn't a binary choice for the people in North Slope. They choose protecting their environment and growing their economy. They are desperate for that ability to be in control of those decisions.
So you could tell the idea is that it's a lot about self-determination, Becky. On the business side of it, I would say the pipeline is estimated to cost 38 to 44 billion, and then you've got to build some of the LNG facilities down in the coast. ExxonMobil, ConocoPhillips, Marathon Petroleum, Hillcorp, which is private, and a few others, they're the players in the oil and gas. I've talked to all of them. It is unclear whether they would get behind a natural gas pipeline in terms of financially committing to it, because let's be honest, even for Alaska, the biggest state in the union, that's a lot of money. And that's the story we're going to be telling all day from here up, literally north of the Arctic Circle.
Wow. Brian, that is quite a journey, quite a pronunciation. Upkiavik. What? I guess what the question is.
The airport's called Barrow.
Oh, I know where that is. Okay.
You do?
Yeah.
Yeah.
Did you throw up on that plane?
Not that one.
Oh.
So Brian,
those are whaling
customers?
boats, by the way.
Oh wow. Who are the customers?
Would be, yeah, those are whaling boats. They go out. The customers would be Japan, Taiwan, Philippines, maybe Thailand. Later today, we're going to be flying over to Prudhoe Bay, about a 45-minute flight. There are no roads, by the way. Once in a while, over the ice. This is actually spring. It's 20 degrees. It's June 2nd. There'll be the ice roads for the ice road truckers. The buyers would be Asia buyers because the ship time from down at the Nikiski export terminal, again, if it's reopened and built, it is right now shut down. It was just sold to Hillcorp, which is private. If it's reopened, it's about a 7 to 9 day ship from there to Japan versus a, say, 30-day ship from Louisiana or Houston through the Panama Canal to Japan. So the idea is that this natural gas, which would be about 3.5 billion cubic feet, what does that matter? That's about 1 LNG shipload per day. That would go to supply the Asian buyers. But again, $40+ billion, massive money, massive local passion, massive ocean. That right there is the Arctic Ocean. It is frozen.
Brian, we can't wait to see the rest of the coverage today. That is quite a journey, and thank you for bringing us this. We'll be watching throughout the day today. That's Brian Sullivan.
Thank you.
In case you missed it, President Trump, reacting to Friday's economic data, reacted by playing a clip from this show in the Oval Office.
Numbers have just come out which are rather extraordinary, and I thought I'd play a tape of one of the people who I've respected over the years, from Joe Kiernan and Rick Santelli. This just came out, and we'll just play that for a second.
Personal income is up 0.8%. That is almost triple the expectations. The income numbers, really, for the first 4 months of the year, they're stellar.
To cut it in half, that's crazy. So there wasn't a lot of front loading of things that they needed before the tariffs hit?
Yeah, I'll tell you what, it really does call into question some of the conventional wisdom.
Not bad. Not bad.
Come on, guys.
All right, Rick Santelli joins us now. At least you gotta hand it to him that he knew all the mainstream media cameras. He had them like all held hostage, and if they weren't going to talk about those numbers, it was surreal, was it not? That the cabinet was surrounding him, and for about 2 minutes, people were just listening, mostly to you, just talk about those numbers. It was a little bit weird. You heard? Did anyone see that? You heard from some people, I guess.
Yeah, I did. I heard from some people, but that's the first time I've seen at least that portion of the clip. I've only seen bits and pieces, but listen, the data is the data, Joe. And the one thing that I'm always very happy about when you and I and Becky and Andrew are together in the mornings is that when we do the data, we do it straight. The numbers are the numbers. I'm a quant guy, okay? I quote numbers, up 0.8%, triple expectations. These are hard to argue with. And when I go back in time, when was the last time we're at these levels? Or how did they stack up next to expectations? We try to bring the audience an unvarnished, unpoliticized view of what's going on. And there are some positive things going on within the economy. Many were calling for recession. And you know what, Joe? Jamie Dimon now has been talking about debt. That's a good thing. I mean, maybe his alarm clock was a little slow in going off. This has been developing for years, if not decades. And the current plan in place that you've been discussing, it adds, 2.7 to 3 trillion over 10 years. Not good, but it really isn't changing the trajectory that's taking us into the 50s and potentially $60 trillion deficit areas. Those are baseline numbers that changed in 2020. Okay, so everybody who's now talking about avoiding long bonds and, oh my God, look at what's going on with the debt. This has been developing for a long time, but I welcome, and I'm sure you do too, Joe, everybody jumping in here.
I think I think he ran it for a reason too. Maybe there's other networks that maybe don't have the same amount of, it is gonna be straight when we give it. Here's the thing though, the market didn't. You would have thought that, and I asked you about that trade deficit number, which was crazy to be cut in half. The markets did not go up on Friday. Now they've been going up a lot. Today, there's no really upward momentum. So as good as they were, it's not in the markets yet. And I'm still thinking that people think it's a stop along the way, and that maybe we'll get something on Friday that gives us an idea that maybe there is something. There are some headwinds from a lot of these policies. or maybe not. So that, and then I also wanted to ask you about Waller, because it seems like Waller might have been listening to some of us talk about inflation. You never want to cut rates. He said that there's cut rates. Why wouldn't you want to cut rates at this point for good reasons if inflation was low?
No, I find it very difficult to disagree with that. However, having said that, I don't have an issue with the Fed being stingy with the eases, but I do believe things are now in place that they are closer to doing it. I would offer a couple of issues that we need to take care of at some point. You know, some of these subsidies that are in these bills, or this bill, talking about, for example, you and I and the taxpayers subsidizing EVs to the tune of $7,500. There's a lot. There's SALT. You know, Joe, SALT really gets me, and I know that maybe you have different feelings than I do.
No,
I get ensnared by this.
I don't want to take it off completely. I don't want any
it.
cap. I don't even. You know, the 30. Right. Or leave it the way it is.
I don't mind paying my fair share, okay? I think some of these states, like Illinois, where I live, like New Jersey, like New York, if we allow this SALT issue to go from 10,000 to 40,000 or 50,000, even with the income caveats, that just keeps the cycle of high tax states continually doing that, and I'm not sure that's a good thing. But in the end, listen, I thought that clip was really fun. I enjoyed the attention, obviously, but the attention I enjoyed is that you want to know what's going on in the economy, tune in to CNBC.
Right. That's what I took from it too. And it's credible. I mean, you can run people that, you know, somewhere else, every single thing Trump has ever done is like the greatest thing in the world. We know who we're talking about, and that's not what you get. So when it really does come something like that, it's credible. Thanks, Rick. Appreciate it.
Coming up, Deputy Treasury Secretary Michael Faulkner is going to be joining us on the trade back and forth with China. The latest, China now hitting back at President Trump's claims that the country broke its deal with the U.S. Stay tuned. You're watching Squawk Box, and this is CNBC. China refuting Washington's claims that it violated a trade agreement negotiated last month in Geneva. Instead, is now accusing the U.S. of breaching terms of the deal itself. Joining us right now is Deputy Treasury Secretary Michael Faulkner. Good morning to you. Help us understand exactly the dynamic here. What did China breach so we understand it? And maybe you can also speak to what China is suggesting we did.
Sure. So great to be with you. As part of the negotiations that took place in Geneva last month, the Secretary and Ambassador Greer negotiated that, along with bringing down the tariff rates, that the Chinese would take steps in order to ensure that exports of critical minerals continued. And instead, what we are seeing is that they are slow walking the exporting of the critical minerals, of magnets in particular, that are supposed to be unlocked by that agreement. And so unfortunately, we are getting back to exactly the non-tariff barriers that we have been working with China on for years. If you go back to the beginning of the first Trump administration, we were negotiating with China primarily over the controls that they put on their economy, the non-tariff barriers where they monopolize a certain industry and then use that as leverage in their international engagements. And we are seeing that again with magnets. They said that they would unlock them. And if anything, they are slow walking the approval of these export controls that they have placed on them. Now, they are saying that we somehow violated the terms because of semiconductor exports, but we have long had issues with exporting semiconductors that would go into artificial intelligence. That has never been part of that was not part of the trade negotiations in Geneva. But what was part of it was an agreement on their part that they are slow walking to unlock the exports of critical minerals, magnets in particular.
Michael, let me ask you this just from a timing perspective. So Liberation Day, technically, I believe, was April 2nd. The pause was announced, if I have this right, on April 9th, with this idea that there'd be this 90-day period of time, and at the end of the 90 days, we would have deals with every country in the world over tariffs. By my math, we're getting close to the 90 days. We still got a little bit of time. What do you think the chances are that we're going to see meaningful progress between now and effectively, I don't know if we're looking at July 9th? Is that the final day?
Yeah, so we continue to make good progress. There are negotiations going on with the top 18 countries all the time. As you know, we already have a trade deal with the UK. We continue to make progress with a number of other countries. The president recently extended an extension for the EU because, as we discussed, I think when I was on last time, the EU is a little bit more complicated because while the tariffs are done at the EU level, the non-tariff trade barriers are largely done at the country level, so those are a little bit more complicated to negotiate. But as long as we continue to make progress, I think you're going to see a lot more deals that are announced prior to that July 9th timeframe.
If the deals are not announced, then could you imagine an extension, or is the point to put a hard deadline on it and force the issue?
What we're looking to do is to conclude as many of these discussions as we can. We want to see that we reach at least terms of an agreement prior to the expiration of that pause. As long as they make progress and demonstrate goodwill, we will continue to make progress towards announcing those deals. I don't want to get in front of the president. We would like to see those negotiations conclude within that 90-day horizon, but these are sometimes complicated, and we look to make announcements and bring some resolution both to the American people and to markets as quickly as we can.
Anything you got us coming for in the next week, you think?
We are at the finish line we are close to the finish line on a couple. Again, I'm always reticent to announce anything before it's final, but we continue to make very good progress in a couple of countries that should be imminent.
Okay, Michael, thank you. Appreciate it. Great to see you this morning.
Coming up, we're going to talk bonds, specifically short-term treasuries, after J.P. Morgan pointed out that one legendary investor has quietly bought up a sizable portion of the market. Stay tuned. Squawk Box will be right back.
All right, joining us right now to talk about what's happening in the markets is CNBC contributor Peter Bookvar. He's the Chief Investment Officer of the Bleakley Advisory Group. And Peter, you've got some interesting thoughts in your book notes today, your morning report. We've been looking at oil prices this morning, trying to figure out why they're higher, even with OPEC Plus agreeing to put more supply on the market. And you've got some very interesting points about what's been happening with the rig count. We always say that low prices are cured by low prices, meaning that producers don't produce if they're not going to get paid appropriately for it. What have you seen with the rig count lately?
Yeah, in the entire month of May, the rig count has fallen every week. And now for crude oil in particular, the rig count has fallen to the lowest level since 2021. To your point, we're in the process of seeing low prices cure low prices. And that the people have to understand that over the last 15 years, U.S. shale has accounted for more than 80% of all non-OPEC supply growth. So there are signs that geologically and also price-wise, the U.S. shale production is topping out here. And I think that that is the offset to OPEC, where while they're raising quotas, they're probably just raising them to what existing production already is.
What is key about this? Is this U.S. manufacturer saying, look, we're just not going to pump at these prices, or is there something else that's taking place here? They're not able to produce more.
Well, it's both. We heard it in just the earnings just reported over the past couple of weeks, particularly from Diamondback Energy, where on a price basis, yes, they're producing less, but on a geology basis, shale basins are topping out in terms of the production. Permian is really the only thing left in terms of adding growth, and there's some signs that that's topping out as well. To my point earlier, U.S. shale has been a major sort of swing factor outside of OPEC in driving energy prices. And I think oil prices here at $60 is dirt cheap, and we're about to see an inflection point here to the upside.
Peter, let's talk a little bit about the steel and aluminum tariffs that are set to go from 25% to 50% this week. What are the implications more broadly across the economy?
Well, obviously, certainly positive for steel. I'm not so sure on aluminum. I mean, Alcoa, themselves said they're not a big fan of aluminum tariffs. Steel stocks are obviously rallying, but there's a lot more users of steel than producers of steel. So if you're doing construction, or if you're a drilling rig company, well, you use steel to produce some of the product that goes into actually drilling. So it's going to be interesting to see how the manufacturing side is not going to be happy with another spike in steel prices. Take multifamily housing, for example, which flows into CPI. Well, this is not going to be a good cost input for the production of more multifamily housing. So while it's certainly going to help steel, there are a lot of other collateral damage on the users of steel.
Okay, Peter, I guess your point being that the jobs saved in steel maybe are lost in other industries too.
Probably more jobs lost in the users of steel that are sort of kept and hired within steel. And on a dollar basis, those steel jobs that are created end up costing a lot of money.
Peter Bookvar. Peter, thanks for joining us this morning.
Thanks, Becky.
A final check on the markets this morning. They've paired some of the early losses that we see. Still down more than 100 points, though. On the Dow, NASDAQ down nearly 100 points. Let's look at treasuries. And like I said, it's nice that they made it so easy for us to realize 30 years still below 5, 10 years still below 4.5, and the 2 years still below 4, but even a little further
than it was
below
on Friday.
so that's how we came.
Higher, but lower than we were at this point on Friday.
Yes. It's time for us to go. Make sure you join us tomorrow. Squawk on the Street coming up right now.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Kingston with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber has the morning off. We kick off the month of June. Futures lower. Some increasing tensions on trade, on geopolitics. Oil's up 4%. Congress returns. Got an important week of data coming at us. A jobs number on Friday. Our roadmap begins with new month. Same trade tensions as the S&P does notch its best May since 1990. China accusing the U.S. of violating that trade truce as Trump and Xi may be set to speak this week. And Tesla shares are pulling back. Another weak sales month in Europe. Let's begin with the markets as we do enter a new trading month. Jim, June is historically kind of rocky, starts out strong and then weakens in the back half.
Well, there's a lot of money comes in at the end of the teaching year. Look, I think that we were down 1.25% on Friday when the president made a very offhanded comment that he'll be talking to Xi. And then I think people felt, well, he might talk this weekend, so we better cover our shorts now. Come in Monday, he does not talk. So then you see just a recreation of where we were, but probably where we were at 115. Look, I think people are very beleaguered by the fact that there's the trade talk seems to have gotten worse, not better, with China. And I think that everyone's scrutinizing every single thing. Like, we're back, NVIDIA's down again. Now, why is NVIDIA down? Well, because NVIDIA, they absolutely think that there's going to be something that happened. You know, Jensen Huang came on my show and said, listen, he trusts the president. But how do you get a deal? Well, NVIDIA's up. Maybe someone even knows something. I don't know. I mean, you look at it every second, it's going to drive you crazy.
Yeah. There is a bit of a two-front war developing with these steel tariffs and the European pushback this morning that they strongly regret Trump's speech in Pennsylvania Friday.
Well, what's interesting is that I think if you bring in the Cleveland Cliffs CEO, because he's the one who's most affected, there's Trojan horse trucks and cars coming in. You build something in Mexico and you use foreign steel, it's a way to get around our rules. And I think what Gonzalez is looking for, CEO of Cliffs, is some statement which just says, you know what, you can't put that steel in our cars. You got to make them here. Remember, the whole theme of the president keeps coming back to, if you make it here, you're okay. Even if we have a trade deal with Mexico, Canada, make it here. And I think that that's the undercurrent that he's really kind of, as an afterthought, we thought a lot of it was, let's punish China. Let's make sure there's no transshipments of China. And no, now it's just, well, let's just make everything here. And look, we're not going to do that. So I don't know. I mean, it's kind of a so-called Mexican standoff.
That's exactly right. Morgan Stanley had some comments late last week about how it's smarter for Apple to go to India, pay the 25 or whatever it's going to be, and in 36 months or a little bit more, you'll have a new president-elect and you can recompute.
I don't think that that's wrong. I was thinking about doing a piece today about Corning, which makes our glass and our phones, and questioning whether you can do anything here. I know that Tim Cook has tried. I also think that he has responsibility. He has shareholders. The shareholders don't want him to do something that would be reckless. Maybe reckless is trying to build a supply chain when you know that 4 years from now, when it be finished, you have a new president who doesn't care about whether you make it here or not. It just happens. I mean, think about all the money infrastructure was spent doing windmills because they felt that the Democrats were going to win, and the Democrats like windmills. And now the president doesn't like the way windmills look.
Yeah, that's sort of the wild swings in policy that corporates are having to navigate. Meantime, the Treasury Secretary was on CBS over the weekend, talked about Jamie Dimon's comments about the bond market, but also expanding on his comments earlier last week about these talks with China stalling. Take a listen.
What China is doing is they are holding back products that are essential for the industrial supply chains of India, of Europe, and that is not what a reliable partner does. We will see what the consequences are. I'm confident that when President Trump and Party Chairman Xi have a call, that this will be ironed out. But the fact that they are withholding some of the products that they agreed to release during our agreement, maybe it's a glitch in the Chinese system, maybe it's intentional. We'll see after the president speaks with Party Chairman.
This morning, there's a big piece in the Times about magnets and what it means for the construction of your car brakes, your steering, the fuel injectors, the seats.
And we outsourced it. We outsourced it from Indiana. Now, one of the things that I think that the Secretary just said that has, again, been so difficult to calculate is that we had always felt that maybe we could do a pincer move against China. You get Europe to go against China, maybe Japan to go against China, and then we would have this coordinate. It didn't work.
You mean like a sort of a coalition of the willing?
Yes, and the fact that Treasury Besson saying that it is working, but we're not hearing from Europe, I'd like to hear from Europe, which is absolutely, he's right. We're fed up, but we're not hearing that, which means that we're out much more on our own. Look, I'd change my tune if I heard that Germany, that the new person in Poland, that France,
Naraki, yes. This is Karol Naraki won close ties to the president.
Right. I mean, it's time for Europe to speak up if that's the way they feel. Now, I know some people would say, look, Jim, they have so much more on the line, they send a lot more, export a lot to China, but I think that Secretary Besson is not idly speaking. He continues to impress me as someone who actually, likes facts. But facts are important to him, which is important. If David were here right now, I think he'd say he's fact-based. A fact-based secretary.
Yes, we like those kind. So is it then your directional view that April was weak, come back in May, and there's some payback in June?
Yes.
Stock-wise?
I like that. But one thing that can be, look, we do have Dollar Tree, we have Dollar General, we have CrowdStrike this week. We had some actual, some data points. Dollar Tree and Dollar General being incredibly important, five below too, because we want to see whether they can hold the line. They probably got enough stuff in to hold the line, but I just feel like that we got to get some data. Got to get some data, and the problem is, what do I want on Friday? I want weaker job growth, and I want weaker earnings. And I always hate to bet against the American people, but that's what we need, because maybe then Powell would be able to do something. And I don't see how he can do something when we see the price increases just start coming.
Right. B of A, Friday, 150 is their number. Of course, last month was 177. You did have Waller in South Korea over the weekend saying, I'm willing to look through any of these short-term inflation effects from tariffs.
Look, I hope that's the case. I keep coming back to that Costco conference call where they basically said, listen, we can control this. We're going to have certain shopkeeping units that are okay. And I think that that's the way of the world. I think that everyone's going to have to look at who's got a real tariff product, and maybe you don't offer that. Maybe you don't offer oranges from Peru. I mean, just saying something that where the big cost comes from. Maybe we stop, and there's a giant Costco tomato field next to me. It goes on for miles in Mexico, and no wonder they're able to do it. They own so much because not that they necessarily thought about the tariff, but because they know that they've got their ethos is to offer the cheapest. I mean, I don't know. Apparently, their Tito's vodka is not selling as well as their Kirkland vodka. They're using private label to crush it. They're the second largest seller of liquor in this country after Total Wine and More. They seem to be going and figuring out where they can keep the cost down. The president, who is probably not a Costco member, I could be wrong about that, but it would really help him to recognize that celebrate the people who are doing it. Because you sure as heck blast people who don't. Right. We've got to get into this guy's doing it right. Now, he did do that with Joe Kernan. And Rich
Santelli on Friday.
To say that certain people are doing it right, but he should actually extend that to the second largest retailer that we have, because they're doing everything they can, and all we know is that he cherry picks the bad. He ought to cherry pick the good.
Right. Well, in a centrally planned economy, you want to get noticed by the leader. Yeah.
Yes. I forgot that we're centrally planned. And the collective farmers better start cutting the prices.
Looking at sectors, Jim. It's clear that financials, tech, and consumer discretionary can offset the other sectors that are below their 50-day or whatever, as long as those carry the water here in the coming weeks.
We talk about Jamie Dimon all we want, but the fact is that stock gets pushed pretty much every day. Campbell's Soup. I thought that, I thought Campbell's Soup would miss badly because they missed badly, but Campbell's Soup actually did okay. Look, JP Morgan down $1. All right, if you're selling JP Morgan down $1.86, what do you really know? I'm like, I'll sell it down $1.86 because I'll do better than $1.97. I see a lot of this early morning trading, and I just think these guys really need to learn that the price that they're getting is not the price that they will get. I think that we have to get back into the notion of these prices just being irrelevant, because whoever's selling that down $1.57, that person should just wait, because there's two pushes for J.P. Morgan today, and it's probably going to be up.
Right. Diamond is on the tape again this morning. He talked to Fox.
In his lifetime,
said that the debt deficit is a big deal. The bond market spreads will gap out. The market feels complacent. And he did mention on Friday with Morgan that our own CDS spreads are now rivaling Italy's and rivaling Greece's.
I think Morgan did a fabulous job in that interview. I think that Jamie I understand his predilection for the negative. He too should spend some time about the dynamism of the U.S. economy, because shouldn't we be dramatically lower? I mean, with what everything's been thrown at this economy, when you're a CEO, you're Tim Cook, and you think, you know what, I'm going to move to India, that's what the president wants. And instead, you don't realize, this is my appointment in Samara theory, a great novel that's by John O'Hara, where wherever you go, death is there. I mean, it's like, I'm going to go to India. And it turns out, well, no, you see, that wasn't right. And, you know, the president wants these things, I don't know, maybe in Philadelphia? I mean, what center of what city has been decimated? Put it there. And that's the shareholders who own the company would say, how can you do that? Is this man president for life? I mean, the only CEO and president for life, I think, wasn't Jamie said today, I'm going to stay open a few more years. I love that. There is a board.
Yes.
It's great to be able to tell the board, hey, listen, chief.
But your point is that you think corporates are so dynamic that they can navigate this series of firebombs. In fact, they might even become more efficient as a result.
Oh my, they're so good. And remember, we were taught by COVID what to do. They know how to ship. They always seem to have a second source now that we didn't realize. Now, is the second source an auto company that uses steel that the president doesn't like? That's possible. It wasn't really. There was an articulation by the president in front of union workers saying this is what we're going to do, but he did not explain how that's going to happen. They need to get that price up, and the only way they can do that is to make sure that more autos are built here. And I don't know whether that puts forward. I mean, is he yelling at Jim Farley when he does that?
Yeah.
Is that Mary Barra? I mean, I'm waiting for that. I'm waiting for the targets put on their back.
Although, as we said, Jim, with every passing month to the next administration, that's one more reason the companies can wait it out.
Look, there's a sense that there was a business council last week. I'm used to the business council saying things. The business council met, and I guess they just played a lot of golf. I want to see who's the handicap out of that golf, because at least we'd have something out of it. Right. You know, who's the scratch golfers there? Now, David at this point would say, Jim, it isn't Ana Butina's scratch golfer. I said, no, you see, it's the American Business Council, not the Spain.
I did notice today, European banks, best start to a year through May ever. Ever.
Yeah, ever, because you know what? There's some of those bankers are fabulous. We just also forgot that nobody wants to buy our stocks right now.
Yes. Well, when we come back, some good news and bad news for Elon Musk. We'll talk about what the news Tesla's facing today. Also ahead, the pros and cons surrounding Alaska's $38 billion natural gas pipeline project. Nat gas today, by the way, futures up 6%. Brian Sullivan's going to join us live from the state known as the Last Frontier. Take a look at the pre-market. We'll kick off this busy week ahead when Squawk on the Street continues after this.
Pumpkin.care.
Tesla shares coming off a pretty strong month, up more than 20% in May, but the stock is pulling back pre-market. Got some more weak sales figures out of Europe this morning, tumbling 67% in France from a year ago. That's the lowest since 22. In Spain, down 29 year on year. Portugal down 68 for the same period, Jim. Numbers go on. Actually, Norway was the one outlier where sales doubled off a low base.
Yeah, I read these and I think that talk about putting something in the too far. I mean, who knows where Trump will be, what will happen in another term? I don't think so. Well, these are pre-Musk coming back, and you know the stories about Musk are legion, about what he can do when he actually puts his mind to it. Someone from CoreWeave, which stock is up again today, was telling me, look, you know, he comes in. If there's something that's delayed, he just fixes it himself. He builds things himself. I am in awe of him, and I think that he will have things that we talk about 1 month from now that will make it so we forget this. And 2 months from now, we may even forget, as impossible as it seems, his dalliance in Washington. For the people who are really the, and I know that people think, well, that's impossible, but if you take a look at the history of people buying Toyota and people buying Ford, because Ford's leanings were not necessarily, Ford was late to the World War II, okay? And Toyota came in and started selling not that long after the war. I think that people have a shorter memory than you think. Now, I know you can say, well, Jim, that's 15 years for Toyota. I'm just saying we are not going to be thinking, if you're a liberal, I think you're going to be overlooking Musk's leanings if he comes up with the kind of car I think he's going to.
That would be big.
Yes.
Certainly, this dalliance that you referenced was a period where he talked about sending federal agencies into the wood chipper, and he was asked about it on CBS on Sunday. Take a listen.
It's not like I agree with everything the administration does. So it's like I agree with much of what the administration does, but we have differences of opinion. There are things that I don't entirely agree with. But it's difficult for me to bring that up in an interview because then it creates a bone of contention. So then I'm a little stuck in a bind where I'm like, well, I don't want to, speak out against the administration, but I don't want to. I also don't want to take responsibility for everything the administration is doing.
People are trying to read whether or not pulling this NASA administration nominee who was close to Musk is a sign that there's increasing distance between the president and Musk. We don't know.
No, but I do think that we did see I think that was not just dog and pony on Friday. When in announcing the departure, I think that people get caught up and they say things that maybe they wish they hadn't. His ethos was very anti-departments. But then again, I think what I thought was most sad was that money I couldn't get at it because of Congress, and he got the small change and he didn't get the big, and I think that would enrage me if I was down there. I'd like to think that I have the temperament not to do what he did, but I do think that he will be excused because he is. Can I talk? I was going to talk about Somerset Maugham for a second, but I did John O'Hara. But he's like Charles Strickland. He's like the painter. He's like he gets away with it every.
Of course,
in the moon.
Robotaxi's going to be a big event for the stock.
I think it's so big.
Page one of the Chronicle in San Francisco this morning is about whether or not this well-known accident was a, quote, madman driver or unintended acceleration by the Tesla.
Well, we do know that can happen. We also know that that's the reason why periodically these things just get on the red hot griddle and they can't do it. Wait, versus the number of
I'm here.
accidents that are caused, as much we tell you, by human drivers.
Oh,
I think
yeah.
The big issue is the technology of Tesla versus the technology of Waymo. Do we want mapped technology by output test? By the way, now so many different iterations. Or are we going to take a look at the all-seeing, all-knowing Tesla and maybe say, you know what, I'd rather have it. I'd rather have the risk that we just described. I think it's going to be a superior vehicle because it's going to be much less expensive.
You are betting on Musk's LiDAR technology.
When his seeing his neural brain backed by NVIDIA chips, I think is so sophisticated. I think it's going to work. Look, I love driving Waymo. I thought it was terrific. Waymo is great. Maybe there's probably room for both. What the heck? I don't know why Alphabet's down. I just presume it's just another government.
There's some more. There's some DOJ heads. Yeah, that's true.
The DOJ. I mean, how about the fact that the only thing they could agree on was that they hate Google? That's a universal principle. Google's not. They're not mean.
Yes.
They are monopolists according to the judiciary.
Invoice
No, it is gonna be a
1632.
consequential month, June, for Tesla. When we come back, Kramer's Mad Dash. We'll count down to the opening bell. One more look here at the pre-market.
that ain't right.
Squawk on the Street continues on this Monday.
That's not right. Invoice 1630. For May. May, you idiot. Ah! Don't know if I want to send that. Okay, that's done. Oh, I'm here. I see we touched support level with a big old spinning top, almost like a doji. Good morning, retail traders. Good morning, options king number 7, Jesse, Sheba, Angel, Ricky, and RTP. Sue has Lily on watch today. More YouTubers, Meg S and Mannequin.
Take a look at some NASDAQ 100 laggards this morning. Jim mentioned Alphabet weakness today. Tesla's not far behind on that list. We'll get to AstraZeneca and the flurry of headlines we're getting out of ASCO today. A lot of news about potential cancer treatments. We'll get to BioNTech's as well. Opening bell in a few moments. And don't forget, you can catch us anywhere, anytime. Just listen to and follow the Squawk on the Street Opening Bell podcast.
You idiots on CNBC. We bad-mouthing Tesla today. Our GTI pulled back from last week. AMD broke out. Nvidia broke out. Meta at a double top. Triple top. Apple's still under, just right under $200. SMCI at 39.57. China. How many minutes do I got? I got 2 minutes. Jeez. Don't give me much time. I'm gonna move this out of the way just in case I knock this sucker down. I'm feeling I'm gonna get wild today. Take off my shoes. And women shed a lot more than men do. I bought a lint brush and I linted all the chairs at the IRS building. And the men are on one side and the women are on the other for some reason I don't know. And every chair on the women's side I had to change a piece of paper on the lint brush. The men, of course, are cleaner all the time. I mean, hair galore. Every woman's chair I had to change the brush. Nvidia just had a breakout. We got less than a minute. Let's go.
Let's get Matt Dash with Jim as we count down to the bell.
We're disappointing.
Count down to the bell. We're open, you idiots.
TJX had really one of the finest. The way you measure TJX is, do they have enough inventory? In other words, stores that can't sell their stuff. And
Enough of you. If you're behind time, that doesn't help me none. Get my charts all set up here. Okay, we pulled back and hit the 200 on the SPX on the 1 minute. Yesterday we had a big, Friday we had a big boom on it from the bottom, so we got a hammer. Today's the 2nd. Calls are a little expensive right now. The 59.20s are in range. $6.40 for the SPX. SPY's breaking out. There's 660, 750. $760. So we're right off the 200. This would be a good exit idea. We could run up and hit the 9 and hit this triple bottom, quad bottom. We're at 820. Go ahead and take profit. $890, out at $860. Okay, I'm off to the beach. That first trade of the day is one of my most successful trades. Right to the $9.10. So you got these wicks right here. Move this out of the way. So your first support will be on top of this here crack right here. Oh man, I missed it. I didn't set that alert. Dadgummit. I don't know if I would have got in it anyway, but it hit it. The 5925s are a little bit cheaper with more volume. And then you got the 5930s that are a lot cheaper with more volume. And we just triggered alert. Damn. There it goes, man. There's a good 140 bucks right there. Now we're at the other resistance, the triple bottom. So this here will tell us if we're going to be bullish or not, come up to a triple top or a two-headed snake. You see the two-headed snake? And we're at the 21 right now. If you take the body, run it with that body right there, and then you got a triple top. And they run right into each other. So that'll be a hard resistance to break. If we break this, we'll definitely go up there and hit that triple top, or the two-headed snake. That's the two-headed snake, means two head and shoulders. We'll hit the right shoulder. Do you understand? What's a two-headed snake? Ain't you ever seen a two-headed snake before? Well, not really. Anything's possible with a two-headed snake. Okay, get ready. We're back at support off the 200 EMA right here. Prepare ye in the name of the Lord. The 5930s or the 5925s. 5930s might work. PMI's coming out. Ooh. Shall we wait for the 200 or shall I take, I'll take it here. $59.30. $4.10. $5. We're at $4. Damn, 360. I knew it was coming down. $200 SMA. Get ready to add on. We had a nice breakout on the SPX, so that we might be overbought. Okay, I'm getting ready to add right here. If we don't hold, I'm in trouble. $3.10. There it is. $3. Okay. It's a bang. Breakout. Breakout. Where's my notepad? Gotta get my notepad out. I need to check my blood pressure too. What is today? June. June 2nd. Starting of a new month. Where's my flippers at? There they are. Keep my feet warm. Come on now. Well, the market's not doing too hot right here. Jeez. Yeah, I hate to add a double down. Might have to. Still got 10 minutes. Looks like the bears are in charge right now. Wall Street monitors global trade situation. U.S. equity futures move lower pre-bell. Exchange traded fund. Trump administration targets tech firms as it cuts more contracts. Global PMI 5.2 versus 5.23. Estimated was 5. Inflation gauge falls. Big knife on the spy. Well, they cut loose on me, so I think I'm going to end up adding a bunch here. Right now I'm down about 300 and something. It didn't hold. Right about now. I'm just under that threshold right now. I was trying to get some at 180. Four of them. That'd give me 6. If you give me an average. There we go. Yeah. $175. This is taking a huge risk now. Come on. PLTR 130. That's not my day. Nasty drop right there. Right, there's my support. Jesus. Construction spending for April, 4% versus 4%. 8 prior, revised 5. Ooh, that's not. ISM, PMI, 4.5. 4.8, 48.5 versus 49.3. I don't know to believe the numbers or not. Well, heck. There goes the shakeout. Almost too far out of the money. brighten this up so I can read it better. Looks like we could hit 58, 54, 11. $145. My WM had a nasty sell-off. Looks like they sold Tesla off too. Bad gum. Break it. We got to break 58.8409. AMD's strong. NVIDIA pulled back to the 63. I got 12 of these suckers. It's still a little bit too far out of the money. Come on, break it. Oh, God, come on. I'm begging you. There's 160. Dang it. That's at 160 there. Might have to sell these even or a little bit shy. Start fresh. It's that inverted hammer. I don't like that. Wall Street, monitor global's trade situation. That's old news. Come on, baby. There's 160. Even, we're even. Studio, where are you? Answer my messenger. I'm going to get out of some of these. Better get out with green while we can. Some people are red in this trade still. God. Are we going to break it? We're at 205. If we break the 200, we got the 200 EMA. $230. Good job. Can't you see I'm busy right now? Who in the hell are you? Well, that ain't a good way to start the day on that one, but I'm out. Okay, well, Richard, did you get out of it okay? Yeah, I think you did. See how close my SPY got to support. Might have to take Mike's stuff all out of the room because he's just not showed up. Unless he took it out on his own. No, he's a smart guy. I don't know what happened to him. $3. God damn, what did I miss? What the hell? What'd I ignore, man? Shit. Okay, if I just had the balls to hold them. Dadgum. You're Sue, you beat me again. Okay, well, I'm gonna go make lunch here soon. Grab another tea. That kind of sucks you get down like that, and then it bounces up.
Hilton, with his read on how travel demand is holding up amid all these global trade tensions.
I can't deal with you, Sarah.
Growth with about 30% specifically in that business in 2025 in the first quarter. However, margin pressure does remain still a concern. And as we know from looking at its peer, different companies, but HPQ got crushed last week on the back of earnings because right now, giving guidance that is lackluster or even slightly downbeat, if they're able to pick apart it in any way, like earnings are weak, or revenues weak in the slightest of ways, feels like you're getting crushed if you're in either hardware or software spaces. It hasn't been an environment where the street has been super friendly to tech. So will HPE follow suit with more of its hardware-linked peer? Will we see it start to build this momentum and hopefully continue to recover? There is still definitely conviction from the sell side. So the streets, well, more cautious, does still see upside for HPE.
Yeah, I mean, look, it's made a nice 1 month move of 5%, but still well off the highs of 24.66. Rick, your thoughts on the chart?
Yeah, and those highs, 24.66, came at a similar time to many other names in the tech sector. Very similar shape we've seen kind of across the board for these tech names. High point here, low point during our tariff news period there, and then a recovery. But for now, 18 to 17, this fairly narrow range between our red and green lines respectively. Backtrack and look at the 18 level here. It was a gap back there, low point, and then another low point, and high points interspersed there as well. Then it was the point where we had our most recent earnings gap to the downside. Now, we have struggled to retake it here. We have drifted beyond our upward sloping trend line. We now are holding the line at that 17 level, which happens to line up with our orange 63-day EMA and our yellow 21-day EMA. So a break below 17 could be a dicey situation for the bulls here. We can also see momentum slowing down on the verge of crossing back below the 50 midline that separates bullish and bearish momentum. If we were to look at our volume profile study, this general area where we are now is also a heavy volume area. So it'll be an important point to either break beyond here, that range between 17 to 18. Volume picks up again near 1640 to the downside. To the upside, we have 2060 volume profile point of control, and also another repeated stopping point for price here. That would be a notable resistance level to overcome to the upside.
Thank you for all of those. A good look at some names to watch for tomorrow. Key names, Rick Ducat and Jenny Horn. Thank you. Coming up, we'll discuss the day thus far. Of course, we saw some weakness in manufacturing. In fact, a contraction number rather than expansion. And markets are under some pressure after an incredible month of May. But we have a busy week ahead. Let's take a look with our panel next.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
In the biz. See something from Schwab? Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl?
Schwab, a modern approach to wealth management.
It's time for our market meetup panel. Joining me right now, Joe Mazzola, Director Trading Services at Charles Schwab, and Marley Caden, contributor here on the Schwab Network. Good to see you both this morning. Joe, this morning when we got in our ISM manufacturing, PMI manufacturing, we saw really some contraction. It was below 50. We saw a fall in imports. We saw exports at a 5-year low. It really made us feel like things were stalling and the market sold off, only to just recover and come up off the lows of the day. What do you make of that kind of knee-jerk reaction today?
I mean, I think the ISM headline number was a little disappointing. As you mentioned, it's still in contractionary territory, but I mean, everything else, prices paid, yeah, a little bit of a tick up there, 69.4 versus the 69.3 that was expected. That's not a an altering change by any means. Little movement in terms of employment on the ISM side, and then and new orders. So I mean, all in all, I think it was a pretty benign report. We did see a little bit of marginal improvement in the orders versus inventory spread. I think a lot of that has to do with the pull forward that we saw in inventories in April relative to May. So a lot of companies had already stocked up those inventories at that point, so that that spread came down a little bit. But overall, I think the market's reaction, kind of coming back to where we're at right now. I mean, basically where we were before the report came out, makes a lot of sense to me, just because nothing that we've seen in this report, or really, to be honest with you, Nicole, in the last couple of weeks, has really been volatile enough outside of a couple, tariff headlines, which basically the next day got at least changed one way or the other. Nothing from an economic standpoint has been market moving. Now, could that change at the end of the week with non-farm payrolls? Absolutely. And I do think that markets will be keying in on that for sure. I think expectations for about 125,000 jobs created around that level right now. But if that number comes in, as high as it did last month, I think markets would respond well to that. Now, what I do find interesting is, what happens if that number comes in higher, right? Or excuse me, lower, meaning more unemployment? Markets actually might look at that as a good thing. And here's why I say that, because that would give a little bit of an impetus for the Fed to make some type of move. So this might be one of those weeks where a poor non-farm payroll report might actually be a good thing for the market.
Yeah, that's right. Good news is bad news. Bad news is good news. We'll go to that, Joe.
What?
And it's true, because everybody's waiting for
Bad
the
news is
raise,
good news.
and they need something. Marley,
I need
you're
you.
watching some of the sectors in action.
Why didn't you
What's
show up
grabbing
this
your
weekend?
attention?
Steel
Nicole.
stocks, of course, grabbing our attention after the headline grabbers about doubling steel tariffs to 50%. We saw steel stocks fly through the roof.
Where in the heck were you?
They're up more than 25% right now. Steel Dynamics and Nucor both up about 11%. We're looking at the SLX, that's the VanEck Steel ETF. They're up more than 3%. Obviously getting a boost off of that news. Not getting a boost off of that news are our auto stocks. We saw Stellantis lose almost 3%. GM and Ford slipped about 1% each, having obviously some issues with the potential double on those. And following about 2 weeks ago, the news that GM is not going to export cars to China anymore. So sort of a double hit for them. But those are the ones I've been keeping my eyes on this morning, Nicole.
Yeah, understood. I mean, the steel story, an interesting one, with the tariffs in this wait-and-see mode until July 9th, just at the earliest for some of the country tariffs and the tensions between China. We know the reports say that maybe President Xi and President Trump will speak this week, Joe. But the market has been in somewhat of a wait-and-see because of the tariffs, right?
I mean, it's been wait and see for a couple of weeks, Nicole. I mean, think about it. It wasn't that long ago that we had a VIX above 50. Now, granted, yes, after the pullback in the market and the rally back, it does make sense to see a lot of that implied volatility come out. But if you're looking at kind of expectations for market moves right now, with the VIX trading around 18, 19, I mean that's less than 1% a day, and that makes sense, kind of given the fact that we're in a bit of a wait and see approach. Some of the technicals that I'm looking at right now, whether it's the RSI around 60 or the ADX, which is basically kind of a measurement of trend. That's around 17. That's just basically showing a market that's chopping a bit, and it is waiting for that next catalyst before it moves. Now, we have heard that, hey, we're not in a hurry to extend anything beyond that 90 days that we got already. But, we're also hearing that some of these deals are making their way forward. But keep an eye. We're only about a month away in terms of where that calendar strikes. And we'll see whether or not there is an extension or whether there are some deals done. Because right now the market's pricing in like, yes, deals are getting done. So it could be a disappointment.
SPX, I mean...
Yeah, and
Tesla,
by the way, energy and
I'm gonna look at
materials,
Mr.
You mentioned that, Marley, just with up 1.2% on oil, which is up over $2.
Mr. had a little
today.
triple
Just
top
a final quick thought here on the
to
big
the top
picture
of the
for us.
orb.
On the big picture, I think we're still just headline driven. We're looking at what's up today. I'm looking at Broadcom. We're looking for headlines coming out of their earnings. Everybody wants to see that. They're up more than 83% just this past year. So I think people waiting for that. We're obviously waiting for that jobs report number, giving us some indication of those non-farm payrolls and what the Fed might do to act. Also supposed to hear from Jerome Powell later today. So maybe a bit more insight there. But that's what I'm keeping an eye on today, Nicole.
Understood here. And what's interesting is bonds are really behaving, Joe. We're at 442 on the 10-year, the 30-year still below the 5%. And so we're hanging out around 4.97. People seem to be more comfortable with that now than when it first went up there. A final thought on that?
Yeah, I think as long as you have some stability in the fixed income market, that'll bleed over into the equity market. Once you start to see, rates move big ways one way or the other, that could cause a little bit of instability in the equities. But right now, equities are following what's happening in the bonds.
All right, folks. Well, thank you. And thank you, Marley Caden and Joe Mazzola, our market meetup panel. And thank you, friends, for being with me here on Morning Trade Live. I'm Nicole Pedalides, every single day here on Schwab Network, live at the New York
Don't
Stock
leave.
Exchange on the corner of Wall and Broad. So glad you're with me each day. Keep it right here, Trading 360 with Diane King Hall next.
No, don't leave. Mr. popped off the 200 EMA. She left.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fees.
Oh, hope everybody had a great weekend.
No overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is
Anybody stuck in a trade?
That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Hey, Dad. I have a question for you. Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college educations.
Dad,
Someday it'll be there.
how come Grandpa don't sleep with me anymore?
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
AVGO had a nice pop.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages,
And being in the now.
and much more. Best of all, you can ask.
Mute. Well, we did not have no rain this weekend. I think it's the first weekend this year that we have not had rain, snow, or sleet. We had 24 inches of rain last month and 14 the month before. Some say 20. I've never seen so much rain. There was one time where it rained 30 days, 30 nights. I think it's back in 1990. Somewhere around there. That or 2000. I know it was one of them numbers. We had huge floods. The Great Flood of 1993. It was 1993, around the year that I graduated. And I think, I don't know if that was the year that, I know it was bad. Always clean. And you better hang up. You not in the mood to, not in the mood. We had a lot of rain that time. And I'm surprised we didn't get it this time. I'm kind of up on a hill, my property is, so I think you only have to dig down 60 feet to get a well dug. Record-breaking floods. We had 30 days and 30 nights of rain. And water, water weighs what? 7 pounds a gallon?
For exporting of rare earth materials out of China. One positive update, though, we know this is something that Treasury Secretary Scott Bessent has really been pushing for and hoping for.
I thought I'd never get out of them calls.
Of the
I
nation,
was really worried.
On the phone at the very least, and try to hash out some of these deep.
But it bounced back, Amazingly, it bounced back. Almost back to the top of the orb. I got out way before I got out in here. I wasn't watching, I probably would have jumped in that trade there off the bottom of the orb, which was the day open down here. See, I used to call that out, but I didn't know it was an orb. Same way I used to call Darvis box out. I used to call Darvis box out all the time, and it took 17, 18 years to figure out what kind of pattern it was. Oh, that's a Darvis box. Hell, I've been playing them for 20 years, 17 years. Well. It's now past my lunchtime. Okay, we're back to 180. Shall I do it? The Christians asked, are we going to hold the 200 EMA? We're at the 63 on the 1 minute on the /ES, and the 9 on the 5, and the 21 on the 3, the 21 on the 2. $175 to 240. Well. I'm not sure what you can actually see here. ASCO annual meeting in Chicago. I wasn't invited, so probably nothing. IWM new high. Google's down $3. Tesla down 10. Well, I'll tell you what, that's a tough one. I'm still having flashbacks from that trade. I don't like getting caught in them things. Then they fall right on your support, close to it. Funky said he was just a few cents off of it. They're right, Funky. I think I'm going to go in there and make lunch. I had a banana, 2 eggs this morning. See what it looks like outside. Yeah. $2.30 right now, the 5930s. They got the calls. They got 27,000 on there. I missed it off the 50. We bounced off the 50 here and here. The 200 there. So we've got a flag. Get ready. Can we have a 1, 2, 3 off the 50 SMA and the flag? If you go in this trade, go in small. Well. Damn, you can sing. I told my mother about you, and she wants to listen to you live. It's that time of day, though, where I got to get a little bit leery, because I don't hang around with Timothy Leary. This is June the 2nd, strike, 5930s. And I'm preparing to take the trade. There it is right there. Get ready. On your mark. Get set. $2.15. Jimmy crack corn and I don't care. 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 I don't care. Jimmy's in and we're at 240. Jimmy's in, we're at 240. The crowd's going wild at the sports arena today. Yeah. Damn it. Shit, not again. God. I gotta stop doing this, man. I've been in a streak. Well, 3 black crows. Might have to go up and babysit my mom for a week. So this week I might be in here until around noon. Her care person's going to be out of town, going to Oregon. So I might have to go up there and be around her. Figure if I go up there, I'm going to buy a weed eater and weed eat my property. Get it ready put a little shed out there and lawnmower and garden stuff and a little cot. Or maybe a campsite. Go put gravel on the driveway and get it ready for my little cabin. Could we have a rebound, please? Break the 200 now. Now we got resistance at the 200 instead of support. Angel, I'm losing my touch. I am going to go in there and make me dinner here in a second. $150. Yeah, like I said, go in small, and I did. So now I'm going to go in big. If you can let me have it. Or I just won't go in at all. I'll just wait. I missed my opportunity there. 150. Snake breakout. $155. Here we go. Snake breakout pullback. Come on. Oh, God. No. Jesus. Okay. AVGO new high. I want it, and I want it now. $220, $225. Old MacDonald had a farm. Meow. $2.30. Thank you very much. Does anybody have anything to say? You was not prepared for the laugh. Neither was I. It just kind of happened. Good job, Kenny. That was $85 a contract. I went in small, went in big at 150, so I'm happy. You see the 1, 2, 3? You see why you want to get out there? And hit the bottom of the orb. Here, let me redo that. One, two, three, like clockwork. Exactly. If you can count to 3, you can trade with me. Damn, there she goes, buddy. It hit my resistance level. I'm the happiest man in the world. Oh man. Randy. Good morning. Randy's here, Jake Paul. What are you going to do about it? I'm scared, Randy. So now I can go and eat. I've tried to make a decision. Do I want to trade this or did I want to go eat? And I think I made the right decision. Now I can go eat. It's the most wonderful time of the year. It's the most wonderful time of the year. It's the most wonderful time of the year. Do, 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 do. I think it's time for lunch.
For Tom White as well as Kevin Hanks, they enjoy some time off. We got a fun show planned for you, looking at a couple heavy hitters that find themselves kind of in the middle of the geopolitical tensions, particularly between the U.S. and China. As
Who's that?
Important multinational global companies, that of course being NVIDIA, which we'll cover at the top of the show now post earnings. And we'll look at the technicals on Apple on the back end of this particular program. Also, along the way, we'll have our cash tag segment, which we're going to look at several of the discount retailers that are slated to report earnings throughout this week. Names like Dollar General and Five Below and Dollar Tree will be the subject of discussions. We're joined by the co-founder of Likefolio.com, Landon Swan, later on to go through their consumer sentiment and purchasing data surrounding those particular companies. Before we get into all of that, I want to look at where the market sits here. As Diane King Hall was just saying on Trading 360, a little bit of a fight back here in equity markets. Depending on what you're looking at, if you're looking at the cash, which we have on the screen, you see S&P is down 3, NASDAQ up around 50, the Russell basically unchanged, and the Dow weakest, down around 180. Futures markets actually show 3 of the 4 green on the session, as some of those discrepancies between the close on Friday and settlement prices of those futures show something different. Nonetheless, what we all agree on is we are way off the lows here intraday.
Yes,
so
we are.
What's driving today's market action and what we're watching this week? I want to welcome in the guest of the top half of the show. That's George Tillis, senior markets correspondent for the Schwab Network. And, you know, George, first off, I want to get into your general kind of thoughts on today's action here. As we
broke today high.
After was a really nice month in May. So we'll start there, and then I got some follow-ups.
Well, I mean, you know, we have to give some context to the markets. You know, we look at things on a daily basis. But if you just look at the charts going back to, you know, the first week of May, we've been in a central trading range. We haven't really moved in terms of much price action. You know, the stocks themselves, from a momentum standpoint, look relatively weak. And this is, again, short-term momentum. But we also have to consider the positive trend that we're seeing in the broader markets, particularly since our April lows. So I think the catalyst associated with some of the equity movements were certainly the aspects of the tariff relief with China, particularly for the Trump administration. There was a lot of headline risk. But then the other catalyst that I think is absent right now is the earnings catalyst, because NVIDIA reported last week that catalyst is gone. And for the most part, there isn't really an earnings catalyst. So, you know, that's to be expected considering right now where we're at seasonally. Plus, at the same time, you know, unless there's another positive or negative catalyst, and it could come from additional tariff relief, or another negative would come from a reheated element behind tariffs. There's still a lot going on back and forth headline-wise with Trump and Xi right now in China. And I think that's creating, again, some short-term momentum weakness in the markets. But irrespective of that, I mean, if you look at the last few weeks, like I said, we've been in the trading range, and we're not necessarily at the lower bound of that range, but essentially you look at, you know, moving average targets, potential levels around 57, 60 on the 200-day moving average is possible, and also, you know, considering the 50-day moving average below that around 56.25. So my point is that, you know, irrespective of, you know, market not moving up every single day now in the last few weeks, you know, this market could certainly demonstrate a healthy pullback where, again, the bulls may step in once again.
All right, George. So as you know, this show is called Fast Market. It's oftentimes, you know, going from headline to headline, from stock to stock. The two guys who host this program on a regular basis are former options market makers on the floor of the Board of Trade and the CBOE here in Chicago. And, you know, depending on, you know, kind of your life experience, your career, what you look at, time is relative. And so this is all going somewhere, George. It's going to make sense. But, you know, long-term to a former floor trader might mean next week. But long-term to, you know, a longer-term investor might mean decades. Could mean several years. And I know that you tend to, from our conversations, please correct me if I'm wrong, you tend to have a little bit longer term view maybe than you know, Tom or Kevin does when we're covering these things. When the markets are being bombarded by headlines and noise the way they are right now, how does someone in your mindset with maybe a little bit different time frame navigate these waters?
You look at the weekly chart.
Well, that's, you know, it's a good question. I mean, ideally speaking, obviously you have to
look at the weekly
first, and I think the trend is still positive, but I do, like I said, think that the market may face some
the biggest thing is you ignore the noise. And you look at the weekly, and you look at the daily, and you play it day by day. And you buy the dips and watch the rips. Now, I've been jumping in early, of course. But I know that, you know, like he said, overall the market's bullish. And a lot of fat cats have missed the boat. So they're trying to bring it down. And they'll keep doing it no matter inflation's down. You know, they keep saying inflation, tariffs, inflation, tariffs, inflation. I've never seen anything like it. It's Trump syndrome. Even Wall Street has it. And we got a business president. I heard today, and this really pisses me off, the Department of Energy under the Biden administration spent over $98 billion after Trump was elected last year. An ungodly amount of money. And they just gave it out. People that didn't even have a business plan said they would show one later. I heard 15 years we ain't spent that damn much money. You remember when I was complaining about that EV car company that got $7.8 billion 2 weeks before the end of the year? That was just a little portion of it. $98 billion in 76 days went out. And Trump and Biden and Trump was the one that was elected president. So think about it, and they're going to be investigated. They spent $14 trillion in 4 years out of pocket. I mean, out of over budget. There's an extremely amount of people got rich and crooked as could be. $98 billion. I ain't joking. I'm going to look it up because I heard that this morning.
There was a huge bottom in the markets going back to April. There was a lot of valuation, analysis that people were doing from the market standpoint. We did see a pretty significant compression in the S&P 500, for instance, because of the pullback. I just look at the aspects of interest rates.
Hi, good morning, Hannah here. Just wanted to give you a quick heads up. During this open enrollment period, having Medicare Parts A and B could make you eligible for extra benefits like grocery assistance and up to $250, 0 cents cash back. So I believe you have Medicare Parts A and B, correct?
Incorrect. Boy, bitch. You always keep hanging up on me. All I said was incorrect.
Going forward, irrespective of rate policy right now, which has been to maintain relatively high rates, that's not necessarily a panic or fear in my view, nor is the aspects of this debt bomb that the United States is facing. I think that's completely overfetched or overblown, for that matter, because of the fact that the United States is a currency issuing economy that can pay its foreign debts in its own currency. So I think there's a lot of headlines out there that are trying to scare people out of their money, but nonetheless, just look at rates, look at production, and look at the demand for investment, which is still robust. Even though consumption may be faltering going forward because of higher rates, you got to look at the investment side of the higher rate equation.
You said a lot of things there, and I got to follow up on the interest rates in a second, but I want to emphasize something you talked about, which is this debt concern. There's reason to be concerned about debt. I'm just not sure we're looking in the right place with sort of these mainstream commentating. The issue would be more if you're, foreign nation A and you borrowed or do business with foreign nation B and you're doing it in US dollars, both of which neither country can print. The US can print US dollars to satisfy the debt. Now, it might cause inflation if they had to do that in a huge way, but the likelihood of default in the US is quite low. And so when you look at it from that perspective, there is issues with the dollar, perhaps, but it's more the euro dollar issues and sovereign debt outside the US that's priced in dollars. That's always been, to me, the debt bomb that circles, but we haven't seen that happen yet. And it's certainly, in my mind, going to happen there before it would happen here first, and then we can see where it all shapes up.
Robo
But
killer?
you mentioned the levels of rates. To you, the higher rates being indicative of, like you said, higher growth expectations, perhaps even higher inflation, but that also highlighting the need for greater production and that demand is still there. What my question to you is it less the level of rates, but more the relationship of that curve as we go out over time, and perhaps the steepening of it, particularly steepening as rates move higher, that's indicative of better economic expectation?
It is. I think the steepness of the yield curve, as long as it's positive and expanding, that's a sign that there's economic growth going forward. I think the levels are really what people are focusing on because, they have short-term memories. And if you look at the last, 10 to 15 years with rates near zero, in the last 40 years, if you're long-term minded, rates have been falling since 1982. That 40-year, bond bull market and declining rates is over. And I think COVID shifted the paradigm. Rates from a level standpoint are going to remain elevated. So for those who are looking for rates, at least long-term rates, to save them from their, durable goods or home financing needs, are going to be waiting for a long time. Rates are going to remain high going forward, and I think inflation is going to remain high. And I do also think that the aspects behind, sovereign debt, especially countries that issue debt that are denominated in dollars, and this may be third world countries, the risk of them, defaulting right now is actually quite low considering the US dollar is falling. That's providing relief to the rest of the world, but it also might create some inflation in the United States. But at the same time, it is creating a situation where, more investment is going to be made in the United States versus the way it was before with a strong dollar and increasing total imports. So I think at the end of the day, looking at the markets, because that's what everyone's really focusing on, the markets are still relatively robust. And I'm not saying this is going to be the case going into the end of this year or maybe the beginning of next year because things can change really quickly. But I think the concern right now is watching the Fed, looking at potential rates declining because rates don't fall for good reasons. And that's something you have to be aware of. And
Okay, I'm going to go back in there and look at my lunch.
Credit issue, a foreign credit issue, but right now the banking system is sound, and I think that's a positive catalyst for the markets. But there can be big swings. You have to keep that in mind in inflation and volatility because of the headline risk, which is still front and center. It can happen at any moment, and it's happening on a minute-to-minute basis.
There's so many really, really important insights in that last, kind of few minutes of you talking there, George. But the one I want to highlight is something I don't think we talk about enough, which is we read all about, kind of the dollar's fall and it's going to be replaced. But the irony, the great irony of that is as the dollar goes down, it actually perpetuates its use because it makes it more available. It's more if you see the dollar rallying that we should be more concerned that some of these issues that we're talking about might see that stress. So really, really important takeaways and tons to explore throughout the day. But we're going to take a short break here. George, when we get back, we're talking NVIDIA. Stick around. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Market. Alex Coffey joined by George Tillis. And George, we're talking ISM briefly in the last segment, and one of the takeaways for me is that the headline figures are largely stable, but a lot of the internals, whether that's deficit-related things in particular or imports, as part of the deficit, are very, very noisy. And I think the same could be said about NVIDIA's most recent quarter, but I want to get your thoughts, which is, I basically look at this as a very noisy quarter, but through the noise, you still see a very, very consistent company that is executing at a super high level and is so far ahead of its competition. What are your NVIDIA thoughts, particularly now post the most recent quarterly earnings?
Yeah, so I think, just looking at NVIDIA's price action post-report, I think we had a constructive day. It didn't end up closing near the highs on NVIDIA. I think it's important because you'll look at the stock, it's actually just retracing slightly post-earnings around its 10-period moving average. So I think the trend is still intact for NVIDIA. I do think that, there's a pause in this stock, and I think this is, happening across the markets right now. Based on some slowdown in total momentum for the equity space. But what I think is important about NVIDIA is essentially what we're seeing from price action and earnings. Earnings estimates continue to rise for NVIDIA, and if you look at forward multiples for the name, it's trading around 31 times this year's earnings. Now, historically, it's around 60 times, so it's actually very cheap. It's also trading at around 60% EBITDA growth estimates for this year. So it's trading at basically less than one-half its forward earnings growth rate. And that's quite impressive considering that this company is still growing, like I said, top-line sales and earnings at the 60+% range. It's growth at a very reasonable price. But I do think that there are still some issues associated with, how much can they sell outside of the United States, particularly in China. Total market share in China is actually down. Jensen Wong actually alluded to this, where, you go back about 5 years, it was around 85%. Now it's around 50% in China, so they have lost market share to companies that are, inside China or domestic companies like Huawei. But that's okay as long as they're selling products in other nations. And I think the Gulf states' demand for artificial intelligence is a huge catalyst for NVIDIA going forward. So irrespective of what's happening in China, I think domestic competition in China is crowding out NVIDIA. So they're going to have other places to sell their product into. But I do think that prices, may be peaking for a lot of these chips, all else equal, assuming constant productivity rates and computing power. Again, that's just, looking at it from a general standpoint. But that may not necessarily be a bad thing as long as total volume continues to increase for NVIDIA. Mm-hmm. And that comes from, crowding out domestic competition like Intel and AMD, which they're well ahead of. But also, based upon foreign sales to friendly nations that are, again, partners with the United States, including many of the Gulf nations.
I think an argument can be made, on a short-term technical basis that things have certainly improved dramatically, but there is some overhead supply. You mentioned sort of it running into that roadblock post-earnings and being unable to close above it. But when you look at things going out in time, we talked the fundamental valuation, making this company appear very cheap perhaps relative to its growth rate. Do you think some of that is the market also kind of admitting, hey, we were caught off sides these last couple of years. That's why this stock had the tenfold plus increase in price in terms of being in the right place, right time, being going to meet this tremendous demand, but also the kind of understanding and perhaps realization that it's not going to be like this forever, in the sense that maybe they can consistently maintain these levels they've grown to, but they're not going to grow at 400% from here annually, like maybe they kind of peaked out at. Is there a little bit of that where it's like, hey, things are going to normalize to maybe low single or low double digits here in terms of a realistic runway for their growth?
Yeah, so that's a good point to bring up. That's what's happening with NVIDIA. The total rate of change in terms of sales growth and earnings growth is basically decelerating. Decelerating from triple-digit rates that we saw in the last couple of years down to double-digit, 50, 60%, let's just call it, ranges. And those ranges will probably continue to decline, but it doesn't mean that NVIDIA is not going to be good going forward. I'm not saying it is or it's not, but what I'm trying to say is, at the same time, you have to consider replacement rates for these chips. They're going to continue to increase, but prices paid for these chips. NVIDIA got caught with insufficient supply. Prices were extremely high. Elasticity of demand was also extremely high. Those are essentially, two variables that are extremely important to make profits. This is an extremely profitable company. Now, if you look at gross margins last quarter, they were actually down. That's normal because what's happening here is margin on product is going to start falling. Total sales of product will continue to increase. Elasticity of demand will decline, but that's fine. As long as elasticity of demand is declining and prices are falling and volume is increasing, that's a recipe for good top-line revenues and profits. The other thing is the ecosystem of software and services. I think that's another important component of NVIDIA that everyone has to consider going forward. They're going to increase their verticals in software services and also the horizontals, which include not just GPUs and 3D accelerator chips, but AI computing for robotics. I think that's a huge market for NVIDIA. I think it's also very hard, huge market for Tesla. But I think it's also very hard to move NVIDIA stock like we saw in the past. Market cap is over $3 trillion. The rate of growth is decelerating, but the profit margins in total may increase going forward. And think of Walmart. Walmart has extremely thin margins, but total profits are tremendous. And that's what you have to think about NVIDIA's growth going forward. It's the total volume or notional amount of profits, not necessarily the profit growth in percentages.
Yeah, I mean, it sort of had its iPhone moment, and it came to the market with this product that changed the entire face of this company. And that's not to say a company like Apple isn't still a compelling investment for many, but it's for a different reason. And maybe we're watching NVIDIA turn into more of a blue chip company in the next several years than this tremendous growth company that it just was. George, is there also a risk of sort of the commoditization of these products as technology catches up and, other companies maybe find a way to, do it for thinner margins or undercut them and more competition is able to catch up? That's been the big story, is NVIDIA's been the only one who can do it, really.
Yeah. Yeah, so I think it's another great point to bring up is the commoditization or the standardization of chips across multiple manufacturers. NVIDIA still has a lead in technological prowess. That's certainly something we have to consider. Now, if you compare it to companies like AMD, it certainly does. Even though AMD is increasing their market share in inference chips, they're still lagging in the GPU 3D accelerator component of artificial intelligence. From a parallel computing standpoint, I think that the risk of commoditization is China. China has moved up the value chain very quickly. They're producing high-end AI chips through Huawei and other platforms in that place. The number of developers in China is growing exponentially. So yes, the commoditization is a risk for NVIDIA in the future, but how do you offset the commoditization risk? You basically tie in customers to your ecosystem, and that's software and services. So as the chip space becomes more competitive, prices will fall. That's commoditization. But the whole premise behind NVIDIA's next phase is increasing the horizontals, increasing the application use across multiple spaces like industrial automation, robotics, factory automation, and so forth, while at the same time tie in your customers through the Omniverse ecosystem of services and software.
Really well said. And what do good companies do? They adapt, and they're always looking ahead. Look at what NVIDIA did. They saw opportunity, and they met that opportunity, and were able to have tremendous gain for shareholders and everybody who works there as well. So impressive stuff. George Tillis, appreciate you taking the time to join me for that last half hour here. I'm going to look at an example trade now for NVIDIA. With all that in mind, I think one could argue, hey, we made through a huge risk event when it came to earnings, and largely, despite a really noisy quarter, the stock performed quite nicely. It did have some tariff-related, trade tension-related volatility at the end of last week, but largely bouncing off of that weakness as well. And so what I looked at was a little bit longer term trade in terms of some of these option strategies that we talk about, but still risk defined and doing what George talked about at the top of the program, which is a risk defined short credit spread to sell a little bit of premium. This would fall into the neutral to bullish camp. So going with the trend, which recently has been higher for NVIDIA, but doing so in a risk-defined way, also acknowledging that the market is somewhat consolidating, and perhaps NVIDIA doing the same. Exact strikes I looked at, 130, 125. The reason being is if you look at an NVIDIA chart and you were to look at something like the 1 month EMA, it's around 129 at the moment, upward sloping. So using that as sort of a level to sell this, so the break even was near that level in case that could act as a level of support if there was a little bit of a downturn. Looking to collect $1.50 on this $5 wide spread. That means you risk $350 with a chance to make $150 going out to July 18th. So risk defined, break even of 128.50, max loss of 350 below 125, and a max profit of 150 if it stays above 130 over the next month and a half. All right, that's going to do it for our discussion and trade example for NVIDIA. Coming up next is our cash tag segment. We're going to really showcase some of these dollar and discount stores ahead of earnings throughout the week. Stick around. We'll be right back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools.
Okay, we're back down here, cheap again.
Tailor the platforms to your unique
5930s.
Endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
It's cash tags time. Welcome back to Fast Market here on the Schwab Network. I'm Alex Coffey, and it's now my distinct pleasure to welcome in the co-founder of Likeful.com, Landon Swan. And Landon, happy Monday. Thanks for taking the time and joining me here. Hope all is well. what I thought we'd do, I know you got quite a few charts here. There's 3 of these big discounter names. Let's go one by one, kind of in the order of which we're going to hear these results if they stick to the schedule. So let's kick it off with Dollar General and what you guys are tracking here with the kind of rural convenience store. I think I could best describe it.
Yeah, so I think just overall, there's a bit of a theme going on with all of these companies is that the consumers become fairly budget conscious, and there's more of a trade down mentality, and that mentality has stuck. People are, they're spending less. They're trying to fulfill the need for a lesser price by switching to cheaper.
I'm going to be spending more, you idiot.
Essentials over discretionary, and you can see. With Dollar General, their digital traffic and their social presence is actually up pretty well on a year-over-year basis, up plus 18 points. So fairly strong there. And if you look at their last quarter, they beat they beat their report. They had plus 2.4% comp sales. And what we're seeing is that
today's lunch.
They're focusing on the essential goods. And
salad
a lot of the stuff that Dollar
with black olives and cheese chip
is helping them. So they've got they've got the Dolly Parton homeware.
Excuse you, with a hamburger and an egg. Black olive salad with cheese chip, a hamburger and an egg. There it is, 1, 2, 3.
those. It was, Walmart had a stigma on it about consumer happiness. It always trailed the pack with consumer happiness, but that's not the case anymore. I think a lot of that has to do with the online presence, because all of the negativity that we saw on consumer happiness was store related, and they've cleaned up the stores. I think they've made it a better experience, but a lot of people aren't going to the stores. They're just ordering online. And so what we've seen with them, just like you talked about, I mean, the scale that they've got and the fearless innovation and investment into technology just tells me that they are really moving forward, and this is a behemoth that you don't want to be on the wrong side of. So Walmart, I think, is a fantastic own for a long time. I'd be willing to buy shares and throw it in the lockbox. But what we see is it's just really kind of separated itself from
in a lockbox.
Other, like the Targets out there that are trying to compete but have fallen behind for various reasons. Walmart got out of its own ways, creating a better experience for its consumers in store and, more importantly, online, and sort of reinventing itself. But not with too many changes. They're still using all of the huge advantages, economies of scale that they've got. So I'm pretty bullish on Walmart long term for sure.
Yeah, and the omni-channel of curbside pickup, I think, changed the experience. But you think about what Amazon's done to build this logistics network out and having to pop up warehouses and fulfillment centers. Walmart had that with all their stores already built. All that network was there. It was just leveraging it into e-commerce. So super impressive stuff. I love the breakdown. A ton of names that we looked at there. We got to leave it there. Landon Swan, co-founder of LikeFolio.com. Always great to get their data and their insights when it comes to these consumer-facing brands in particular. Now, we have a lot of earnings this week from these names, from Dollar General to Dollar Tree to Five Below. But I want to start with Dollar General, as they're slated to report tomorrow morning. So the most timely of the three. And what we looked at for an example of trade is not all that different than what we just looked at for NVIDIA. However, the big difference is that we've accelerated the time to expiration a lot. And so this one expires at the end of this week. It's a neutral to bullish short put vertical, looking at the strength in the data from LikeFolio in the recent kind of trend action of the price of the stock shares. But most importantly, it's risk defined. So what we're looking at here, June 6th, 94.91 put vertical, $3 wide spread, looking to collect $1. Now, this is exactly 1/3 the width of the strike, so it creates a 2-to-1 risk reward. If you're neutral to bullish in Dollar General and you think the data is going to be strong from their earnings and that's going to be enough to at least maintain the share price, you can risk 200 with a chance to make 100 by the end of the week, assuming Dollar General is able to stay above 94. Break even theoretically on Friday afternoon would be 93. That's going to do it for this segment. Coming up, it's our final trade, as we're going to look at the technicals in Apple, and we'll look at an example trade in Apple right after this.
All right, Apple. The Chartist artist going to be up. Are we going to fall back? Right to support. Are we going to drip down to 120, maybe 110? I'm watching the 5930s. Do you have your mouth full of food while singing, Jim? Yes, I do.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Okay, get ready.
Welcome back to Fast Market. I'm Alex Coffey in for Kevin Hanks and Tom White. Today, I want to take a look at where markets sit here a couple hours now into the trading days. We look at the stock market performance from a market standpoint. A mixed day that is relatively quiet. Volatility's really slowed down the last hour or so. Right now, the S&P 500 is down, let's call it 15 basis points, about the exact same amount the NASDAQ 100 is up. So a little bit of flip-flop. When you look at kind of performance, only about 25% of the S&P 500 components are higher on the day. That number is closer to 45% for the NASDAQ 100. So a day led by mega-cap tech and big mega-cap stocks broadly shows the NASDAQ out in front. Dow Jones, Russell, both red but small. So we'll see how that develops here as we round kind of the halfway point of trading action. I want to welcome in our next guest here, lead market technician for the Schwab Network, Rick Ducat's joining me here in studio for our final trade. We're going to look at the technicals on Apple. So let's talk Apple. Obviously, this is a stock that is very important to broad market performance. It's a big component of many portfolios across the planet, and it's been kind of front and center with all the trade and tariff stuff this year. What does the technical picture look like?
Yeah, definitely a big one. And when we look at Apple, we can see that relative to its own, tech sector, this is the symbol code for that particular sector, underperforming pretty notably both its own sector and the broader market here. Still up about 3.4% during the past year. And I think the other thing that caught my eye a bit is how the correlation between Apple and the broader S&P 500 has broken down quite a bit recently here, approaching that zero line that represents no correlation, and that they move independently of each other. One would be perfect correlation, and they move in tandem here. So you can see there's periods where it's very highly correlated. When that relationship starts to break down, it can be interesting. It can provide potential.
Powell going to resign so we can get someone there who knows what they're doing?
Into our chart more specifically, we look at our candle chart, our year-long Apple chart here. We can see that in the shorter term, the tariff-related lows came in at 169.21. From there, we rallied, and then we've kind of moved forward in more of a symmetrical triangular type pattern. Two trend lines, both converging toward each other, both kind of just shorter term in a very narrow range, kind of bouncing back and forth between these two boundaries here. A picture of shrinking volatility temporarily here. Oftentimes, though, low volatility can be a precursor to high volatility. If we do get a breakout beyond one of those trend lines, you can see they also match up kind of closely with these two horizontal areas that I highlighted here. Low point here, high point
Three
here.
black rows.
208.40.
140 to 175.
Red line there. And then 196, our green line, if we were to backtrack all the way back over here.
Tweezer bottom.
August 5th lows that seemed like a key low point at the time that have been widely eclipsed in terms of severity from the trade war news here, but 196. So those boundaries, that area near 196 or so and 208, that's roughly the site of our trend lines as well, Alex. So there could be a potential for a breakout beyond those areas.
What I find really fascinating about this particular chart is this isn't Palantir, this isn't even NVIDIA. We're talking about Apple, a name that's very established, sometimes even positioned as like a safety trade. I always talk about the pendulum of investor sentiment overswinging in both directions. And I think if you just look at this part of the chart and beyond, it goes up to 260, a huge uncharacteristic run-up. It's then met with almost unprecedented selling volatility as the stock loses almost 40% of its value in like a month. But it's since rallied 25%-ish off those lows, almost called 20%. And now it's finding its footing somewhere in between as we watch that normalization take place in real time. But it doesn't really, and maybe you can correct me, doesn't really clear it up though. It seems like it's relatively to be determined at this point. There's no clear bullish or bearish trend that's underway.
That's a pretty good way to put it. I think I might just call it retreating back to an old range of significance here. We had this spike downward on our unforeseen news catalysts there related to those trade wars. Now we're kind of just back where you might expect price to be if nothing had really happened. And you can see now that the volume nodes that would come into prominence here would be this one right here around that same green line that we mentioned, around 196. And then you can see once we start getting beyond our red line, the volume picks up once again into a spike there. This time it's more like 210. So perhaps 196 to 210 might be our maybe modified range, or those would be our boundaries to consider for assessing this one. You can see here that 210 also lines up quite closely with our orange 63-day exponential moving average. So you look for these confluences where things line up, multiple indicators lining up together, gives it more emphasis here. But all the way up here, you know, the volume profile point of control, this is the heavy trading area. 228, 229, around that point. Those days seem kind of far away at this point now, Alex. It seems like we've kind of made a significant downturn that we haven't really been able to recover up from.
Yeah, seeing this chart with a little bit different information may even give the tilt to bears in the sense of, hey, there's tons of overhead supply. The linear regression suggests a kind of modest downtrend for a stock that usually does okay, at least has in recent years. But it does show that you do at least got that pocket of volume just below where we currently sit that could act as a pretty major point of support. But you know, you got a longer term look as well you want to pull up and take a look at. This will put into perspective, I think, that sometimes, even though this was a little bit more of a dramatic sell-off, it's natural to see this kind of price action as you look at it over time.
Yeah, maybe it didn't feel great at the time, but if you really zoom out, if you really think about it, this area right here where we hit our lows matches up with the old lows from here and here, the old highs from here and here. Really not that crazy when you kind of look at the longer term. In fact, we kind of retreated to a fairly predictable point. Now it's very easy to say that in retrospect. I don't know if it would have felt the same way at the time, but when we look back, it kind of just gives even more importance to this general area, like 170 to 180 or so. That's a key region to watch going forward.
One real quick, if we could look at this too. I mean, if you were just looking at those type of price levels for entry points, you may have suggested this level.
Sure.
May have suggested this level first. So, of course, it's not as easy as it seems in hindsight, as you may have been long at multiple points. But that, I guess, puts in credence to the idea of slowly but surely building positions over time and allowing for things to move in the case that it is dramatic like this, or using some things like stop losses or risk-defined strategies to mitigate the losses when those trades don't go the way you expect. Rick Ducat, really appreciate it as always. Lead market technician for the Schwab Network. Technical look at Apple. Now we're through earnings in many of these names, from NVIDIA, Apple, Microsoft, big-time Magnificent Seven names. So we have a little bit different time frames that you could operate on. I looked at this strategy going out just till the June monthly, so a handful of weeks, but it's a very different strategy than the ones that we looked at in the first two segments. But if you really break it down by component parts, you'll see it's actually the same strategy, just adding on one more piece. And so what we're looking at here is selling of an iron condor, but because the strikes overlap, sometimes this is referred to as an iron butterfly spread. Essentially what I looked at was selling the 200 strike straddle and buying $12.50 wide wings. So that means that the width of the spread on either side is $12.50. We got a big chunky credit of $8 for this, which means if it were to perfectly pin at the 200 mark, theoretical max profit is 800. But most importantly, take that 8 away from 12.5, and what you're left at is 450. So with that 450, that's our max loss on either side. If it goes below 187.5 or above 212.5. Now Rick highlighted a couple levels on his chart that suggest support and resistance sort of around these different levels for our break even of 192 and 208. Now, best case scenario is this thing chops around and stays in this very tight range, and this decays over time, and the trader would be able to either offset it or make a decision about what they want to do closer to expiration, in which this would be trading for less than $8. So max profit is 800. Most traders would not try to make 800 on this, as it's very difficult to, but maybe something where you put it on for 8, take it off for a little bit less, offset that risk prior to expiration. But it's a neutral range-bound strategy in Apple, looking for more of this kind of back and forth choppy trading action. That's going to do it, though, for our discussion on Apple. Again, we'll take a look at where markets sit here to close out the show. Back near session
260.
Post a disappointing ISM that sent
There's $100 a contract.
S&P 500 is close to unchanged. The NASDAQ 100 trading above the unchanged line. Russell and the Dow trying to stage comebacks as well. That's going to do it for Fast Market. I'm Alex Coffey. Coming up next is Next Gen Investing.
Okay, now that was a good lunch.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
We're watching closely. Yeah. Yeah, we're watching closely. Yeah. Clear the drawing set. Yeah. Oh yeah. Yeah.
Welcome to Next Gen Investing. I'm Jenny Horn, and
Jenny Horny.
This is Alex Coffey to kick off this trading week.
Oh, my name's Jenny Horny. I'm looking for Washboardjim.
Day in the Nasdaq up 0.3%, far better than where we were poised to open at least this morning. So we're seeing a bit of a comeback, not really fully yet in the S&Ps, especially, which are unchanged on the day. But again, where we started the session, or where I was looking at things as this morning was set to open, Alex, to where we are now, does feel like a bit of an improvement.
Yeah, I mean, I totally agree with that. And I think it also highlights that, dip buyers are gaining confidence again. How many times in the last couple weeks has there been setbacks on trade, or a disappointing earnings, or a disappointing economic data point? Now, the economic data front, there's been less and less as the city economic surprise has improved recently. There's been actually more economic beats than misses. But we saw volatility around tariff headlines as recently as, in this overnight period or last week. And it's like those periods of volatility are becoming shorter and shorter lived, and they're lacking real depth to the selling. And so when you look at that, it's hard not to say, hey, objectively a positive for the market. But are we getting complacent? Is it one of those situations where
are we getting complacent?
We get too comfortable, and then you get kind of whacked back down? Maybe. But for now, it's
Alex,
hard to look at the price action and say there is
can I ask you a question?
Optimism in equity bulls.
Did you miss the run?
Was 2 months ago.
It's so true. And I think that's really, like, right now you see all the headlines, I think, trying to overcomplicate things. And there's always the, like...
Or were you talking to Jenny Horny?
That many were pricing in about 2 months ago. At least it feels like those headlines have died down. But I think the importance is these moves to the downside aren't holding to the same extent that they once were.
Come on, you idiot.
2 months ago, as we all can, I'm sure, very well recall. But as always on this show, we'll kick things off here with some movers you should keep on your radar today. We'll be charting and trading those movers as always, and we'll also be diving more into the steel stock rally, which say that many times.
Man, what's the deal with this frickin' mouse?
But still, we're seeing a decent day today in steel because Trump right now doubling steel tariffs to 50%, and the EU is promising now some retaliatory measures. What that looks like is unknown, but we know prices could
be need a new battery.
Really getting raised. Also, we'll be looking at Dollar General ahead of earnings due out tomorrow morning. And we'll close things out with Campbell's Soup, which reported a mixed third quarter, noting that consumers actually cooked more at home at the highest levels we've seen since really early 2020, which is a fascinating read to me because that was not the case in my household. But nonetheless, we'll dive more into that with George Tillis later on.
Yeah, there's constantly, seemingly new headlines to explore, and we're getting to that point on the calendar where earnings are largely in the rearview mirror, and analysts have had times to review those different quarters, or the entire sector is now reported. We're getting a lot of analyst updates and commentary when it comes to these different names. So a lot of our movers today, well, their price target movement, and their upgrades and their downgrades. So let's get to some of our movers, starting with Boeing. I know it's not quiet in terms of the movement. It's been so dramatic that it's been almost loud, but we're looking at Boeing. We're not looking at, Palantir. We're not looking at NVIDIA here in this chart. And it almost has those type of price performance, comparisons.
It does. And I mean, if you haven't been watching Boeing as of late, you'd be shocked to see that this was a Boeing chart because as anyone knows who's followed the name for the better part of the last half a decade, it has been a story where we'd see failed breakouts, we see failed rallies, and then really, really pitted by its own bad news. But today with some analyst optimism, and actually we're up about 1.3% on the session. Now just a percent off of 52-week highs. So again, yeah, you would never think that this would be a Boeing chart, but thankfully it is. Boeing, though, upgraded at B of A, as they did say Trump makes the aircraft manufacturer a favored trade tool. Upgraded to buy from neutral with a street high price target of $260, up from $185. So substantially, obviously higher than where they previously had targeted this stock. They noted this is due to Boeing aircraft having emerged again as this favored trade tool in terms of these recent trade deals, saying they view those recent deals as struck in the UK, Qatar, UAE, and China as setting now this precedent for future global trade negotiations, which is only to Boeing's benefit. Said that while Boeing's backlog has not been the linchpin to their valuation, the firm does see now the progress stabilizing as far as production, their carve-outs alleviating free cash flow burn, and this renewed now really focus across the portfolio, all performing together to hopefully create this favored trade mechanism, which has also created now, in their opinion, a buying opportunity. So there's 20 buys in this name, there's 8 holds, 1 underperform, and no sells. So the skew is definitely still optimistic. It's just nice to also see price that matches some of the optimism from the street.
There's so many things to be said about this company over the last decade. Basically, my entire career when it comes to the financial markets. I mean,
entire career.
I've said this a few times on this program and others on our network. I mean, this was the company that was must own, that could do no wrong. And then it was like how quickly that story can change. It had its own specific issues with the 737 MAX. It had COVID, which influenced
my entire career.
Travel dynamics and
Alex, did you miss a trade?
Inflation and everything. But when it comes down to it, missteps at all. The reason so many believe in Boeing is one, it's one of like 2 major aircraft producers and manufacturers worldwide, and 2, just the relationship and its kind of tied in nature to the defense industry is one of the key primary players in this space. It has geopolitical security and relevance that allows for almost like a price floor in this name. Now the problem is if you've been a bull in this name, you have essentially had the stock do nothing for like 8 years now, it feels like.
Yeah.
That said, maybe we're finally turning the corner and we're seeing this is a company that, when we're trying to make these trade deals, one of our primary
Alex,
perhaps a beneficiary is many.
Let me tell you, you forgot DIE. Or D, whatever, woke. Now that we have Trump, we're not woke no more, Mr. Alex. It has a little bit with what you said, but the major course here is that we don't have a bunch of clowns in there running a company anymore, hiring people that are unskilled laborers to fill a quota. We should have less plane crashes. People that can lift up a bolt and put it in a hole, at least.
12th generation automated fulfillment center also being launched in 2024, and these new 8 robotics that were just announced in May as a primary focus on these delivery efficiencies. They overall see this robotic cycle still being early, and they expect Amazon to leverage its robots to reduce its labor dependency and increase its order efficiency and improve its warehouse efficiencies, thus driving mass savings. So they also see now the spatial awareness that enables robots to sort, pick, and pack. That could be a significant breakthrough for
I actually like that lunch.
delivery industry, and they expect Amazon to adopt these technologies ahead of its competition, aided by its AWS's AI capabilities, which they believe creates this competitive moat. And I will say that I rarely have issues with my Amazon orders.
My name's Jenny Horny.
Far too often, but it is amazing.
I work for
the
Schwab.
efficiency of it, the fact that they're able to actually scale back their workforce. Not good for the labor force, but good for Amazon.
Yeah, this is a critical company to worldwide commerce, but then it's also a critical infrastructure when it comes to cloud for so many businesses. And when you look at its performance, yeah, it's way off its highs, but it's constructively bouncing back. So I think the points made by the
You two are having a very intellectual conversation today. I'm very impressed, Alex. but you left off wokeism. If I worked there for just 1 week, I'd have this place straightened up.
From companies like Walmart as well, what Amazon's been able to do from a different place than what Walmart's done. Walmart had the fulfillment and shipping logistical network already kind of built in with its giant scale and footprint from a store front basis. But Amazon able to do that and build it out over time with its different warehouse and fulfillment centers throughout the country to again push the space forward in terms of how quickly a wide variety of goods can be delivered to households across the country and worldwide. Really impressive what Amazon been able to do. And then of course, huge cloud player as well, which doesn't hurt when you're looking at upside for down the line. Let's talk Shaq here. Very, very different space, very, very different tone from the analysts here, but I will say, one of the best burgers you can get in terms of a quick turnaround.
And it's not cheap, though. Every time I get it delivered, I'm like, how did I spend $50 on like 2 burgers? But hey, I'm a repeat customer, so I guess it doesn't necessarily drive me away. But BTIG today, with some more pessimism, downgrading shares actually to neutral from buy, following a breach of their now removed $125 price target. As you can see, even with a 2% move to the downside today, it's still trading out of 127. So while the firm does continue to believe the company has plenty of margin expansion opportunities, they're less confident that guest frequency will accelerate in this current environment. Furthermore, they do believe that it'll be more challenging to isolate the factors that are accretive and those that are dilutive, given all of the changes management is or is planning to implement, which includes increased advertising, accelerated and limited time only frequency, menu innovation, and loyalty, as well as faster unit deployment and drive-through deployment. So they basically, to me, it's just a valuation call where they're saying, hey, this now breached where we have seen shares trading, and we're taking on just a more neutral, more reserved stance right now until we work out this difficult operating environment for a lot of these restaurants.
Yeah, completely. You can't argue with that, right? Like they lay it out, they make it pretty straightforward. One thing that stuck out to me, though, this sort of recent news headlines that we've gotten from Shake Shack now post earnings, this is sort of me reading the tea leaves. They made 2 announcements. One on the 13th that they're going to open 12 Shake Shacks in Panama. First one opening in 2026. And then last week, or a couple weeks ago on the 21st of May, they said that they're going to open 10 Shake Shack locations in Penn-branded casinos.
Penn-branded casinos.
For further expansion. But that also maybe the easier choices of like, oh, we're going to move to Chicago, we're going to move to New York, we're going to move to San Francisco, big markets. The easy growth is done. And so now they have to kind of think outside the box a little bit, partner with brands like Penn Casino, or look at new markets entirely like Panama to continue their growth.
Yeah, and I think that expansion overseas is huge. Now, a lot of these markets, it ends up not being as accretive as some of these companies think, but I do think that that expansion outside of here in the U.S. is huge and definitely something to keep on our radar here. Last name today, though, is CrowdStrike, and CrowdStrike does have earnings out tomorrow after the close. Currently, right now, we're expecting a modest deceleration in their growth for revenue at around $1.1 billion, which is still 20% growth, so it's just decelerating, yes. They've also recently announced plans to reduce about 5% of their workforce, which the timing of these cuts is seen as, I think, pretty favorable given the fact that they are utilizing AI to help reduce their headcount needs after unveiling these various customer commitment packages in March of 2025. However, stock is not cheap, and that's something that's actually the sell side over and over again. Trades at around 136 times its 1-year forward PE, which is 59% higher than the longer-term median of around 86 times. So it's expensive, yes, but it's gotten more expensive. And we're seeing the street actually gets more favorable. I mean, Wells Fargo today raising its price target to $550 from $430, highlighting that CrowdStrike they believe will deliver solid results that demonstrate a company that has a path to return to
very tasty mannequin.
New ARR by the third quarter.
Pow, and how many minutes?
Also raising its price target to $515 from $450.
Well, I've decided to retire.
Also highlighting this multiple expansion in the cybersecurity
Trump is forcing me to do something I don't want to do.
Continue to instill confidence in the company's strong execution. And I mean, this company had one of the most major blemishes on its brand in recent memory over the summer, of course, as we can all recall. And every time we discuss CrowdStrike, we talk about this, but it's amazing the comeback. Shares touched, new all-time highs today.
Yeah, you mentioned net RRR, new ARR watch report, remaining performance obligations or RPO. Also watch net retention rate. That to me is the number that would reflect our businesses truly going to pivot away from CrowdStrike over time, or did they just kind of say, hey, they made a mistake, but the cost and things associated with implementing new technology and moving away from CrowdStrike is just not worth the pain. And I think largely these numbers that are expected and what we've seen over the last 6 months, 9 months since that event suggest that many of the companies did say, hey, maybe that was upsetting, maybe that was really annoying, maybe that was unacceptable. But is the alternative of replacing them even more of a pain?
Perhaps. I mean, I do know that shows a stickiness, at least, that there's this like mass enterprise customer that's not willing to like quickly drop or change their cybersecurity offerings. I mean, a lot of these like massive contracts just don't necessarily get canceled just because of one day of a mishap. Although it was a pretty major mishap, as we can all recall, it was hours long. But we'll be looking more at that chart of CrowdStrike coming up next. We'll also be diving into the chart of Amazon for a compare and contrast, as well as some example trades in both of those names.
Uh-oh, we pulled back. Well, yeah. Give it some time. You see how I just kind of take a break after a good trade?
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market.
The only best way to trade is trade like Carl.
12 p.m. Eastern on the Schwab Network.
Carl's way is the best way. Carl's way is the best way.
Welcome back to Next Gen Investing. It's now time for the Chart Master segment. Today we are talking Amazon as well as CrowdStrike.
Jenny Horney is up.
So we'll start off with Amazon, as this is not the earnings mover of the two. So some movement today to the upside, modestly, a relatively quiet day, but firming up on the session here. What should we be keeping?
Girl, you gotta
on
eat,
Amazon
man.
shares?
Well, a chart
You don't
that's
have
pretty
no butt.
familiar to a lot of other big companies, especially a lot of tech companies. Amazon is part of consumer discretionary, but we can see here that what I mean is we had our high point 242.52 at near the early February time here, like late January, early February. Then a big drop off. The low point came in during the tariff news introduction cycle, and then we've rallied somewhat here. We've taken out our moving averages. Yellow 21 121-day, orange 63-day, purple 252-day, all fairly close to each other, between about 194 to 201 or so, all coming together within that range, not really exhibiting too strong of a directional bias, but we can see our short-term yellow 21-day has started to overtake its slower counterparts there, which suggests the trend is improving to the upside here. However, if we were to look at our old high area here, we can see we had a significant high near about 206. Price did manage to rally above it for a short time, but we only closed above it for those 3 days, and then we were quickly pushed back down below that level. We still have not really managed to retake it since then. So an important inflection point here, potentially, as we look at this name.
Rick?
Okay, so that is interesting as we do attempt to recover.
Pow Pow's getting ready to speak. Oh man, music stopped. Waiting for Pow Pow. Is he gonna resign today? Has he had enough of screwing up the market today? Say goodbye to Pow Pow. Say goodbye to Pow Pow. We're gonna miss him. We've had fun. Time to go. Don't forget to take what you banked and find a hole. It's time. Say goodbye. It's time to say goodbye. Pow Pow, we will miss you. You were never a good speaker. It's time for me to go. Thank you very much. He's already spoke? What the hell? They had a countdown here. Son of a bitch. Are you telling me he already spoke?
celebrate
Many current staff members are here to
the pivotal role of the U.S. economy, financial markets, and the U.S. Central Bank.
He's already spoke.
He's a remarkable and respected leader among his peers across the globe. Please join me in welcoming him to the podium to open what is sure to be a wonderful next 2 days.
Shit.
Thank you.
He's already spoke. Boo.
thank you and thank
Boo.
you, Van. I guess I'd like to start by offering my condolences to the family and friends of former Vice Chair Stanley Fisher. Stan was a colleague of ours here at the Fed and a giant in the field of international economics. In addition to reaching the highest levels of the field in his own right, he was also
God. He's already spoke?
38 memo proposing.
What the hell? I wasted that song. I don't know what to say. I said, see how the market reacts. I was waiting for him to speak. So that screwed my idea up. Thank God. Well, well. I think we're going to drop more, but I'm not sure. I'm all confused. I think I'm going to be a little bit more patient. How did Lily do today? Lily did have a bounce to a double top. And Mr. Whatever happened to Francesca? I spelt honey with H-O-N-E-Y. Meta is a beast. Fuck, I thought Pow. Boy, it is, ain't it? Well, we're at 150. Back to the top of orb. $145 to $180. Hi. $140. Okay, get ready. I'm preparing my order. We're at 130. We have a megaphone out of a snake. Get ready. Are you ready? Yeah, keep me young. I'm gonna go get some tea. I kind of should have took that trade right there. It's trying to make up its mind now between the 21 and the 9. So we're getting ready to squeeze. Still could probably get it for 115. Oak. It's in my puss. I'm not gonna trust him. It might be too late. Prepare ye in the name of the Lord. Where is my... Well, shoot, Pal's already spoke. That took all the air out of my tire. No follow-up questions? Hello, Skunk Ape. Robert. Right now we got us a little boring day going on. Here we go. We had 125 there for a second, but I didn't get it. At the 63. Oh, there we go. Now we're at the bottom of the box. Oh, damn, 130? Really? Huh. $125. I'm gonna go for it. 125. I don't know if I'm doing the right thing. We could come down and hit these moving averages. There's 125 right there. Go for it. I don't know if it's the right move or not. A little hesitant. Well, you did on past speech. Okay, we're at 125, and it's now 115. 110, this ain't good. Should have waited. I didn't feel it.
Walmart Plus, and it's discounted to lower income households, continues to make inroads. We believe Walmart is likely to use price more as you go through this year into next because of automation. The other thing to think about is Amazon. People like Amazon in rural Tennessee. Well, Amazon announced a $4 billion investment to put in 200 of their fast turn facilities to service this community. If you look at our proprietary pricing surveys, Amazon prices really sharp. They're going to price below Dollar General. So tariffs, less of an impact, but still some impact. And as we get out to
less of an impact
into 26, you really got to pay attention to the two largest competitors, Walmart and Amazon.
Okay, and I think such a good point, because for so long that these companies, I mean, like Dollar General, for example, has over 20,000 stores in the U.S., so serving some of these major rural markets that didn't have access to like major grocery stores. I mean, for a while, this was a store that serviced so many, like the mass American people, but now Amazon can do that and Walmart can do that because their distribution has just gotten out of control. So, I mean, is this going to be a story where we continue to see these names? Well, sure, Dollar General, we know that it's made actually a decent comeback from getting some of its enthusiasm back, but unfortunately, is Amazon just the overhang and Amazon type companies for both of these names for the, foreseeable future?
I mean, Amazon, Walmart, huge overhang as we go out. And you nailed it. The biggest competitive advantage they had, small stores, close in proximity, that advantage is going away. On top of it, they charge about a 5% premium for that. Amazon and Walmart price below Dollar General, big problem. If you're going to look at a discounter, and they're going to report this week, what intrigues us a lot is Dollar Tree. And it's not, they import a lot, so it's tariffs, maybe it's not
okay.
First investors' minds when you're thinking Dollar Tree, 50% is general merch. A lot of that comes right out of China. But we really believe the Dollar Tree story, they're going multi-price points. So it used to be everything was $1, then everything was $1.25. Now they're bringing in merchandise $3, $4, $5. But what Dollar Tree was always known, we covered the name for 2 decades. Great merchants, great merchandising, kind of extreme value at great prices.
What?
I think they're getting that mojo back.
No, they're not.
So it's risky, definitely risky with the tariff overhang. They also don't execute well, although I don't think consumers have.
They have dirty stores.
But we do like Dollar Tree if they can start hitting.
Oh, Dollar Tree.
There's a lot of
that's Dollar General.
Scott, is that building off some of the successes they're seeing a rival company like Five Below have, with a little bit more wiggle room, maybe a little bit higher quality items relatively when it comes to those discretionary merchandise purchases?
It's funny. We're a little bit more concerned on Five Below. So we're both a research and a consulting firm. We're doing some consulting work for a company up in Chicago. We got into a number of Five Belows. I mean, man, they're hitting $10, $12, $7, $6, and their core customer is kind of the tween or the teenage girl.
What?
Funny thing is that I was in line to buy something, and they asked me if I had if I was paying cash or a credit card. I said credit card. I don't know who pays cash. But everyone else actually in the line were young women paying with cash. They were paying with their allowances. It's 100% discretionary. Also, they sell a lot of junk food. They sell a lot of candy and soda and snacks. We don't really like how Five Below lines up in kind of the overall environment. And I'd also point out it's a shrinking demographic. I would much rather own Dollar Tree. Because even though they are multi-price points, their absolute price levels are below Five Below. Like I said, you start selling $10 things to a tween, I get a little nervous, especially in this economy. And they, like I said, they import a lot. We're really worried about the price points that Five Below is throwing out there to the consumer.
And there's definitely a psychological level, I think, associated with that. When you think dollar store, you think around $1. But if you're at $6, $7, this is no longer even in the same world as a dollar store. So yeah, there's definitely that psychological feeling. I think I've been to a Five Below, honestly, like once in my life, and I can attest to it does feel very much like, maybe I'm not the right demographic, but it's a lot of junk. But I think that Dollar Tree, Dollar General will be interesting reports this week. But we so appreciate it, and really wonderful insight ahead of those earnings that Scott Mushkin of R5 Capital. Now coming up next, and to close things out with a fun conversation for under 30 today, we're talking Campbell's Soup, which is really echoing some mixed trends as far as the consumer eating more at home since levels we've seen since 2020, but also seeing some weakness in its snack foods business. We'll discuss that more coming up next.
To buy a can of soup, You get to pay $3 or $4 anymore.
Investing, you'll love Carl's Way. Take a left here.
Carl's Way's the only way. Well, here we are at the 200 now. We have to hold here, or it's going to be bad. I'm going to turn on the air. I'm getting hot. $79 degrees in here, no wonder. Come on, paste. The fun might be over with.
The total top line sales were higher by 4%, but organic sales were higher by 1%. They did talk about some impacts to currency headwinds, which
volume dropped quite a bit.
To slightly compress margins going forward. But one of the things I did notice about Campbell's is if you look at a 3-year chart, going back to last year around September, October, stock was trading over $50. So this one's been down quite a bit, just trending lower since then. But one of the things about Campbell's you got to consider is the nature of its business. It's really not growing all that much from a company standpoint. It is growing compared to maybe some of the other packaged food companies out there. If you look at the revenue growth estimates for the next year, about 3%. Earnings growth estimates around 3.5%. But the other thing is, if you look at that earnings growth estimate, and I think this is kind of the reason why we're seeing some weakness in stock, is the earnings yield is actually lower than the dividend yield. If you look at the dividend yield, the company's paying around $1.56 in dividends, yielding around 4.5%. Close to 4.6%. And so essentially I think what's happening here is that the company is basically paying out more in dividends than its earnings, as well as some of the interest on the debt that's weighing on shares. Even though you're getting a 4.5 to 4.7% dividend yield, the stock is still down over the last year by 23%. Year to date, it's down about 19%.
So George, and I know that they mentioned a lot of the things that were working on their earnings call, where it's like people are choosing to stay at home more, which is then great for their like ready-made food type offerings. But I love, they did mention that Goldfish specifically in their snack business, we're seeing a massive trade down in snacking. Perhaps we're all trying to be mindful of our diets, and then Goldfish are taking a hit as a result. So that was a focus of mine. But are we just seeing, I mean, like the evolving food landscape, pricing pressures are not going away, it seems.
Well, yeah, they're not. I mean, I talk about this quite often. You see this sort of shrinkflation effect where packages offered are smaller in volume, prices are higher. Look at Campbell's, you would think that gross margins over the last year would be higher than their 5-year average. In fact, they're not. Their gross margins, at least in the last 4 quarters, excluding the one they reported we're down about 1% to 31% compared to 32%.
It's that time of day where it don't get
What this
fun.
suggests is that Campbell's, irrespective of the fact that the prices are rising, the cost of goods sold are rising, and they haven't been able to necessarily pass that on along as much so to their customers, and that could be based upon the competitive landscape in the snack food space, which is becoming very large. You know, you got companies out there and even grocery outlets that are moving into the private label space, competing with the likes of the branded snacks that Campbell's has, including brands like Goldfish, for instance. So my point is that this one's a company that one would own for its dividend, not necessarily its growth. And I think this
Well, we broke it. We held the 200 EMA.
Slice. $350 million in interest paid last year. I think that's also
Come on, baby.
The price action performance or the capital.
We're in Hopeville.
But you got to keep in mind you're still earning a dividend, but you've taken it on the chin when it comes to price, with the stock down about 19% year to date.
Yeah, and a good point there, and it goes to show that this is
damn,
still a
I'm
really
not
strong
on
swing.
either.
Although we've come back a bit from where we were looking at shares earlier today, so at least etching out a slight gain today. Appreciate it, George Tillis, as always, for the wonderful insight here on Campbell's Soup. Now, that'll do it for Next Gen Investing
Call me up, Jenny.
for this Monday. Thanks for tuning in, as always. Now, coming up next, we have the watch list.
Hello, my name is Jenny. You're welcome. Did you get my kiss? We're at 110.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is
120, I'm back to even.
you can manage your checking and investing in one convenient
And I've
location.
added on for,
Moving
let's see,
funds
for the
between
buck.
accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can
Blanket.
stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Oh, come on, baby.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm getting a little tired. Back my wife.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market.
Tip to get out of this trade and go out by the pool for a bit.
Futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every
Just
trading
relax.
day, 8 a.m. Eastern, only on Schwab Network. host. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the floor of the New York Stock Exchange, financial capital of the world, on the corner of Wall and Broad. And we're so glad that you're with us on this Monday. After an incredible month of May, we have a lot to discuss throughout this hour. I mean, May was so great. The S&P 500 was up 6.2%. The NASDAQ gained 9%. We've got a lot to go over. Dan Ives will join me and take a closer look at some of those tech stocks, Tesla in particular, ahead of the reported robo-taxi launch in Austin, and to break down what's next for NVIDIA. We'll discuss how to navigate the market volatility we've been seeing with trade tension, tariffs weighing on the market once again today. And we'll get a closer look at Dollar General ahead of tomorrow morning's earnings report. So looking forward to that. In the meantime, here's
about even.
At the market. So we sold off quickly.
This is a Head and Shoulders.
Number was weaker than expected. It really showed some.
So I don't know. I might just sell it and
We didn't see exports. It showed a lot of stalling.
think about this
I
again.
don't know. Markets came up off the lows. They digested that piece of information. It wasn't too different than what was expected, and with that, markets came up off the lows today. Right now, Dow down 172, and the S&P sitting at 59.10, down just 1 point. The NASDAQ, in fact, is up 0.25%. Small caps down 0.1%. Gold, $83 higher. Oh, everybody's running to the safe haven of gold today. And oil, well, that's
There's 130, yeah.
762.97 the barrel. 1891 on the VIX, so no fear right now at this moment. Interesting that that could have been a little higher today with the environment we're in.
145.
4,975, and the dollar ticked down in the 98 handle, and we haven't seen that in a while. 98.79, so that was down 0.5%. Joining me here on set to discuss all of this. We're glad he's here on this kind of day. He's someone who has decades of experience here on the floor of the New York Stock Exchange. Ted Weisberg, founder and president, Seaport Securities. Thank you for being here, Ted Weisberg. You know, you've been here forever and a day, but you're still very young. Tell me about this kind of action. You know, we got the ISM manufactured stock sold off. We saw the 30-year move to 5%. Everybody got nervous about bond yields. Where do we stand?
Yippee-yi-yi.
It seems
Yippee-yi-yi.
we stand in a pool of volatility.
Ghost riders in the sky.
But we see just as much positive volatility as we have negative volatility. So volatility cuts both ways.
There to tell you how happy I was.
That environment is going to continue. Now, May was a very good month, but you know, I'm just now looking at the statements from April, customer statements from April, and clearly April, as we know, was not a good month. It was a disaster.
Should have added 80 cents.
That's a great month. Matter of fact, the best month I think we've had in the last couple of years. If that's not a perfect example of volatility, I don't know what is. And so far, and the June is just a couple of days old, obviously, actually only 1 day old. And but the one common theme that I think is carried over from May is that
They carried over in May.
back in place. And overall, I think the market needs the tech trade, even though it is concentrated in a few very high-profile names. The fact is that enthusiasm tends to spill over into the rest of the market.
So at this point now, when markets sell off, do you find that there's opportunity to buy?
Randy's back.
To buy names on the day where we sell off a bit?
Well, yes. Listen, we always have a shopping list, and I think all investors, quite frankly, should have a shopping list. And
is this the old man?
Volatility tends to create some interesting opportunities.
That's what I
Let's not forget
was
that
thinking
a lot
of.
our daily trading is driven by quants, computers, that are basically, in the short term, market agnostic. In other words, they're not paying any attention to the fundamentals. And it's just not a few stocks. It can be all 500 of the S&P. So you tend to get, in a negative volatility, you tend to get these unusual downdrafts where there's no place to hide. Even the best stocks come under pressure, and therein lies the opportunity. So the answer to your question is yes. You have your shopping list, and when things appear to get mispriced, not because of fundamentals, but because of some quant or some computer driving the momentum on the negative side, therein lies a potential opportunity.
So the tech trade was back, or has been back. I mean, people were you're fighting on NVIDIA. You've loved Meta forever. I mean, it's IPO day. Do you still love Meta? And what about the other Mag 7 names? Do you like some of them?
Well, I think.
Okay.
I'm not an analyst, a tech analyst, but if I
You're not an analyst, and what the hell are you doing on this show?
Names, it would probably be Google. But I continue to like Meta, and we continue to own and like Oracle. I still think Meta kind of is my closet favorite for a lot of different reasons, and I certainly haven't given up on it. And in terms of market weakness,
Don't you think it's overbought, old man?
Meta's a stock that I probably would continue to buy.
What about Tesla and NVIDIA? Tesla actually has some news coming out. NVIDIA's been the clear leader in the group. Do you like Tesla or NVIDIA? You don't touch those so much.
I'm laughing because I thought Tesla was a short at $200 2 or 3 splits ago. I mean, they would have carried me out a long time ago
if I didn't jump on that.
Right.
All right.
But listen, obviously, it's a very interesting company with very innovative.
I don't get it.
Things. So I'd rather pay.
Why would you want to short Tesla at 200? Huh? You ever heard of Edison? You know the guy that did the light bulb? You want to go against the biggest genius in the world's history? Come on, old man. Thomas Edison was one of the...
You'll notice we've just read
That's who I compare him to.
Is now going to make a big push into these optical, devices. So I don't know if that's good or bad for Essilor.
Ray-Ban was using their technology too.
Well, Ray-Ban is owned by Essilor, and it's the Ray-Ban frames. Now, they have, I think, at least a 1 or 2 year head start over Apple, but we'll have to see how that plays out.
Okay.
But yes, we still like that. Yes.
Now, I want to ask you. I mean, people got so freaked out when Moody's downgraded U.S. credit rating. I mean, it followed Fitch, it followed the S&P over the last few years. So what didn't come as a surprise to folks, but we're back on this conversation about U.S. debt, and we've seen rates pop up, yields at times. What's the big picture? There are people who are very doom and gloom on the USA.
Well, I mean,
where do you stand?
I think it's a legitimate concern. I think we're all concerned. On the other hand, the market seems to continue to climb this wall of worry, even with all these issues out there. The trade for us continues to be the short-term treasuries. I mean, we own Meta, we own a bunch of these names.
4 or 5% there, right?
Well, we're getting today the auction 4.3 on the 3 month, 4.2 on the 6 month. For me, it's a great place to hide while we get through this period of uncertainty. Unfortunately, I don't know where the end is to the period of uncertainty because we seem to go from one debacle to another debacle. But the good news, at least as far as the market's concerned, the stock market, is that it continues sort of defy gravity in terms of all these unknowns and all this bad news. But if you're looking for a place to hide and you just want to take some risk off the table, the short-term treasuries is still a great place to be.
And then for jobs, I mean, we did see the latest jobs print click up a little higher. That was also the end of the school year, and so that may have correlated with that. We're getting our monthly jobs report this Friday. I think it's about 125,000 jobs is the estimate, roughly. How do you feel about the employment picture? Are you terribly worried?
No, I'm not worried, but the problem with the
I'm not worried.
And you and I have been doing this a long time. The government seems to have the ability to revise the numbers 2 or 3 months later.
Right.
So the numbers, yes, they're important, but the fact is you kind of have to wink at them every time they report them because they're subject to change all the time. But once again, to me, this is kind of nibbling around the edge.
See, old man, I can't listen to you. You wanted to short Elon at $200. If you know me, I would say that'd be a strong buy, old man. Do you not know who I am? I'm Washboardjim, the sneaky snake trader. Hey, Randy. Is Elon another Thomas Edison? I think so. Richard. Is Elon another Thomas Edison? Okay, folks, we're at now 120. There's a 100% gainer. Right back to the 200 EMA. How come nobody knocked on my door and said, Jim, we're back at the 200 EMA. You know what I'm saying? Oh my God, look at that. 240 bucks. This is looking way too good, folks. Oh my darling, oh my darling, oh my darling, I'm doing great. Oh my darling, oh my darling, oh my darling Clementine. Oh boy. $3.10? You gotta be freaking kidding me. Swing law. $3.90, baby. $4. $4.50. We're about to resistance. Damn. Richard, we're at resistance now. We hit that resistance line. Do you see where I got it from? I got it from my Head and Shoulders. Well, there was a good old trader. He sat around at the desk for about 20 years. People kind of gathered around him and had a few beers. Then he'd sit down and he'd call out a trade. He'd say it's a little risky, but you might have it made in the shade. And we got drunk and we kept drinking. And then we started thinking, well, Well, it's a head and shoulders, we're on our way. We broke past the orb today. We broke past the orb today. Well, I got a special message. It wasn't very long. He says, Jim, should I short this run? I said, no, just wait a bit. Well, we got a head and shoulders and we're going to new highs. Better say goodbye, goodbye. It's a head and shoulders. They call that Jim the singing day trader. He used to do videos and sing and call out trades. Well, he's back. The best way to trade is Jim's way. I met this guy named Carl. He sat around. He worked for Schwab. Carl's way is the best way till I met that Jim. Let's sit around and have another beer. What's that cheer I wanna hear, dear? Well, I got in at 70 cents, it hit 60. I blinked an eye and went and made me some green tea. Then I saw it at over $5. Let's sit around and have another beer. Jim's way is the only way I hear. Whoa! That hurt anybody's ears? Dang, May 5. Richard's headache suddenly gone. We bounced off the 200 EMA. Been like this all frickin' day, man. I'm not going to tell you how much I've made. Yeah, we bounced off the 200 EMA. Right out of a snake, break out, pull back and boom. We bounced off the 200 EMA. The time frame was the 1 minute. So we had a snake breakout, pull back, boom to a head and shoulders. I don't know how he does it, but he did it. Unbelievable. I mean, boom. So, let's understand something. I start in here and I do the fast, simple beach trades. A little risky because you never know. We got stuck in one of them and we had to add on and we got out and it ran up. I could have made $1,000 on that trade. And then later throughout the day, people were starting to say it's getting boring day. And then the setup came. About the time people want to go out and leave and clock out, and wait for that power hour trade. I think that's why I always stuck around here 8 hours a day, because you never know when it's going to go your way. So I'm sitting here, called out a Darvis box, jump in the trade, had to add on, and I got out at 140. Then it pulled back again. I jumped back in. I got back out. And then it pulled back again. Hit the top of that Darvis box. See, if you just draw a line straight across from that Darvis box. We hit that Darvis box 2 times. Then it pulls back and does a double bottom off the 200 again. I jump back in it with a big old hammer. Then we break Funky's orb. So by that time, you feel like it respected the orb right here on the body of that candle. That orb is the opening first 15 minutes. It's the opening. Let's see here. See where it's the resistance that we had. And there was the opening right there. So beyond that, you're bullish. Anything above that, you're bullish. And then we respected it with that body of that candle. Top of that orb, we came down 2 or 3 different times. Within about 3.5 minutes or so. Then we had the breakout. But in my opinion, when we had that candle right there and we stayed above that resistance level, that made it bullish to me. And then boom, and just kept going and going and going and going and going and going. And then this line here I drew up earlier today. From last night was a Head and Shoulders. So I took that as a resistance level. And then we run up to that Head and Shoulders for a double top. So if this thing pulls back and doesn't respect the 21, I could almost see it bouncing off this here previous resistance. Always clean. Is this Donald Trump?
Hello?
Yeah, is this Donald Trump?
Hi, good afternoon. This is Olivia Bennett. I'm calling to let you know that following the recent presidential change, your state has approved $0 premium Medicare benefits, including dental, vision, and hearing coverage to check your eligibility. Do you currently have Medicare Part A and B?
I'll tell you if you tell me if you voted for Donald Trump.
I'm sorry, I did not get that. Can you please confirm, do you have Part A and B of Medicare?
Can you confirm that you voted for Donald Trump? You can't confirm it? Then I don't want it. How dare you? So did you hear what she said? The benefits coming in because of Donald Trump's big fat bill. Someone tell me I'm funny. Okay. Boy, oh boy, oh boy, oh boy. Let's say we're starting to squeeze out here. If we don't hold the 21, Richard, short it. Short it to 59.18. Dreamer's looking at puts. $59.15s. Ladies and gentlemen, prepare ye in the name of the Lord. We have 13 more minutes before power hour. With the 59.15 hit $1.90. You can grab these right now at $1.95. This could be a risky trade. I feel like Yeah. What the hell is he doing over there? That James Howard's so interesting. I can't believe he's single. If you can count to 3, you can trade with me. I was just trying to clear out my throat, Francisca. So we have the 59, we have the puts, the 59.15s here at $1.95, and they are now at $2.35. You could make a business decision and sell them right now and be satisfied, or you can wait and see if we can test a quad bottom. Because if you can count to 4, you just might make a little bit more. My soul, my soul. Should have sold a mirror at $235, $230. Yeah. Now we're at $180. Okay. No. Don't. Seems like we're very bullish. Had a bunch of volume spikes up in here. Oh yeah. No, 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 no. We're now at 165. Dadgummit. Make sure you're hydrated. I'm tempted to go out there by the pool. We're at 175, down 20 cents a contract. Shoot. It ain't working out too hot. Give it just a little bit more time. We got 5 more minutes of power hour. No. God darn it. Well, we're at 125, so if I got, what, 9, let me see how much this is. They'd give me 12, and I'd be at 142.50. So I'm gonna get 9. If I can get them at 125. I got an order in for 9 at 125. That'll give me $1.43 average. And still be a very risky trade. There they are. Boom. Come on. Very risky, Michelle. I don't know if I'd want you taking it. Come on. There we go. Almost. Thought I had him. On 25. Okay. $125. No, this ain't working at all. Jeez. Down $288. Jeez. They're buying it. I'm almost too far out of the money now. Well, you got a gravestone. Got a gravestone candle. Post 4 minutes power hour. Come on, baby. Big fat knife. I'm not going to add on to this. I already have. Well, I should. It'd be 9 contracts. I'm not going to do it. I'm not going to get suckered again. My timing was not the best. We have a tweezer top now with a gravestone. That's 2 bearish ideas. Now, if we don't break above that gravestone body, we might have a chance. Right there. Above the 9. I'm at 110, so I'm down less. Down less. I was going to say only, but only sound like too much. Less sounds better. It's not only. $250. Get ready to put on my swimsuit and go out to the pool. Ah. Yeah, I definitely got in this too long. How long has it been now? 5, 10, 15, 20, 25, 30 minutes. Not 30, about 20, 28. Some people got out of it there. Today's the 2nd. They want to keep this bullish.
So I think that's reassuring in the sense that we're not going to throw everything out. We're not just giving up and walking away with our toys. We're going to stay and we're going to invest and continue building that core. But I think this pursuit of diversification, when you look at the performance of gold, look at Bitcoin, which now is really struggling today, but IBIT, the Bitcoin ETF, has taken in a ton of assets this year. So I think this is a moment for the diversifiers to shine, and I think we're seeing proof in the pudding, and we're seeing, I think that will stay in place until we get, I mean, the Fed itself is talking about wait and see. All we can do too is wait and see. So until we see what we've been waiting for, it's going to be really hard to make this.
What are we waiting to see?
Yes, we all live in this wait and see.
You're gonna miss the boat, baby.
You mentioned Bitcoin ETFs. I know in May they saw $5.6 billion in inflow in the month. People sort of looking at as a new alternative to gold, as a potential safe haven. They did see some stability. Do you think that's going to continue, or riding the wave as high as we can go on the Bitcoin ETF investment, Bitcoin as a whole?
Yeah, I think Bitcoin is a long-term story. I think it's a very exciting story, but I think like anything else, it's not a linear story. So, I mean, if you look at IBIT alone, which is now a $70 billion fund, on Friday, last day of May, had its worst day of outflows ever, more than $430 million. And, you know, why? Nobody really knows why. All we know is that institutions, the big institutional investors, are starting to buy Bitcoin.
We can't break out here. We're squeezing again.
But every time you hit another high price, you kind of trigger some correction, some slow it down. So I think it's just going to be a story. It's a long-term, really interesting story, but it's not going to be just linear up. It's going to be up and down.
It's our wait and see ride, right? Thank you so much, Cynthia, for joining us today. We truly
I think this would be the last squeeze.
And again, that's
Cynthia have a double top.
Investment strategist from TMX Verify. Now, coming up, we'll dive into the latest on the U.S. and China trade talks as negotiations continue to
Who's this girl?
kick off the month. Market on close. We'll be right back.
No.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Hey, Dad. I
Dad.
have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area.
Oh, God. Please don't talk about the dead. I thought I already picked this.
Whether you're an experienced
I
investor
might just have to take
or
a
just
loss
getting
on this
started,
one.
Charles Schwab offers a webcast that's right for you. Are you an active trader?
Yeah.
Our active trading
Full
webcasts
time.
are designed to help you develop a deeper understanding.
I'm looking for a put right now, please. Look at that big tease, man, for the last 5 minutes. Get down to the 21. 59, 25, 91. Let's get the selling in here. Okay. I got 614 to 1220.
Welcome back to Market on Close. I'm Marley Caden. Now let's dive right in talking
Marley.
about the U.S. and China
New
trade
chick.
talks. To help us with that today, let's welcome Ben Harburg. He's the portfolio manager at Core
Oh, this is
Values
a good one.
Alpha. So Ben, what's the latest going on with the trade negotiations?
Well, there's some really positive talks in Geneva between Secretary Bessent and his Chinese counterparts. I think that's given some stability to the market. There was obviously a volley of volatility originating out of
So 873 to get me to Jamaica and back.
And shifting views on how draconian they could be. I think Secretary Bessent is a calming force to provide stability and maturity to the conversation, and so the result of that.
There it goes. It finally squeezed.
Market, and things seem to be trending positively on the Chinese side.
I think I'm going to get out of it
Things are getting
before I
better.
lose any more money.
So things are going to get better. What do you think is next for us in terms of the tariff negotiations? What's our next big headline?
Well, I think it has to be some form of a deal, and the president is obviously going to continue to use leverage, be it targeted tariffs against certain verticals, as you saw over the weekend on steel, or in other specific verticals, and of course the countries that were kind of facilitating Chinese transshipment into the United States, particularly Mexico and others, are also in the crosshairs. But I think that the next major headline, aside from that volatility, really has to be some form of an outline of an agreement that I think will be led by the U.S. Treasury Secretary's team.
And as we continue talking about the tariffs and the tariff negotiations, we continue constantly talking about
God.
treasuries. Why are they a focal point in these negotiations?
Well, the Chinese are still holding about $750, $800 billion of U.S. Treasuries. And with obviously the pressure building on long-term bonds, I think there's this concern that the U.S. will probably try to play it safe just in case China decides to dump treasuries further. And so that continues to be a ballast in the relationship, and one that I think from the U.S. side.
Jimmy said we go to the double top.
And I know consumption
There it
is
is.
a focus for you in the consumer.
We
and
break this,
with
it's going nasty.
With reduced spending on real estate purchases, lots more consumers redirecting their budgets towards experiences like travel. Did the Labor Day holiday and the holiday research that we have right now, the data, is it supporting that sentiment? Are we seeing that move is really driving both here and in China?
Yeah, I mean, obviously the negative narrative around the Chinese economy for the last couple of years has just been austerity across all avenues, and people really just kind of keeping their money locked up in their bank accounts. Over 20 trillion of household savings that wasn't hitting the market.
Okay.
Compared to only about 900 billion on the U.S. side. We're finally starting to see that unlock. So as you mentioned, during the Labor Day holiday, we saw 6% growth year on year in the number of trips. We're seeing, hotel spending, flights all going up kind of 8%.
We're about to my resistance. 59.45.59 on /ES.
Really excited. So kind of, for instance, spending in the sportswear space, a lot of the Chinese companies that are servicing consumers there are seeing 50-60% year-on-year growth. People like Amer Sports or
45 times 9.
and likewise, in the box office front, China's
$800
box office this year recording kind of 50-60% year-on-year growth. So the net result of all that has been really superb stock market performance of a lot of the consumer names that are contained within our ETF. People like Popmark, who's been leading our ETF, saw an increase this year alone of about 146%.
Shit, I can't bring it down enough.
In the share price growth. So it's showing up in the public markets as well as in people's willingness to spend.
I know you mentioned Popmark, but what other China stocks are we seeing the most growth in amid these ongoing negotiations?
So again, it's really, I think, a lot of those that are benefiting from that consumer growth story. So some of the milk tea makers like Mingshui that has grown 87% this year post-IPO. Laopu Gold up 266% this year. So I think those are doing well. And then again, we've always been heavy on Chinese consumer electronics as well as Xiaomi, dominating both domestically as well as global kind of next billion consumer markets. Chinese automotive companies, particularly electric vehicle businesses, are moving rapidly into kind of non-aligned markets, the Middle East, Africa, and even parts of Europe. And so it's, we've just seen tremendous growth across all those verticals, which is driving, again, strong stock market performance.
And obviously they're seeing some strong stock market performance, but everyone feeling the heat with these ongoing negotiations and the constant headlines and the constant True Social posts and the X posts and getting our information just when we think it's fine, we're back in this wait and see pattern. I know you don't have a crystal ball, but when do you think we might have some concrete deal in place that might give some stability to the market?
Well, I think it's going to be an evolving process, and this president is obviously a deal maker, and he's a pragmatic one. What I think defined the previous administration was just kind of unending, non-pragmatic talks that centered more around values and intractable issues. Trump's going to drive to the heart of it. The problem was the Chinese didn't hold up their side of the bargain last time around when it came to implementing a lot of the agreed measures and kind of the trade deal 1.0. So I think this time it's going to take a little bit longer because they're going to need to put in place enforcement mechanisms to ensure adherence to the plan. So I'm not expecting kind of short-term positive news, and I think we can continue to expect volatility, but we see those as buying opportunities to buy up these types of kind of consumer-facing stocks that actually don't have much exposure to the U.S. and they're therefore being kind of unfairly and non-fundamentally undervalued, and that provides really nice buying opportunities.
And when you look at these buying opportunities of these particular stocks, particularly because you say they're less sensitive to this news, what kind of technicals are you looking for?
We're looking at, again, their kind of year-on-year growth rates. We're looking at kind of where they're trading relative to their all-time highs. We're looking at where they're trading relative to kind of U.S. or Western comps, kind of on a PE multiple. And we've, again, historically just seen that they were trading at such a steep discount to Western equivalent businesses, particularly American equivalent businesses, that it was kind of a no-brainer to pick up those stocks because we felt like they kind of the market had bottomed. They were susceptible, obviously, to negative news around the whole dynamic, but certainly kind of on the pure fundamentals front weren't going to be impacted much further by kind of consumer behavior. So the net result of that is that we're seeing kind of a nice stability built off of lows that were reached a year or so ago. And our RTF, for instance, up this year kind of 35-40%. So it's been really solid, consistent performance.
And one last question for you, Ben. I know, obviously, keeping a close eye on these tariff negotiations, but what else are you watching as we come into this new month of June?
It's a good question.
Certainly, the United States is going through an overall overhaul of
we've got 32 minutes left.
How we source materials, of a realignment of alliances. And so it's certainly not just a matter of looking at trade tariffs, but also trade flows, supply chains, and where the U.S. is going to work to wean itself off dependence of Chinese inputs, where China is unlocking new markets. And so we're really trying to follow physical trade flows, where new consumer markets are being unlocked, where they're being restricted. And so it's much more of a nuanced geopolitical analysis than simply opening up the morning's paper and seeing, what number has been slapped on a specific country or product tariff-wise. And so I spent my life as a kind of more of a political scientist than an economist, and understanding how those geopolitical dynamics will affect markets. And that's why we, kind of rearranged our analysis to really to arbitrage and take advantage of these geopolitical evolutions, not be victims of them.
Being a political scientist has probably never been more useful than it is right now, right, Ben?
So.
Yeah, well, thank you so much for your time. Again, that's Ben Harburg, Portfolio Manager for Core Values Alpha. And coming up, we'll focus on U.S. steel stocks as they spiked following President Trump's decision to double tariffs on steel imports. We're back right after this.
Doo-doo. Okie dokie.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. I'm Marley Caden. Shares of U.S. steel were on the rise today after President Trump said that he would raise tariffs on imports up to 50%. So, of course, we are taking a look at all of those stocks, and joining us to help us with some assessment of those, Donald Marlowe, the Metals and Capital Goods Managing Director at S&P Global Ratings. Donald, thank you for joining us this afternoon.
Hi, Marley. How you doing?
I'm doing very well, thank you. Let's talk steel if you're ready. How big of a deal is this for U.S. steelmakers?
Well, for sure. We think that this reinforces some of the improving competitive position for steelmakers in the U.S. We've already seen since 2018 an improvement in the profitability of some of these companies, and a higher tariff certainly improves the competitive moat around these U.S. steel producers. One of the concerns, however, is as you get into higher costs for manufacturers, is what does that do for potential demand destruction?
Sure, and what does that do for potential demand destruction? That was one of my questions I was going to ask. How are companies going to make the adjustments, both short-term and potentially long-term, to deal with this increased tariff effect, the after effects?
We've seen already a hit to the steel producers' stock prices as well as their credit quality, where we're looking at their credit quality. So with the first round of tariffs, where we saw a spike in steel prices, and that is typically really good for the profitability of steelmakers, we've seen some hits to stock prices, which is a really good indicator that downstream that the volume impact may be more severe than folks are assuming right now. It's hard to see right away what kind of damage that does to manufacturing, but surely there will be some slowdown in manufacturing with higher costs for steel.
Absolutely, and you mentioned that this is downstream, but the volume of the
Don't tell me
impact
you're going to
may
go
be more severe than
59.18.
what people are anticipating. How big of an
We're at
impact do you
support
think
again.
this will actually make to the U.S. economy?
Well, that is a tough question. First of all, steel production in the U.S. is not a huge contributor to GDP. I mean, we've transitioned much more into the service economy and so on. But at the same time, if you're looking to reshore all these manufacturing jobs into the U.S., it does make manufacturing costs higher. So where we see things like metals in some form of shortage in North America, as well as labor fairly tight in the U.S., it does say that it makes it more difficult to onshore the manufacturing. And then anybody who's making investments in capital projects right now that include steel manufacturing or even equipment imports is looking at a bit of a different calculus when it comes to that capital budget.
And the Steel Manufacturers Association said today that this tariff was meant to protect the U.S. steel industry from surges
65,
of cheap steel
come
coming in
on.
from other countries. But Morgan Stanley says U.S. imports only about 17% of its steel needs. Do you think that this aggressive of a tariff is necessary?
Yes.
So far, we've seen that even at 25%,
It's very necessary.
that is something that should support a moat around the U.S. steel producers. Already, the U.S. is probably paying a 20-30% premium to steel produced outside of the U.S. Part of what's happened outside of the U.S. is that flows from China have flowed into emerging markets, so doing some real damage to prices there. But in the U.S., what we've seen is already higher prices that should translate into better profits for the U.S. steel producers, assuming that they get the volume passed through on that.
And steel has been our big story today. Of course, we saw Cleveland Cliffs, and looking right now, they're up about 23%. We saw Nucor up about 11%. Steel Dynamics popped 11%. But this isn't just on steel, it's also on aluminum. What's the outlook for aluminum and how is it different than steel?
Oh, that's a great question. The U.S. has iron ore, the U.S. has coal, the U.S. has scrap steel, and the U.S. has spare capacity in steel industry. So it speaks to tariffs supporting that sector. 30 to 40% of the production cost of aluminum is electricity, and the U.S. has been closing smelters for decades, so that the ability to replace that output really doesn't exist in an efficient manner, and it's partly why most of the aluminum in the U.S. is imported from Canada, and that aluminum itself is produced mostly through hydroelectric power in Quebec.
And you mentioned Canada. We get 2/3 of our aluminum from Canada that we import in. What have other countries' responses been so far? I mean, I know we're still in the nascent stages of this announcement, but how are other countries responding to this?
Sure, we've seen reciprocal tariffs, but for aluminum, it's a great example where if you don't have that domestic capacity, if you don't have a domestic offset, that metal will basically just flow to its most profitable market, and other metal will flow into the U.S. So to the extent you have a 50% premium on Canadian metal moving in, that could potentially displace that metal, where it'll go to Europe, and more expensive metal could come into the U.S. Already we've seen that the Midwest premium, which is the premium that U.S. manufacturers buy to bring metal from port into manufacturing facilities in the Midwest, we've already seen that hit an all-time high, and it appears it's gone even higher today.
And as I'm just taking a look at some sector performance today, as I take a look at the auto sector, of course, manufacturers potentially taking a hit on this one. What do you think we're going to see as far as after effects that go into construction and the auto industry? I mean, they're not down a great deal, just about 2% on the day for just the auto manufacturers, but these other sectors obviously highly affected by a tariff like this, even though they don't produce the material themselves, they use it heavily.
That's right. In an auto, they'll tell us that it's a huge share of the production costs.
Ford's still under $10.
Understandable, but it does hit the economy in many different ways. So what we've seen as this flows through to manufacturers, that
they're taking that.
Steel and aluminum tariffs, this could add 2% to the production costs for manufacturers. It doesn't sound like a lot, but when you put 2% on top of what's already existed, another 2% from steel and aluminum alone, that's excluding any other tariffs, which also contribute to higher production costs. We assume that manufacturers are seeing higher costs in the order of 5 to 10% already this year. They've already started raising prices in anticipation of this. So we see higher costs for manufacturers and likely higher pass-through to the end buyers.
So you do think that this will get transferred on to consumers, whatever they have to do for their 2% increase or however much it increases their output, whether it be auto or construction, you think that they'll pass that on to consumers?
Every manufacturer we talk to has told us absolutely they're going to pass it through, and they started doing so earlier in the year, even before tariffs were a factor. Now, demand is the big question. So
we're back at support on this thing.
Also hearing that, well, if you've got soft,
I don't think I'm going to get out green, that's for sure. Unless we get below the 63.
The sellers might eat some of the tariffs and not be able to pass it all on to the end buyer.
Thank you so much, Donald. We really appreciate you taking the time. Again, Donald Marlowe, the Metals and Chemical Goods Managing Director at S&P Global Ratings. Coming up on Market on Close, we'll take a look at the commodity market as gold continues to hover near all-time highs and with crude oil moving higher as geopolitical tension continues to escalate. We'll be right back.
It's escalating?
Believe me, when it comes to investing,
okay, we're at the 63. This is it. If it doesn't hold, if it does, bye-bye, Jimmy.
At Schwab, how I choose to invest is up to me.
Exactly.
Carl's way is the best way.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth
Carl.
management.
Can we have a couple big red candles?
Market with the Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
I have my dues. The 5940s are a buck. Carl's.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market on Close. I'm Marley Caden. Let's talk commodities now. Big day for gold, silver, crude oil. To help us do that, let's bring in Scott Bauer, the CEO of Prosper Trading Academy. Scott, thank you so much for joining us this afternoon.
Of course, glad to be here.
We're glad to have you. So let's kick it off with talking about gold. Everybody's favorite safe haven, having had a great month, came off a great month, and still doing just fine. As the dollar weakens amid additional tariff threats, we're seeing quite a lot of movement into gold. What are your thoughts?
Yeah, no doubt. And that has been really the story over the last several months.
It's a big mistake.
Gold on any dip. And we saw a big dip at the end of last week. News came out over the weekend, dollar softening, as you just said, amongst, some extra trade tensions going on here. And boy, buyers just are relentless coming back into the space here. I mean, we're up, what is it, up $85 or something right now. And it is, it's a risk off to the equity markets, but surprisingly, the markets overall have really come back from where we were pre-market and overnight. But gold continues to be a buy the dip trade, no question about it. And when we talk about oil, if we talk about oil here, I have a little different outlook on that. But everybody is piling into gold. And, if you look at silver's up percentage-wise twice as much as gold today. And I think there's a lot of catch-up there to do. If you look at the gold-silver ratio, boy, that has gotten so extended. So I can actually see that narrowing here, and silver's just playing a little catch-up.
Yeah, silver is playing catch-up now. I know you said you wanted to talk about crude, so let's talk about crude while we're at it. Crude, obviously, appreciates the day, despite news coming out of OPEC Plus. What are you observing specifically with WTI?
Sure. I mean, this was really surprising after, hearing about the increase, the output, 420,000 barrels, whatever it was. You may have just thought, wow, crude's going down. But no, we see this big spike.
Roblox had a nice run.
Reasons for that. Number one, the market may have been anticipating that was going to be the increase. So kind of already priced it in. If it was a larger increase, maybe there would have been, a different impact on the price here. We see, obviously tariff threats weighing on the dollar certainly helps crude there. But then also there's wildfires in Canada. And that has affected about 7% of Canada's overall output. So that's a pretty big number here. So we could be seeing, a little bit of a short squeeze to the upside because of that as well. But, if that hadn't happened, maybe again, this 415 or 417,000 barrels, maybe that was already priced in. But as I just previously said about gold, where gold has absolutely been a buy the dip, I believe the opposite in crude. It is a sell the rip.
So when you're looking at crude, at a crude chart, at the technicals on crude, what specifically are you looking for to enter? Because we saw a huge inflow to crude today. I mean, we're at 62.89 right now a barrel. We're up more than about 3.5% for West Texas. And what are you specifically looking for? You want to operate this the opposite of gold, but what technicals are you looking for?
Yeah, what are you looking for?
And I think 65 is a big round number.
I'm looking for a knife.
Round number 60, 65, 70. I actually think there's some pretty big resistance coming up right around 60, high 63s into 64 range. That would be my target for a short. I don't know that I would outright short it or buy some puts or some put spreads at that level right there, but that is where I am looking.
And we're getting close to that too. We're nearing it, Scott. We're getting right up there. So then I should move into Bitcoin. Obviously, I want to hear your thoughts on buying Bitcoin. Bitcoin been on a tear. We were up about 104,000 something last time I checked. They ended May about 10% higher. It was starting to look a little bit like people were treating it almost like a safe haven with all of the uncertainty in the equities market. But what are your thoughts on Bitcoin? Can it keep going? Is it time to exit? Should we look at shorting? Where are we?
Yes, it can keep going. I think as long as that there is this big degree of uncertainty in the marketplace, yes, it can keep going. People are still looking at this as something they want to own going forward. Now, what happened was we saw the massive run up, all-time highs last week. Over the weekend, we saw some pretty heavy losses, right? As risk appetite was kind of brought back to the marketplace on tensions between the U.S. and China. And over the weekend, since you can trade Bitcoin 24/7. People looking to take risk off somewhere, that is really the easy place to do it. So we are remaining at those levels that we saw over the weekend here. And I think that it can make another run right back up to those all-time highs right around 112 or so. To me, I believe that the 104, 103 half area is actually a pullback that probably should get bought, or at least play some to the upside here. That had been some really major resistance, and past resistance can become kind of current or future support. So I do think Bitcoin still can run back to those all-time highs. I'm not going to say that we're going to make new all-time highs or going to 120 or anything like that.
12 more minutes.
Bulls are still feeling pretty good.
And one last question for you, Scott. Institutional demand for Bitcoin actually weakened last week. They broke their long-standing weekly streak of inflows since, I think, mid-April. What do you think was driving that? And will it continue, or was that just a fluke?
I don't think it was a fluke, but I thought what really drove it was some of the institutional players looking at the overall general markets, the equity markets, and saying, you know what? Whatever we've missed out, we got to hop on it. We got to be in this by the end of the month. So I think you saw a lot of money just taking their profits out of Bitcoin and putting it into the marketplace. And I wouldn't be surprised if we see that continue a little bit more. But a lot of that institutional money was set up for the sell in May, go away, which anybody that actually adhered to that this year got burned pretty badly. So I wouldn't put a lot of stock into it yet. Yes, it was a pretty long time since we've seen institutional money selling, but I wouldn't put a lot of stock into it right now.
Thanks so much, Scott. Bitcoin, as you can see on your screen, just trading nearly flat today, about $104,740. Again, thank you, Scott Bauer, CEO of Prosper Trading Academy. Now, coming up, we'll close out our market session and we'll get the big picture from the team at Charles Schwab. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions. All
It's not
designed
good.
for investors like you, with unlimited ATM fee rebates
They're no
for
good.
cash withdrawals worldwide. no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning movers.
Well, that's about $400 or
traders,
$500
the biggest
gone.
headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning movers only on Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Carl's way is the best
At
way.
Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. Just a few minutes left in the trading day. That means it's time for the big picture. Let's welcome in our guests from Charles Schwab. Today joining us, we have Liz Ann Saunders, Chief Investment Strategist at Charles Schwab, and Mike Townsend, the Managing Director for Legislative and Regulatory Affairs.
Where's Caroline?
At Charles Schwab. Thank you both for joining us today.
Nice to see you.
Nice to see you as well. Now, it looks like investors are looking
You're no Caroline.
these global trade tensions that we're seeing for the day. We saw a dip in the morning. As I look at the board right now, lots of green. Liz, what's your take on this? Are we just getting used to the headlines, or positivity in our future?
I think we are getting used to the headlines. I think the risk, if the market were to continue to
Who's
rally
we?
here without commensurate true de-escalation in the tariff front, is that you might build a bit of complacency in terms of the impact. Admittedly, we have seen a lot of data not reflect this yet in terms of tariff impact. I think the inflation data, the reference period for it was only up to a point where we still had less than 5% as an average effective tariff rate. So I think the inflation hit is still to come. I think Friday's jobs report is incredibly important to see whether we continue to see some convergence with some soft data improvement, but hard data deceleration. So that's what's on my radar screen for this week.
And staying with that jobs data report, Liz, what are your expectations there? What do you think we're going to see in terms of non-farm payrolls?
Oh, I don't ever attempt to forecast what an economic data point is going to be. The consensus, I think, is somewhere around 130,000 on payrolls. What'll be interesting is what we've seen in the sort of wide variety of labor market data is a sign that there is still some labor hoarding, to use a phrase that became popular in the aftermath of the pandemic. Which means you're not seeing a lot of layoffs, but you have seen a pretty significant deterioration in the hiring front. So not a lot of hiring, but not a lot of firing. And that reflects why unemployment claims, initial unemployment claims, although have ticked up a bit, have not been in egregious territory, yet continuing claims are now at a cycle high, meaning it's more difficult for people who have been laid off to find a job. So that's another reason why I think Friday's labor market report is going to be really important. What it is, really difficult to say in this kind of backdrop.
Well, I'll certainly be waiting to hear, because, as you know, the Fed's wait-and-see policy, and that's a big part of it, so we'll all be listening. Now, Mike, I want to send it over to you. Obviously, legislative and regulatory affairs, I imagine the one big beautiful bill is something that is constantly on your radar. As it has made its way now into the Senate, what are you expecting to see in terms of changes there?
Yeah, Marley, I think that's a key question because the House passed that bill by a single vote, 215 to 214. So there's not a lot of wiggle room. And of course, now that it's going to the Senate, it's going to change. And to senators are concerned about, but they're sometimes concerned in opposing ways. So you have some who think there are too many spending cuts. There are some who think there are too few spending cuts. You've got a bunch of tax questions around the state and local tax deduction, around green energy tax credits that there are different opinions in the Senate on. So I think what you're going to see over the next 2 to 3 weeks is not a lot of visible action. You're going to see some sort of behind-the-scenes negotiation while the Senate tries to figure out what its package will look like. And you'll probably see that come onto the Senate floor in the second half of June and then try to move forward before that July 4th recess. At that point, then it has to go back to the House, and that's where I think things could get really tricky, because if the Senate changes it too much, you're going to upset that delicate balance that got it passed in the House. So lots more twists and turns to come, I think.
And as you mentioned, just that one singular vote allowing that pass, do you think once it goes back to the House, do you expect it to pass?
I think the president has incredible leverage here. He's shown time and time again that he can twist enough arms to get it across the finish line. So I certainly do think it'll pass at some point. It may not be until after July 4th, sometime in mid-July. The other thing that's a pressure point here, Molly, is the debt ceiling, because contained in this bill is an increase in the debt ceiling. That's really, really important to the markets. The markets don't want to see some last-minute, last-ditch effort to try to avoid default. So I think that's going to be a driving factor, and that'll push Congress to get this across the finish line sometime in July.
Yeah, everyone's shooting before the holiday, right? That's what we're hoping for. Now, staying with you, Mike, I want to talk about the other thing we're keeping an eye on in terms of with the government in the next couple weeks are the appeals of the tariffs and the back and forth rulings that we've seen over the past couple weeks, and then the appeals that we'll see in the coming weeks. How long do you think we'll see that uncertainty continue, or do you think that we'll have some more declarative answers in the coming weeks?
Well, like Liz Ann said about trying to make predictions, I have given up making predictions about what the courts are going to do on this. But you're right, we have sort of this back and forth. The U.S. Court on International Trade paused most of the tariffs, and then the appeals court put them back in place. So we've got a couple weeks here for them to gather information from both sides on the appeal, and they'll make their decision sometime probably later this month. I think it's inevitable that this all goes to the Supreme Court, and the Supreme Court will have the final decision, and who knows how long that will take.
Less than a minute.
I think this produces this atmosphere of uncertainty for companies going forward for quite a while.
I figure with that tariff news shit, the market would pull back, but it didn't.
Trying to make trade deals,
held strong.
Whether they should wait for these court decisions to happen, and of course for the economy. So I think uncertainty is going to continue to be the watchword with tariffs.
I don't see much uncertainty right now, buddy.
That uncertainty Mike is mentioning. How do you think the market will respond to this uncertainty that we've pretty much guaranteed for the coming weeks? Do you think that we'll see a month more like May, or are we going to return to things that looked more like April?
Well, it depends on what the actual announcements are in the back and forth. If you look at a metric like the U.S. Trade Policy Uncertainty Index, it can be tracked on various sites, including Bloomberg, and that has had a direct correlation to short-term market moves in the S&P 500. So I think as a
there we go. Last trade of the day was the bad one. So all in all, pretty good day. Real good day. Better than usual. If I didn't go against my grain, I would have had an excellent day. But so I'm going to get out of here and relax, go lay by the pool, get some sun.